Yeah, so let us resume our discussion with the further concepts and the customs. So in the previous session, we have completed a few basic things regarding the customs. So like we have understood when the customs will become applicable, what is the charging section, and also we have understood few definitions, what are some important definitions that also we have seen, and why customs has been imposed to make the Indian products competitive with the global products. That has been the main intention by the Customs Act is there. And we have seen in order for customs to be levied, what is the charges, what is a taxable event under customs. Like in the case of GST, the taxable event is supply, whereas in the case of customs, the taxable event is either import or export. And I have told that we are going to concentrate more on imports. Why? Because in majority of the cases, whenever you are doing the export, you are actually contributing to the growth of the country in balancing its foreign exchange reserves. So that's why in case of export, there will be so many relaxations. In many cases, you are not required to pay any duty and all. But in exceptional cases, even on exports also, you'll be able to find some duties. So we are going to concentrate very less on the exports part, but we are going to concentrate more on the imports. Our discussion is 90% of our discussion is going to revolve around imports only. Okay, right. So this is what all the basic discussion we had. Now we are going to start our next topic, which is regarding various types of duties. What are the different kinds of duties, or what are the various kinds of taxes which will be levied under customs? All that we are going to see. Okay. So here also we are going to concentrate more on import duties. As you could see, in case if you are importing, as we all know, the first schedule of the Customs Tariff Act will talk about import duties, whereas second schedule of the Customs Tariff Act will talk about export duties. We don't have many things to discuss under import exports, but we have a lot of duties. There are various kinds of duties which are imposed if you are importing the products into India. So all that duties, different kinds of duties, especially on imports, as you could see here, the list is never ending. We have something called basic customs duty, we have something called protective duty, we are going to have something called safeguard duty, countervailing duty, anti-dumping duty, IGST, GST compensations. It's like that we have multiple kinds of duties whenever you are importing the products into India. And I told you the logic also why on imports the duties are getting levied. Why? Because if you don't have any kind of duties on imports and all, what will happen is, for people who are residing in India, for the foreign products become more favorable. So what people in India will do is, if there is no customs, what people in India will do is, instead of giving the preference for the locally manufactured and produced products, they will start using the foreign products, which will be a threat for the entire domestic industry, which will be a lot of, there will be a lot of setbacks for the Indian manufacturers and all. And overall, on a very large scale, if you look at, it will lead to less employment opportunities, more poverty. This I have all told in the introduction itself. So all that problems will face. So that's why on imports there will always be various duties. The government always wants to discourage the imports and they want to encourage the exports. Okay, so in order to achieve that objective, there are so many kinds of duties which are getting levied. All that duties we are going to understand. And once again, we are going to concentrate only on import duties, not on the export duties. So as you could see here, multiple things we are going to see. We have various kinds of duties, like something called social welfare surcharge, basic customs duty, IGST, and not just that, we have something called compensation cess also will be levied. And in some cases, some extra duties in the form of safeguard duty. We also have something called countervailing duty on subsidized articles. We also have something called anti-dumping duty. So like that, multiple duties are there. All this we'll try to understand. So first, I would like to start my discussion with basic customs duty. First, we'll try to understand the first category of the duty, which is basic customs duty. We'll try to understand. BCD also we call it. So BCD, basic customs duty, is levied as per section number 12 of the Customs Tariff Act 1975, and it provides the rate. The goods can be subject to either a specific duty or it could be a ad valorem duty. So I have already told you this. So whenever you are going to import the goods, whenever you are going to import the goods into India, so you are a person in India, from outside of India, you are importing the goods. Okay. So whenever you have imported the goods, what will be happening is, after, if you want to clear that goods for home consumption, the first thing what you are supposed to do is you have to determine the value, a value under section 14(1) or 14 subsection 2 of the Customs Tariff Act. How to do that valuation and all, that we'll see it in the subsequent topic. How to determine the value, that we will see it later. But first, what will happen is, whenever you have imported the goods, the customs authorities will determine the value. Say for example, the value of the goods which you have imported is 1 CR, 1 CR worth of goods you have imported. Now on this value, which has been determined as per applicable provisions of the Customs Act, And how to do that valuation, we are going to see it later. I'm not going to focus on how to do that valuation. I'm only going to talk about how to calculate the duties. So somehow applying some rules and all, the value of that imported goods will be determined. On that value, first what we will be required to pay is basic customs duty. What will be required to be paid? Basic customs duty will be required to be paid. And this basic customs duty can be specified in two ways. Either it could be a specific duty, like as I have told you in the introduction, specific duty means they will say for every 1 kg, for example, if you are importing a motor vehicle, for every one motor vehicle you have to pay a fixed amount of 1 lakh rupees as duty. So, but this specific duty also will mean limited cases. In majority of the cases, basic customs duty will be levied on the basis of ad valorem basis. Sir, what do you mean by ad valorem basis? On the basis of value. So that means there will be certain percentage. There will be certain percentage which will be specified in the customs tariff act, and that percentage will be determined. That percentage will be multiplied on the value whatever you have determined under the customs act. Specific duty are not required to do any calculation. Specific duty, there will be a list for every item, this much amount of specific duty you have to pay. There will be no headache there. But when the calculation part will comes into picture is when the basic customs duty is charged on ad valorem basis. Say for example, I'm importing some electronic goods. Now, when I look at the customs tariff act on the electronic goods, the rate of customs duty, basic customs duty applicable is at 10%. What is the basic customs duty rate applicable? 10%. So now what I will do is on the value whatever I have determined, I will multiply that rate of duty as per the customs tariff act, which will come to 10% here. So if I multiply that 10% on the value, my customs duty, my basic customs duty will come to 10 lakh rupees. So this basic customs duty I have to pay to the customs authorities. Once I pay that customs duty, then only they will give me the permission for clearance for home consumption. Then only I'll get the permission for clearance for home consumption. So this is how you are supposed to calculate the basic customs duty. Even the same provisions you will be able to find it here. So the first and foremost duty which you are required to pay on imports is basic customs duty. So that's what section number 12 of the Customs Tariff Act says. So which says that it could be basic customs duty can be either a specific duty or it could be a ad valorem duty. And also there will be different kinds of basic customs duty. Either it could be a standard rate. Like for example, I have told here it is 10%. I'm importing electronic goods and the standard rate of customs duty on electronic goods is a 10%. Or in some cases, what could happen is even it could be a preferential rate. That means a concessional rate for goods imported from preferential areas from only if certain conditions are met. Say for example, India is having some good terms with Russia. So now government has given you some relaxation. If you are importing the goods, if you are importing electronic goods from Russia, and if you satisfy certain conditions, government also will give a list of conditions. If you fulfill that conditions, even though the import of electronic goods, we have a rate at 10%, but what government can do is government can offer you to pay the customs duty at discounted rate. That means, say for example, government has given one notification in which they have told that if you are importing electronic goods from Russia, and if you fulfill some 5 conditions, you are not required to pay 10% of the customs duty, basic customs duty, you will be required to pay only 5%. Concession they are giving. So like this, government can sometimes even give you an option to pay tax at concessional rate also, provided if you are importing the goods from preferential areas and also you are satisfying some conditions. Clear everyone? So this is what the first kind of duty. So what is the first kind of tax which you are required to pay? You are required to pay something called basic customs duty. Now, apart from that, not just basic customs duty, you are required to pay one more kind of taxation under customs on imports, which is something we call it as social welfare surcharge. Government will also collect from you one more kind of tax called social welfare surcharge. Sir, what is the social welfare surcharge? How to calculate that social welfare surcharge? Guys, in all this, what is most important is the calculation part. On which value we are multiplying percentage, that is very important. Once I explain all the kind of different duties, I will give you a table, a order in which you have to calculate the taxes and all. That is very important. That is where the questions will be tested. That I will explain it later. But let us first get familiar with different kind of taxes. So we have something called social welfare surcharge. In order to maintain the social welfare in the economy, in the country and all, the government will collect from you one more tax in the name of social welfare surcharge. Sir, how to calculate that? On what value it will be multiplied? Very interesting here. Listen carefully. Social welfare surcharge is levied at 10%. The rate is fixed here. See, basic customs duty, the rate will differ depending on the item which you are importing. But social welfare surcharge is fixed rate, which is how much? 10%. And this 10% is not on the value of the goods you have imported. This 10% is on customs duty. Whatever customs duties you are paying, on that total customs duties, you are required to pay something called what? 10%. Excluding certain duties, all this I will come back to that later. This part I will come back to that later. It is not applicable on export. Social welfare surcharge is once again applicable only on imports. It is not applicable on exports. So how, what they are trying to say here? Say for example, once again, I am importing goods. The value of the goods which I have imported is 1 CR. 1 CR is the value of the goods. Okay. Once again, take for example, electronic goods only I have imported. Just now I have told on electronic goods, the rate of basic customs duty is a 10%. So now on this value, what I will do, basic customs duty, I will add. So how much? 10%. If I multiply that, it will come to 10 lakhs. And now, in addition to that, government will collect something called social welfare surcharge. At what rate? At the rate of 10%. Sir, this 10% on what? This 10% is not on 1 CR. This 10% is not on 1 CR of value. This 10% is on the customs duties which you are paying. You will pay the customs duty, no? On that customs duties, a 10% will be multiplied. So on what value? What is the value of this social welfare surcharge here? So 10 lakhs is the value of the customs we are paying, customs duty you are paying. On that 10%, if you multiply, the value is going to come to 1 lakh rupees. The value is going to come to how much? 1 lakh rupees. So now you tell me, what is the total cost of these goods? By the way, you get for clearance for home consumption. What is the total value here? So 1 crore 11 lakh rupees. Able to understand? So basic customs duty is something which will be paid on the value of the goods which have imported, which is determined under Customs Act. In addition to that basic customs duty, you are required to pay something called social welfare surcharge at the rate of 10%. But this social welfare surcharge will not be calculated on the value. This social welfare surcharge will be calculated on the basic customs duty and other duties whatever you have paid under the Customs Act. So on all that duties, 10% will be multiplied. So here I have paid only basic customs duty. So 10 lakh rupees into 10%. If I multiply, social welfare surcharge will come to 1 lakh rupees. So this basic customs duty of 10 lakh rupees I have to pay. 1 lakh in the name of social welfare surcharge also I have to pay. Understood? Next. And they say something here, social welfare surcharge is not applicable on something they are trying to say. This I will talk about it later. This we will see later. Why? Because all this we are yet to understand what is safeguard duty, what is countervailing duty, what is anti-dumping duty. All this is going to come further. So now we don't know meaning of all these terms. Just remember till here, value, on the value basic customs duty, on the basic customs duty, social welfare surcharge at the rate of 10%. Okay. Apart from that, what else the government is saying? Government imposed surcharge or cess. Government sometimes, in addition to basic customs duty, in addition to social welfare surcharge, they can also they will also collect from you some extra taxes in the name of surcharge or cess. But this is not for all articles. If you have imported certain category of articles, even they have mentioned on which articles you will be required to pay that surcharge and cess. Like if you see here, the government may impose specific surcharges or cesses such as road and infrastructure cess on motor spirit and high-speed diesel, health cess on medical equipment. So this surcharge will not be there on every item. It will depend on the products you are importing. Like for example, if you are importing motor spirit and high-speed diesel, then government will impose, in addition to basic customs duty, in addition to social welfare surcharge, they will collect from you something called road and infrastructure cess. If you are importing medical equipment, they will collect from you something called health cess. So it all depends whether cess and surcharge will be there or not. It all depends. But what things will always be there? Basic customs duty will be there, and along with that, social welfare surcharge also will be there. Okay. So till now, what and all different duties which we have understood? Number one is basic customs duty. Then we have understood something called social welfare surcharge. Then we have understood something called surcharge or cess, depending on the products which you are importing. Next, in addition to that, you will also be required to pay something called IGST also. You will also be required to consider, you will be also required to pay something called IGST. Sir, why IGST? Why IGST? See, even imports is also considered as interstate supply, and on the value of imports, you are required to pay IGST also. Why? Because, sir, why IGST on imports also? I will tell you. Say, for example, there is a person in India. He wants to purchase one product A he wants to purchase. So that product, if he purchases in the Indian market, the price is 1,000 rupees. The price is how much? 1,000 rupees. Now the same product A is available in China. If you buy the product from China, it will cost you 700 rupees only. It will cost you how much? 700 rupees only. Now what government will do in order to make the Indian products competitive? So what they will do is, they will collect from you customs duty, they will collect from you basic customs duty, social welfare surcharge, all this they are collecting in order to make them at par with the Indian products. Say for example, government has imposed these duties and all. So now the price of this product is 1000. If you import, if I add the customs duties and all, 1000 rupees you have to pay. But there is one more thing here. If you buy the product from Indian manufacturer, if you buy the product from Indian manufacturer, IGST will be GST will become applicable. No, this product today in India we have GST. So if you buy the product in India, you will be required to pay GST or not. That will be a supply. Say for example, this product attracts 18% of GST. So if you buy this product in India, you are required to pay 180 rupees of GST also. Now, if you don't compensate, if you don't charge GST on imports, then what will happen? It will be costly. If an Indian person purchases from India, he will be required to pay 1,180,000 for the product and 180 rupees in the name of GST. If you don't impose GST on imports, what will happen? Once again, this will become cheaper, no? So what is the main purpose of the customs and all? To make the Indian products competitive at par with the foreign products. But if you don't attract these, if you don't bring this customs also, if you don't bring this imports also under GST purview, once again Indian products will become costly. So that's what the government is doing is, in addition to duties and all, you will be also required to pay IGST. You'll be also required to pay IGST. Whatever product you are importing, depending on the rate which is applicable for the product, you will be required to pay IGST also. Clear? So that's what they say here. So that comes the next part, IGST. So IGST is also applied on imported goods at the rate under section 5 of the IGST Act. And on what value IGST you are required to pay. How to calculate the IGST value. So here comes the interesting thing. Once again, let us come to the example. So say for example, value which is determined under section 14 subsection 1 and or 2. So this value is 1 CR. 1 CR worth of products I have imported. Okay, first what will be there? Basic customs duty will be there. So what is the basic customs duty? Say for example, this product will attract 10%. So 10 lakh rupees of basic customs duty. What did I say? Social welfare surcharge also will be there. Social welfare surcharge will be 10% on basic customs duty, which will once again come to 1 lakh rupees. Okay. Apart from that, various other duties also will be there. I will give you a few names here. Say for example, sometimes what will happen is there will be something called anti-dumping duty. There will be something called countervailing duty. There will be something called safeguard duty. If any such duties are there, those also will be added. Those also should be added. Let us assume that I'm not taking their names, but if at all, I'm not taking the figure here, but because we are yet to understand what is this anti-dumping duty, what is this countervailing duty, what is this safeguard duty, we are yet to understand. But if any such duties in other names are there, those duties also will be considered. Now, after adding all this, you will get one value. So in my example, the value comes to 1,11 CR. Now, say for example, this product, whatever has been imported, that will attract a GST at the rate of 18%. Now, if you calculate, now you should multiply 18% on this value. Say for example, this is A. On this value, 18% should be calculated. So how to determine value for the purpose of IGST? You have to take the value determined under custom rules. To that, you have to add all kinds of duties levied under Customs Act. You should also add social welfare surcharge. So everything should be added. Then you will get one value. So that value will be considered for, that value will be the assessable value for the purpose of IGST purposes. Now on this 1 crore 11 lakh rupees, you have to multiply 18%. So if I multiply that 18%, what will be my figure? So let me do that calculation for you. So 1 crore 11 lakhs into 18%. If I multiply, it will come to 19 lakh 98,000. So that will be the GST value. So total transaction value after considering total invoice value will be how much? So if I do that calculation, 8, 9, 10, 3, 1 lakh 30,000, 1 crore 30 lakh 98,000 will be my total value inclusive of GST. Okay. So tell me guys, how to calculate? Once again, I'm telling you, this valuation is very important. This calculation is very important. This is where the examination question is going to come from. And this is where most of the students will do the mistake. So on what value will you calculate IGST? You will take the value which is accessible under section 14 and 14.2 of the custom rules. And you have to add to that basic customs duty. Apart from that, any other duty which is imposed under customs, that also should be added. And even social welfare surcharge also should be added. Then after adding all this, you will get one value. On that value, at the applicable rate, you have to multiply the GST. You have to multiply that applicable GST rate. Then you will get the IGST value. That IGST value also is required to be paid to the government. Understood? So that's what they say here. So IGST is also required to be paid. IGST is applied on imported goods at rate under Section 5 of the IGST Act. The value for IGST is computed as follows. Value determined under 14 subsection 1 or 14 subsection 2. That value you have to take. To that, any customs duty which is chargeable under 12 of the Customs Act, that is basic customs duty and all, that also you have to add. And apart from that, any additional charges like anti-dumping duty, safeguard duty, even that also should be added. And however, IGST and compensation cess are not included. See, same no, for calculation of IGST, we will not include any IGST component. Even you can ignore this line also. So basically what they're asking you to do, take value determined under custom rules, to that add basic customs duty, social welfare surcharge. Apart from that, any other kind of duty which you have paid, everything should be added. Then you will get the value. On that you have to pay that IGST. Able to understand? Clear and comfortable everybody? But here there are certain things, certain important concept we are going to understand. Come on guys, listen carefully. One important concept I'm going to explain. Say for example, there is a person who is in India. Okay, he imported the goods. Okay, so he imported electronic devices. Fine. So 1 crore worth of, let me do one thing, let me write the shortcuts here. 1 crore worth of goods he has imported. Now these goods reached the customs station. As I have told you in the introduction class itself, the importer has two options. What he can do, either he can clear them for home consumption, or what he can do is he can take it to warehouse. He can take it to a customs warehouse. So now what this person has done is, first he has taken that goods to warehouse, customs warehouse. He submitted a bill of entry for warehousing. So he has taken the goods to the customs warehouse. At this point of time, is customs duty required to be paid? No. As I have told, without paying, when you are clearing for home consumption, then only customs duties are required to be paid. Now what this person has done is he has taken that goods for warehousing. Now what he has done is, once he has taken the goods to the warehouse, even before clearing that goods for home consumption, what he has done is he has sold the goods to another person. That can happen. No, even before clearance also you can transfer the ownership. For example, if I want to sell some goods, it doesn't mean the goods should be with me. Even my goods are not there with me, even the goods will come in future, still I can sell that goods to another person. So when the goods are in warehouse, what this person Mr. A has done is, now this person Mr. A has sold the goods to Mr. B. He has sold the goods to Mr. B. Say for example, for 1.2 crore he sold the goods. At what value he has sold the goods to Mr. B? For 1.2 crore he has sold the goods to Mr. B. Now you tell me, IGST should be paid on after. So this sale has happened. Now what Mr. B is doing is, from the warehouse, now he is clearing for home consumption. Mr. B is clearing the goods for because he has become the importer. No, he purchased the goods. Now Mr. B is clearing these goods from warehouse. For the purpose of clearance, he is submitting the bill of entry. Now my doubt is, will IGST be paid on the transaction value of 1 crore or on the sale value of 1.2 crore? On which value IGST is required to be paid? On which value IGST is required to be paid? So what does the Customs Act say here is, in case if the warehoused goods are sold before clearance for home consumption, whichever is higher, that value should be considered for the purpose of calculation of IGST. So you tell me 1 crore is the imported value of the goods, but the sale has taken as 1.2 crore. So now you tell me which value will be considered for the purpose of IGST calculation. Whichever is higher, they have told 1.2 crore will be considered for calculation. Able to understand? So if you read the provision, it will become more clear. IGST on warehoused goods. For goods sold from a warehouse before clearance for home consumption, or if you have been exported, anything could happen. But whatever it is, export, you need not worry. First, let us concentrate on if before you have transferred the goods to the warehouse and you did not clear for home consumption, before clearance for home consumption only, you have sold the goods to another person. Then on what value should be considered for the purpose of IGST calculation? So what they said is, if you are selling entire goods, say for example, I imported some 1 lakh quantity of the goods, total value is 1 crore. So total 1 lakh quantity of the goods I have imported, and entire 1 lakh quantity of the goods I have sold it before clearance for home consumption. So if that is the case, what they are trying to say is, higher of the value determined under Customs Act or the transaction value. So what is the value determined under Customs Act? It is 1 crore. Or transaction value, what is the transaction value? 1.2 crore. Whichever is higher, which one is higher? 1.2 crore is higher. This value should be considered for the purpose of IGST calculation. Understood? Let me give you one more example. Say for example, there is a person Mr. A. He imported the goods. Now the value as per customs at the time of import, the value of the customs value as per the Customs Act is 1 crore. but he has moved that goods to warehouse before clearance for home consumption only. Mr. A has sold the goods to Mr. B and the sale has taken place as 90 lakh rupees only. Sale has taken place as 90 lakh rupees. Sir, why he will sell it at lower value? Whatever could be the reason, we don't know. So transaction has taken place at 90 lakh rupees, but the valuation for the purpose of custom is 1 CR. So now you tell me which value should be considered for the purpose of IGST calculation. So what does the rule say? Value determined as per Customs Act, which is 1 CR, or the transaction value, which is 90 lakh rupees, whichever is higher. Which one is higher? 1 CR is higher. 1 CR will be considered for the purpose of IGST calculation. Understood? Clear and comfortable, everybody? Now, so there could be one more scenario. Say, for example, Mr. A is there. He imported 1 lakh quantity of the goods. 1 lakh quantity of the goods he has imported, but he did not clear that for home consumption. He transferred to warehouse. Now what happened is, while the goods are lying in the warehouse before clearance for home consumption, 40,000 quantity of the goods are sold. 40,000 quantity of the goods are sold before clearance for home consumption only. These goods are sold. Remaining 60,000 he did not sell it. Remaining 60,000 he did not sell it. So now total customs value determined for entire 1 lakh quantity as per Customs Act is 1 CR. Now this 60,000 has not been sold. Now these are getting cleared for home consumption. What will happen? When these 60,000 goods are getting cleared for home consumption, we will take, for IGST purposes, we will take the value as per Customs Act only. Why? Because the 60,000 was not sold. No, I will come to the 40,000 quantity later, but let us talk about 60,000. Mr. A, he is clearing 60,000 worth of goods for home consumption. He did not sell them before clearance. So if that is the case, what value should be considered for IGST purposes? Value determined under Customs Act. So if you calculate the value under Customs Act, for this is 60,000 rupees, 60,000 quantity, 60 lakhs will be the value as per Customs Act. So on this value, you will calculate IGST. This value will be considered for the purpose of calculation of IGST. But this 40,000 quantity before clearance for home consumption, this has been sold. No. Say for example, that transaction value, this 40,000 quantity of the goods were sold for 50 lakh rupees. This 40,000 quantity of the goods were sold for 50 lakh rupees. Now for this 40,000, when they are getting cleared for home consumption, on what value IGST is required to be paid? So what did I say? Either the value as per Customs Act or the transaction value, whichever is higher. What is the value as per Customs Act? 40,000. If for total 1 lakh, 1 CR is the value. For 40,000, how much will be the value? 40 lakh rupees. That is the valuation as per customs. What is the transaction value? 50 lakh rupees. Whichever is higher. Which one is higher? 50 lakhs is higher. So this 50 lakhs will be considered for the purpose of calculation of IGST. Understood? So that is what the second point. If you are not selling the whole goods, if you are selling only part of the goods, higher proportionate value of the goods or the transaction value. So that proportion for this 40,000, what is the proportionate value as per Customs Act? That is 40 lakh rupees, or the transaction value, which is 50 lakh rupees, whichever is higher. So here 50 lakhs is higher. So on this 50 lakh rupees, you will be required to pay the amount of GST, IGST you will be required to pay. Now, sometimes what will happen is, if the goods are sold multiple times, now let me give you one more example. Say there is a person, Mr. A. Okay, he imported 1 CR worth of goods. 1 CR is the customs valuation as per customs. Now these goods are taken to the warehouse. When the goods are still lying in the warehouse, Mr. A sold the goods to Mr. B for how much value? 1.2 CR. Now what Mr. B has done is, he did not clear the goods for home consumption. When the goods are still lying in the warehouse, Mr. B sold the goods to Mr. C for a value of 1.5 CR. Now what Mr. C has done is, when the goods are still lying in the warehouse before they are cleared for home consumption, he sold the goods for 1.8 CR. Now Mr. D, finally he is clearing the goods for home consumption. On what value IGST will be paid? Which value should be considered for the purpose of GST? So now what did I say? In case if the goods are sold before clearance for home consumption, you should take valuation as per customs or transaction value, whichever is higher. We know what is the valuation for the purpose of customs. What is the valuation for the purpose of customs? 1 CR. Or a transaction value, whichever is higher. But now the doubt is, sir, which transaction value I have to consider? Because the sale has taken multiple times. One sale has taken place at 1.2 CR. Another sale has taken place at 1.5 CR. Another sale has taken at 1.8 CR. Sir, I have 3 transaction values. Which transaction value I have to consider? If the goods are sold multiple times before clearance for home consumption, which value I have to consider for the purpose of IGST purposes? Now, what does the Act says is, if the goods are sold multiple times before clearance, transaction value of the last sale is used for determining whatever is the last sale, that value we will take. Now you tell me what is the last sale? Last sale has taken at 1.8 CR. This value I will consider for the purpose of transaction value. So 1 CR, the valuation as per customs, or 1.8 CR, which is the last transaction value, whichever is higher. Which one is higher? 1.8 CR is higher. So this value will be considered for the purpose of calculation of IGST purposes. This valuation will be considered for the purpose of calculation of IGST purposes. Understood, everyone? Clear and comfortable? Able to understand? Right. So this is what they try to say here. Understood? So IGST is very, very important. This calculation part is going to be damn important. So please pay close attention. Once again, I will read it. So IGST will be applied on imported goods at the rate under Section 5 of the IGST Act. And the value for IGST is, what is the valuation? It includes value determined under 14 subsection 1 or 14 subsection 2, or any duties which are required to pay under section 12, that is basic customs duty. Apart from that, social welfare surcharge. It also includes any other kind of duties levied like anti-dumping duty, safeguard duty, everything. And in case if the warehouse, if the goods are warehoused and before clearance for home consumption, if it has been sold, which value will be considered? Either customs value under section 14 or 14 subsection 2, or transaction value, whichever is higher. If it is sold multiple times, transaction value, which value you should take? The last sale. What is the transaction value for the last sale? You have to determine, and that value you have to use it for the purpose of calculation of IGST. Understood? Clear and comfortable? Right. Right. So now let us try to understand next category of tax which you are required to pay. In the case of imports, you will be required to pay one more tax called GST compensation cess. So if you remember, regarding the GST compensation cess, we had a discussion in the introduction to the GST only. So because of introduction of GST, some states are losing revenue. In order to compensate those states which are losing the revenue because of introduction of GST, what did the government say? Central government told, we will collect something called GST compensation cess in case of specified products like luxury items and all. And whatever GST compensation cess which the central government is collecting, that amount will be used to compensate the states who are losing revenue because of introduction of the GST. So that is what the intention behind introduction of the GST compensation cess. So in normal domestic transactions on luxury items and all, GST compensation is like even on vehicles also, even on motor vehicles also, GST compensation cess will be imposed. Now, in addition to that, what the government has told is, if you are importing the goods, on the imports also you will be required to pay GST compensation cess. In addition to basic customs duty, in addition to social welfare surcharge, in addition to some other kinds of duties like safeguard duty, anti-dumping duty and all, in addition to IGST, you will also be required to pay something called GST compensation cess on imports. So that's what they say here. Any imported article will be liable to compensation cess at the rate specified under GST Act. In the GST Compensation Cess Act, they will specify the rate. According to the rate which has been specified, you are even required to pay GST compensation cess also. Sir, on what value you have to calculate GST compensation cess? On what value you have to calculate GST compensation cess? Whatever value you have used for the purpose of calculation of IGST, the same value, on the same value, even GST compensation cess also will be charged. Sir, what do you mean by that? What do you mean by that? Once again, let us come back here. Let us come back here. So say, for example, I am importing goods. Okay. So the goods which I have imported, for that I will determine the value. What is the value? 1 CR. On that basic customs duty, 10%. On that social welfare surcharge, if I calculate that, total value, total assessable value for GST has come to 1 crore 11 lakhs. On that, I will pay IGST at the rate of 18%. Say, for example, this product will attract a GST compensation cess at the rate of 20%. So in addition to IGST, I am required to pay GST compensation cess at the rate of 20%. Sir, on what value I will calculate GST compensation cess? On whatever value you have calculated IGST, on the same value you are even required to calculate the GST compensation cess also. This 20%, once again I will multiply on A only. So which means 20% into 1 crore 11 lakhs. On whatever value you have calculated IGST, on the same value you will apply that GST compensation cess rate also. So if I do that calculation for you, so 1 crore 11 lakhs into 0.2, if I multiply that, 1 crore 11 lakh into 0.2, if I multiply that, it will come to 22 lakh 20,000. Will come to how much? 22 lakh 20,000. That much amount of GST compensation cess also you are required to pay. Understood? So when you are importing, you are required to pay IGST, you are required to pay GST compensation cess also. Whatever value, on whatever value you are calculating IGST, on the same value you are required to calculate GST compensation cess also. So sometimes you might get confused. What some people will do, they will calculate the value, assessable value for GST. On that, they will add the IGST component. Now, what some people will do, the mistake is they will add the GST value, they will determine the value. On this value, they will calculate GST compensation cess, which is absolutely wrong. So on whatever value you have calculated IGST, the same value should be used even for calculation of the GST compensation cess also. So I'm calculating IGST on 1 crore 11 lakhs. On the same value, you are required to calculate the GST compensation cess, not inclusive of IGST figure. Understood? So that much amount of GST compensation cess also you are required to pay. Wait a minute. Sorry. So on that value, you are required to pay GST compensation cess also. So very, very important. This calculation also you have to keep it in the back of your mind. So if you see here, what is the value? On what value you will calculate the cess amount? For GST compensation cess, the value of imported article is calculated as follow. Assessable value under section 14 subsection 1 or say 14 subsection 2, any customs duty, basically basic customs duty and social welfare surcharge. In addition to that, any duty, any additional duty like anti-dumping duty and safeguard duty, and in that value you should not consider IGST and GST compensation cess. So once again, whatever we have learned for IGST calculation, the same thing they are trying to say here. On whatever value you have calculated IGST, on the same value you have to calculate the GST compensation cess also. So here they have given example, the same example, some different example I have given. So you can solve this also for your understanding. And in case if the warehoused goods are sold, in case if you have imported the goods, but instead of clearing for home consumption, you have kept it in the warehouse, but before clearance for home consumption, you are selling it. Then on which value you have to pay GST? I have told either the valuation as per Customs Act or transaction value, whichever is higher. No, the same rules will become applicable even on GST compensation cess also. So whatever rules which are applicable for IGST calculation, the same rules will be even applicable for GST compensation cess. In case if you are keeping the goods in warehouse and before clearance for home consumption, if you are selling it, you have to take for the purpose of calculation of GST compensation cess also, the value will be value determined under Customs Act or the transaction value, whichever is higher. Sir, if goods are getting sold at multiple times, what should happen? Whatever is the latest transaction value that you have to take. Basically, whatever last sale has taken place, that last sales transaction value you have to consider for the purpose of calculation of GST compensation cess. So basically, whatever rules which are applicable for IGST, the same rules will even become applicable for GST compensation cess also. Understood? Right. And yeah, ITC is available under GST law for IGST and compensation cess payment. Basically, whatever IGST you are paying, whatever GST compensation cess you are paying, that you can claim it as input tax credit. There is no objection. You can happily claim that as a input tax credit. You can take this as ITC and use it for the payment of your output tax liabilities. That ITC will become available for you. Understood? So how many duties I have explained you till now? How many kinds of taxes I have explained you till now? Under imports, number one, you are required to pay basic customs duty. You are required to pay social welfare surcharge. Apart from that, the government can impose some additional surcharges and cesses also depending on the products you are importing. Then in addition to that, you are required to pay IGST. You are also required to pay GST compensation cess. Everybody comfortable till here? Now we will try to proceed further with understanding the remaining kinds of duties. We'll try to understand something called safeguard duty under section 8B of the Customs Tariff Act. Sir, what is this safeguard duty? The name itself says, what do you mean by safeguard? Safeguard means protection. Safeguarding means what? Protecting. Now sometimes what might happen is, in India, from some country, the goods or some category of goods might get imported in large quantities. Beyond some limits, the goods are getting imported. Recently, what happened is, in the very recent times, what happened is, the steel products are getting available at a very cheaper prices in China, especially in China and Vietnam. There, the steel products are getting available or getting priced at very less. So when compared with Indian steel, in India, if you buy some steel products, they are costing somewhere around 1,000 rupees or something. But in China and Vietnam, the price is very, very lower. And also they are having multiple kinds of uses. So what Indian people have started doing is, for their manufacturing purposes, instead of preferring the steel products manufactured in India, they imported in very large quantities from China and Vietnam. So when these steel products from China and Vietnam are getting imported in very large quantities, local manufacturers have suffered a major problem. People have reduced the buying of the local steel manufactured products. Because of that, Indian steel manufacturers, Indian steel traders, they have faced a huge crisis. So now, like this, what will happen is, in some cases, some products, some kind of goods will get imported in very large quantities, which pose a danger or threat to the Indian products, Indian manufacturers. So now what the government will do is, the government has to take some action. in order to control this, in order to prevent that risk, in order to prevent that danger, the government has to interfere and do something, no? So now what government will do is, when they find that some goods are getting imported in very large quantities, which are creating a danger or threat for the Indian products, now the government will implement some safeguard measures. What the government will do? The government will implement something called safeguard measures, some protective measures they will take. Sir, what kind of safeguard measures they will take? Broadly, two kinds of safeguard measures they will take. Number one, what the government will do is, government will impose something called a safeguard duty. What the government will do? The government will impose one more duty called safeguard duty, which means anyhow, if you are importing the goods, you are required to pay basic customs duty. You are also required to pay social welfare surcharge. Now, what government will do is, in addition to the basic customs duty, in addition to the social welfare charges, the government will ask you to pay one more duty called safeguard duty. The government will ask you to pay one more duty called safeguard duty, which will be in addition to basic customs duty. They will be asking you to pay one more kind of duty called safeguard duty, so that it will increase the price of the imports, so that people will reduce importing that articles and they will start give preference to the locally manufactured products. So that is one safeguard measure, one which is by way of importing of safeguard duty. One more safeguard measure what the government can do is, the government can do something called tariff quota. The government will bring some safeguard measure in the name of something called tariff quota. Sir, what is this tariff quota? So they will determine, say for example, if the government determines that if up to 1 lakh tons, if the steel is getting imported, it is fine, no problem. If more than 1 lakh tons, if the steel is getting imported, then it will be a danger. Now, what the government will give, what the government will put the condition is, if you are importing the quantity up to 1 lakh tons, if you are importing up to the quantity of 1 lakh tons, you will be required to pay basic customs duty at the rate of 10% only. In case if you are importing more than 1 lakh tons, then you will be required to pay 30% of the customs duty. So this kind of safeguard measure, we call them as tariff quota. So basically, when safeguard duties or tariff quotas will be implemented is, when certain product is getting imported in India in large quantities, which is causing a danger or damage to the local market, then the government will take safeguard measures. One safeguard measure is imposing of the safeguard duty, and another kind of safeguard measure is imposing something called tariff quota. So that is what explained in this section number 8B of the Customs Tariff Act. Let us try to understand what they are trying to say here. Safeguard measures can be imposed. Government can impose safeguard measures when an article is getting imported in India in increased quantities, in very large quantity a product is getting imported, and such imports threaten or cause serious injury to the domestic industry. Because of that importation of quantities in large number, it is creating a danger, or it is causing some serious injury to the domestic industry. Sir, what kind of safeguard measures? You are telling government will take safeguard measures, no? But what kind of safeguard measures? They will impose something called safeguard duty, or they can bring something called tariff rate quotas, or they can take any other measure in order to protect the domestic industry. Apart from this too, they can take any other measures also to protect the industry, but major two safeguard measures are imposing something called safeguard duty or imposing something called tariff rate quota. So safeguard duty, exemption from safeguard duty. But sometimes what the government will do is, government will give exemption. In every time they will not impose safeguard duty. Sometimes when the goods are getting imported in large quantities also, still government will not impose safeguard duty. When, sir? Number one, the article originates from a developing country or countries. See, India itself is developing country, but we want to favor other developing countries also. Now, what government can say is, okay, if certain items are getting imported in large quantities, say for example steel only, if the steel is getting imported from large quantities, like from China also steel is getting imported, from US also steel is getting imported, from Vietnam also steel is getting imported. Now what the government can do is, they can start imposing safeguard duty only on China and US. Since Vietnam is a developing country, what the government can say is, if you are importing steel from Vietnam, then there is no safeguard duty, but if you are importing from China and US, there will be a safeguard duty. So like that, government can put some rules. So government can give relaxation from safeguard duty if the article is coming from a developing country or countries. But however, there should be some restriction. From Vietnam also, you can't continuously import large number of quantities. So what government will do is, government will put one limit. What the government will do? Government will put some limit. How much limit they can put? So what they can do is, for one developing country, share of imports from that country must not exceed 3% of the total imports of that article into India. So government can say, if you are importing the steel from Vietnam, we will not impose you safeguard duty. But however, they will put one condition. What condition they will put? Say for example, the steel is totally getting imported at some 10 lakh tons of steel is getting imported into India. Now, if you are importing up to 3% of that total imports is how much? 10 lakh quantity. In that 3%, if I calculate, it will come to 30,000 quantity. So if you are importing up to 30,000 quantity from Vietnam, which is a developing country, then we will not impose safeguard duty. Like that, they will put a limit. So what is the limit they will put? For one developing country, the imports, how much should be the imports? The share of imports from that country must not exceed 3% of the total imports of that article into India. Sir, like that, so many developing countries will be there. Say, for example, we have some 20 developing countries. We have some 20 developing countries. From 20 developing countries, we are importing the steel. For every country, if we give 3% of limit, it will come to total 60% of the imports. Then purpose will not be served. Now what they will do is they have put one more limit. For each developing country, they have put 3% limit, but one more condition also they have put. If you are importing from multiple developing countries, aggregate imports from all such countries must not exceed 9% of the total imports. So for each country 3%, but however, for all the countries put together, for all the developing countries put together, the total imports of that article should not exceed total 9%. Say for example, total 10 lakh quantity is getting imported. In that 9%, which will come to somewhere around 90,000 quantity, for all developing countries put together, only 90,000 tons of steel can be imported. And for each developing country, we will give only 3%. So they can share among themselves in whatever ratio they will share, that is up to them. But for all the countries put together, for all the developing countries put together, only 9%. And in that, each developing country can go up to a maximum of 3%. So like this, government can give relaxation. Okay. So what did I explain you till now? Regarding safeguard duty, whenever certain items are getting imported in large quantities which create a danger to the domestic industry, then the government will take safeguard measures. Two popular safeguard measures. Number one is safeguard duty. Number two is tariff rate quotas. What is safeguard duty? In addition to the basic customs duty, you are required to pay some extra duties also. But however, government can give relaxation. When government will give relaxation, if you are importing from another developing country, but there is also limit. From each developing country, the share of imports should not exceed 3% of the total imports of that article into India. If there are multiple developing countries from which you are importing, the aggregate of all the imports from all such developing countries should not exceed 9% of the total imports into India. And even exemption on quantity. In addition to that, central government also may exempt a certain quantity of the goods from safeguard duty if it is deemed appropriate. The government also can give relaxation on the basis of quantity. Up to 1 lakh quantity, no safeguard duty. So like that, they can give quantity based relaxations also. Then coming to tariff rate quota. So what is tariff rate quota? If tariff rate quotas are used as a safeguard measure, quota should not be lower than average imports of last 3 representative years unless a different level is deemed necessary to prevent or remedy serious injury. So in case of tariff rate quota, what they will do is they will determine the last 3 years. They will determine for the last 3 years what is the average quantity of imports. So they will say up to that limit only. Say for example, in the last 3 years, average imports of the steel articles are 10 lakh quantities. Now they will say in the current year also, up to 10 lakh quantity, we will be imposing only normal customs duty. If you are importing more than that, you are required to pay extra customs duty. Like that, they will put a limit. That is what we call it as tariff rate quota. Quota may be allocated to countries with a substantial interest in supplying the goods. That total quota, for example, if the government has put the tariff rate quota as 10 lakh tons, now this 10 lakh tons will be divided among different countries. Because we get imports from multiple countries, now it will be divided among multiple countries according to the government's decision. So that is what regarding tariff rate quota. Now, provisional safeguard duty. Sir, what is this provisional safeguard duty? So what is this provisional safeguard duty is? Say for example, central government is there. Some product is getting imported. Say for example, some metal, iron is getting imported. Now, this iron is getting imported in large quantities. Now, local iron manufacturers, they went to the central government and told, sir, iron is getting imported in very large quantities, because of which our industry is getting damaged. Now, central government will need some time to do this inquiry. Government will do inquiry. The government will have to study the market, whether really iron is getting imported in such large quantities so that the industry is getting damaged. Government has to do their own analysis. No, it will take some time. During that time, so if the government is doing inquiry and all, during that time, what the government will do is, till that analysis, till they do the inquiry and come to a conclusion, during that point of time, they will impose something called provisional safeguard duty. Because government can't say, okay, we will take some 3 months to analyze, then we will decide. By that time, whatever damage has to happen, that would have happened. So government can't differ. So what they will do, but it will take some time to determine whether it is really causing a damage. If yes, how much rate of safeguard duty will be implemented. Determination will take some time. But during that time span, when that has to be determined, what the government can do is they will impose something called provisional safeguard duty. On a provisional basis, they will impose some safeguard duty. So that's what they try to say here. It can be applied temporarily up to 200 days. So if the government takes some time during the process of that inquiry and determination, up to 200 days of time, they can impose safeguard duty on a provisional basis pending the final determination. If the final determination indicates no injury, then the provisional duty will be refunded. Say for example, these iron people have went to the government and told, sir, because of imports of iron and all, it is causing a serious damage. Now the government has to determine. So what they have done is, pending the determination, they have to okay, on this product 20% of safeguard duty will be imposed. But when the government has done and did the analysis and all, actually government found out that because of that iron imports and all, there is actually no damage to the local manufacturers. Just these people are frightened, just these people are they want to discourage the imports and all. So that's why they have made wrong complaints to the central government. So when this determination is pending, the government has collected provisional safeguard duty at the rate of 20%. No. But later, after doing all the analysis, government decided that because of this imports, there is no injury only. There is no damage for the local market. Now, what the government will do? During that time, where provisional safeguard duty has been collected, all that amount will be refunded to the importers. All that amount will be refunded to the importers. Understood? Or on the final determination, if the government has determined, yes, really there is an injury, then there is no refund. But on final determination, if it was come to a conclusion that there is no damage to the industry, there is no injury to the industry, then whatever provisional safeguard duty they have collected, that will be refunded back. Next, duration of imposition. Sir, how long safeguard duty can be imposed? Forever it can be imposed? No. Safeguard duty expires after 4 years unless revoked earlier. It can be extended up to 10 years. From the date of imposition of safeguard duty, it can remain in force up to 4 years. After 4 years, it will expire. That means the year of imposition, and after 4 years, it will expire. However, it can be extended for 10 more years. It can be extended up to 10 more years. Next, exemption from export-oriented units. Exemption from export-oriented units. Basically, export-oriented units like SEZ and all. SEZs and export-oriented units will be there. See, why the government will give permission of, why the government will give recognition of SEZ or EOU? Because these are the entities, they will be engaged in doing only export business. So that's why government will give relaxation. So now what they have told is, say for example, there is an SEZ unit, there is one EOU, export oriented unit is there. So one ex-limited company is there, which is located in SEZ or EOU. Now what this company is doing is, this company is manufacturing products. This company is manufacturing the products, and whatever products they are manufacturing, they're completely exporting it. They're completely exporting it. That is what the objective of SEZ and export oriented unit, no? So there is one company X Limited which is located in either SEZ or EOU. Now what they're doing is, they're doing manufacturing activity and completely they are exporting the products. See, when this company is making the exports to the other countries, actually they are doing a benefit for the country, no? They are increasing the foreign exchange reserves of the country. So that's why what the government has given the relaxation is, say for example, this company X Limited has imported some steel. This company X Limited has imported some steel. Generally, on steel, if someone is importing, they are required to pay something called safeguard duty. On steel, there is currently safeguard duty applicable. But what the government has told is, if X Limited is importing that steel, which is either located in SEZ or which is a 100% export-oriented unit, what they will do, they will import that steel, they will use that steel for manufacturing, and once again, that product they will finally export. So that's why what the government has told is, if a unit located in SEZ or if a 100% export-oriented unit, if they are importing that steel, even though safeguard duty is applicable, but these units are not required to pay that safeguard duty. They are exempted from the safeguard duty. But however, sometimes what will happen is, this X Limited, even though it is located in SEZ or even though it is a 100% export-oriented unit, they have imported some steel. And instead of using that for manufacturing and exporting, what they have done is, they have started providing it in the domestic area only. That means this X Limited unit, they imported steel, used it that for manufacturing purposes, but instead of exporting it, they have started selling that products in India only. Then what the government will do, you know, then the government will say, you are no longer exempted from safeguard duty, you will be required to pay safeguard duty on that portion, whatever you have cleared into India. If you are importing and using it for the purpose of export completely, no need to pay safeguard duty. But if you have imported some goods, either you are clearing for home consumption, either as a product as it is, or using that product you are manufacturing something, and that manufactured product if you are selling in India, then you will no longer be exempted from safeguard duty, you will be required to pay the safeguard duty. So that's what they try to say here. Safeguard duty does not apply to imports by 100% export oriented units or units in special economic zones. Generally they are not required to pay safeguard duty unless, but in some cases you are required to pay, when, if it is specifically made applicable. Sometimes what the government will say is, they will specifically say, even though you are a 100% export oriented unit, even though you are a SUZ, you are still required to pay safeguard duty. If the government specifically makes it applicable, then they are required to pay. Or the article is cleared into domestic tariff area or used in manufacturing goods which are cleared into domestic tariff area, in which case safeguard measures will apply to the portion of article used or cleared. What do you mean by that? Say for example, once again I will use the same example. There is a company X Limited, which is a SEZ, or which is a 100% export oriented unit. Now what they have done is, they have imported 1 lakh kgs of steel. Now out of this 1 lakh kgs of steel, what they have done is 60,000 kgs of steel they have used for the purpose of manufacturing, and those goods are all exported outside of India. But remaining 40,000 quantity, what they have done is, either that 40,000 quantity has been cleared, that steel has been cleared as it is into domestic tariff area, or using that 40,000 quantity, they did some manufacturing, and that manufacturing article was cleared into a domestic tariff area. Instead of exporting, they have once again started selling that in India. Now what the government will say, no, on that 40,000 quantity, you will be required to pay the safeguard duty. Whatever 60,000 quantity that you have used for the purpose of manufacturing or clearing for exports, on that safeguard duty is not required to be paid. But if you are clearing the article as it is into domestic tariff area, or using that article you are manufacturing, and that manufactured goods you are clearing into domestic tariff area, then safeguard duty will not be exempted on that. That safeguard duty you will be required to pay. Understood? So this is what exemption for export oriented units. Then product specific duty. Safeguard duty is product specific, and it should be in addition to any other duties defined under this act or other laws. It is not a replacement of basic customs duty. It will be in addition to other duties. Now they have given some definitions. What is the definition of developing country? A country notified by the central government. What is domestic industry? The producers in India or like or directly competitive articles. What do you mean by serious damage? What do you mean by serious injury? Causing a significant harm to the domestic industry. What is the meaning of threat of serious injury? An imminent danger of significant harm. So these are all definitions, not important from the examination perspective. And applicable laws, Customs Act 1962 and its rules and regulations apply everything to the safeguard duty. Like whatever rules and regulations which are applicable for Customs Act, all that rules and regulations will be applicable for safeguard duty also. Like for example, if someone is saying, if you don't pay basic customs duty, the goods will not be cleared for home consumption. The same rule will be applicable even for safeguard duty also. If you don't pay the safeguard duty, then also goods will not be cleared for home consumption. Understood? Clear and comfortable, everyone? So this is what regarding the safeguard duty. Everybody comfortable? So what and all we have seen till now? We have seen till now basic customs duty. Then we have seen something called social welfare surcharge. Then we have seen IGST. Then we have seen GST compensation cess, and I have also explained something called a safeguard duty. Okay. So now we will try to understand the next kind of duty, which is countervailing duty on subsidized articles. So we'll try to understand the concept first. Very, very easy to understand. So the name itself says countervailing duty. The government can impose in the name of something called countervailing duty, CVD also we can call it, on subsidized articles. Sir, what do you mean by this? When this duty will come into picture? Say for example, a person is in India. So we are here in India. So take some country. Which country we will take? Say for example, give me some name of the country. Okay, so let us take US only, United States of America. So now say for example, in the United States of America, this mobile phones, say for example, this mobile phone. So this mobile phone, say for example, it will cost somewhere around 500 rupees. I'm just giving one normal example. Some 500 rupees is in USA, the phone. If you buy that phone in US, it will cost some 50,000. Say for example, it will cost some 50,000. But what the US government has done is, in order to encourage exports, if this mobile phone is manufactured in US and sold in US, they will be able to sell it at 50,000 rupees. But what US government has done is, in order to encourage the exports and all, what government told is, okay, there is one manufacturer in US who is manufacturing these mobile phones. They told, if you sell the product in US, you can sell it for 50,000. But if you export this product from US, if you are exporting this to India, what we will do is, we will give you subsidy. That means you can sell it at 50,000 rupees. But what US government told to this manufacturer is, if you export, we will give you 10,000 rupees of subsidy. That means this manufacturer, if he could export this to India, if he could export that to India, he could sell it at 40,000 rupees only. He could sell to India at 40,000 rupees only. Why? Because 50,000 he will get anyhow. 10,000 he will get it from the subsidy. 40,000 he will get it from the customer in India, and 10,000 government will give to that manufacturer in the form of subsidy. Net how much manufacturer is getting? 40,000 he is getting from that person, whoever is importing in India. 10,000 rupees anyhow US government will give him, he is getting as 50,000 rupees. So how the government is, what this US government is doing, in order to encourage the exports of this country, it is giving a subsidy. It is compensating that exporter. So now what will happen? Because of this subsidy, this manufacturer will start sending the goods, will start selling the goods to the India at 40,000 rupees only. Now once again, what will happen because of this? Because of this, Indian people will start giving more preference to that imports. And once again, it will cause a damage to the local manufacturers. Now what government can do is, in order to tackle this situation, so what they can do is, in addition to basic customs duty, in addition to social welfare surcharge and all, government can say we will impose something called countervailing duty. We will impose something called countervailing duty. Countervailing means what? You are giving a counter. So this US government, in order to improve their exports, they are giving a subsidy. Now the Indian government want to counter that. How they can counter that? By imposing something called countervailing duty. Now what the government will do is, what the Indian government will do is, we will impose a countervailing duty at the rate of 10,000 rupees. Now what will happen? This will nullify. This will once again make the Indian products competitive. Able to understand? So that kind of duty we call it as countervailing duty. Clear? That's it. This is what the simple logic, nothing here to make the things complicated. So we have to understand some rules and regulations regarding it. Let us try to have a look at it. Countervailing duty may be imposed. So when countervailing duty will be imposed, they are trying to say here, countervailing duty may be imposed if a country or territory subsidizes, gives a subsidy to the manufacturer production or exportation of an article, including the transportation subsidy. The government can give subsidy in any form. Either they can give subsidy for manufacturing, for the production, or for transportation cost. In the transportation cost, they are giving subsidy, whatever it is. So countervailing duty will be imposed if a country or territory subsidizes manufacture, production, exportation of an article, including transportation subsidies, and that article is imported into India. So that local government is giving subsidy and that article is getting imported into India, and the article is imported from the country of manufacture or production, either directly or indirectly. I just want you to add one more line here, directly or indirectly. So there is one thing missing here. That article is getting imported from the country of manufacture or production, either directly or indirectly. Sir, what do you mean by this? Say for example, some importers are very smart. What they will do, if you are directly importing from USA, the government will come and impose something called countervailing duty. Now what one importer has done is, he's having good connections in other countries also. Now what he has done is, this person, he wants to buy that goods from US. But if the goods are directly coming from US, government will impose something called countervailing duty. Now what he has done is, he has some known person, or he's having some sister concern in China. So what he is doing is, first he is bringing the goods from US to China, and from China he is importing that mobile phones. So now this person is importing the goods indirectly from the country of manufacture or production, because he found a situation here. If you are directly importing from US, government will impose something called countervailing duty. US government is giving subsidy for the purpose of export. But if this person brings the goods directly from US, the government will impose countervailing duty. So what he has done, he has brought the goods to China. From China he is importing once again. Now it is a kind of overriding the provision or not. So now what the government has told if you are importing directly or indirectly, then also will impose customs duty. So here you are importing from US, but not directly you are doing it, indirectly you are doing it. Here also the government will come and impose countervailing duty. Understood? So this is one thing. This is what the significance of the term directly or indirectly. And the article is imported either in the same condition as when exported or after being changed. Now even what some people will try to do, if you are importing mobile phone, US is giving subsidy on mobile phone. So if you are importing a mobile phone into India, the Indian government will impose something called countervailing duty. Now what one importer has thought is, he has thought some innovatively. Instead of bringing the mobile phones as it is, he is getting them in a disassembled situation. So what do you mean by disassembled situation? In one consignment he is getting screens, only mobile screen he is getting. In one consignment he is getting a case. In one consignment he is getting a battery. Now what he will do is, once he brings all the goods into India, then he will assemble and he will make it into a mobile phone. So now also this person is trying to be over smart and he is trying to overcome this countervailing duty or not. Now also government says, so that is why this point has been put. The article is imported either in the same condition as when exported or after being changed. Instead of getting the mobile phone directly, you are changing that condition and you are importing. Then also countervailing duty will become applicable. Able to understand? So when countervailing duty will become applicable? When a country or territory subsidizes manufacture, production or exportation of an article, including transportation subsidies. And that article is getting imported into India. Either you are importing that article from directly from the country of manufacture or indirectly. Or you are importing the goods in the same condition or after changing you are importing. In all the cases, countervailing duty will become applicable. Sir, how much amount of countervailing duty the government can impose? Central government can impose a countervailing duty not exceeding the amount of subsidy granted on the article. So here, if the government wants to impose countervailing duty, how much countervailing duty they can impose? Only up to the amount of subsidy. US government is giving subsidy of 10,000 rupees. No, even countervailing duty also cannot go beyond 10,000. It should be up to 10,000 rupees only. Next, duration. Sir, how long government can impose this countervailing duty? Can they impose it forever? No, they can impose it only for a duration of 5 years unless revoked earlier, and it can be extended for a further duration of another 5 years. If a review is initiated before the 5-year period ends but it is not concluded, the duty may continue for up to 1 more year. If temporarily revoked, the revocation period cannot exceed for 1 year. So what is that is? Let me try to explain it. Say for example, the government has imposed countervailing duty for 5 years. The government has imposed countervailing duty for 5 years. So they can extend for 5 more years. No, if that government is still giving subsidy, they have a power to extend for 5 more years, but they have to review. Initially, they have imposed countervailing duty for 5 years. Now they have to review whether it has to be extended for 5 more years or not. They have to review. Now what they will do is, when the review is going on, they can extend it by 1 more year. Now within this 1 year of time, they will do review. 5 years are over. So now they will undertake review. If that review is undergoing for 1 more year, they can extend it till the time of review. When the review is undergoing, if the review is still pending, they can extend it up to 1 year. So after review has completed, if they felt that yes, 5 more years is still necessary, what they can do is they can extend by 4 more years, 1 year under review and 4 years further, 5 more years they can extend. Or if they felt it no longer necessary, what they can do is up to 1 year till the time of review, they can keep it up to 1 year. If after review, if they found that it is not necessary, what they can do is they can cancel it. What they can do, they can cancel it. Guys, able to understand? So initially the government can impose for 5 years. If they want, they can extend for 5 more years. So now government has to do the review whether for 5 more years it is required or not. They have to do review. For that review, it will take some time. No, they can't say, okay, we will stop now, we will do the review, then after we will impose it. No. So what they can do, if the review is undergoing, it will remain extended for 1 year. Now within that review, they will decide whether it needs to be extended or it needs to be cancelled. If after review they have decided that it needs to be extended, they can extend up to beyond 5 years. If they don't think it is necessary, once review is completed and they have determined that extension of 5 more years is not required, then they will drop it. Understood? So that is what the meaning here. Next, additional duty. Countervailing duty is in addition to any other duty. It is not a substitute for basic customs duty and all. It is an additional duty. Now they have defined, sir, you are telling if the government gives a subsidy, then this countervailing duty will become applicable. No. What is the meaning of giving subsidy? A subsidy is existing if there is a financial contribution from a government or a public body, either in the form of direct transfer of funds, or it could be in the form of incentives, or by way of providing goods or services. Subsidy can be in any form. That respective government can directly give the funds, or they can give incentives, or they will give the goods for manufacturing that goods free of cost. Or it could be even income or price support that increases exports or reduces the imports. So whatever it is, that subsidy can come in the form of price support or income support also. Next, circumvention of duty. Sir, what do you mean by circumvention of duty? One example I have already given you. If you are bringing mobile phones, but if you are bringing mobile phones, the government will impose countervailing duty. What you are doing is you are getting them in the disassembled condition. You are getting them in disassembled condition. So why you are getting it in the disassembled condition? In order to overcome it, in order to circumvent. Circumvent means what? Overriding, or if you want to overcome that. So that's why what you are doing is, instead of importing the mobile phones as it is, you are getting it in a disassembled condition. That means you are trying to circumvent the provisions of countervailing duty. Then also government will impose countervailing duty. Still, if you are importing in disassembled condition, then also the government will impose. Or one more example will be, if you are directly importing from USA, you will be required to pay countervailing duty. But instead of importing directly from USA, first you are bringing it to China. From China, you are bringing it to India. Here also you are trying to circumvent that countervailing duty. If the government finds it out, even if you are importing from China, then also the government will come and impose countervailing duty. Understood? So that is what the meaning of this paragraph. If the goods are modified, if you are changing the goods to circumvent the duty, to override the duty, either by changing the description or composition, or bringing them in assembled or disassembled form of origin, or then also the countervailing duty may be extended to the modified goods also. Clear? Next, Absorption of countervailing duty. Sir, what do you mean by absorption? Absorption means nullifying. Sir, what do you mean by nullifying? Say, for example, government is giving subsidy. That foreign government, if you are bringing the goods at the importer, actually the goods will get, the exporter will, goods will, he can sell at 40,000 rupees, 50,000. But government is giving subsidy. So government is giving him 10,000 rupees of subsidy. So what he is doing, he is bringing that goods into India for 40,000 rupees only. Now what the government has told, okay, you are bringing the goods at 40,000 rupees only. No, we will impose something called countervailing duty. 10,000 rupees we will impose. So now the cost will, for the importer, the cost will become 50,000 rupees. But what this importer has started doing is, he has increased the selling price. Previously, if there is no countervailing duty, what he used to do is, he used to get that article at 40,000 and sell it at 50,000. Now what this importer is doing is, when the government started imposing the countervailing duty, so now his cost has become 50,000. Now what he is doing is, now he has increased his selling price. He has increased his 60,000. He is selling the mobile phone at 60,000 now. That means even though the government has imported the countervailing duty, but it has been nullified. Even though the government has increased the import cost, but the resale price has not come down. Even the resale price has also gone up. That means it is not affecting the importer only. Even though government has imposed countervailing duty, but still it is not having the pinch on the importer. Why? Because he's not reducing his selling price, he's increasing his selling price and still making the same margin. So now what the government will do, government will increase the countervailing duty. So if the government felt that the goods are getting absorbed, the countervailing duty is getting absorbed. Absorbed means what? It is getting nullified. It is not having any impact on the importer. Then what the government will do? The government can take actions like increasing the countervailing duty. The government can say, now instead of 10,000, you will be required to pay 20,000 rupees of countervailing duty. Now the importer might be stuck here, because if he increases the price further, he will not be able to sell it. So in order to counter that absorption, the government can even make changes to that countervailing duty also. So that is what this point says. The countervailing duty the central government may modify countervailing duty if it finds that the duty has been absorbed, making it ineffective. This modification will be effective from the date of inquiry initiation. Sir, what do you mean by absorption? There is a decrease in the export price without corresponding decrease in the selling price, or under any other condition as prescribed by the law. No need to remember the definition and all. I hope you understood the concept behind it. Provisional countervailing duty, same like safeguard duty only. If the government is yet to decide whether really countervailing duty should be imposed or not imposed, pending that determination, they can do the provisional countervailing duty. If after that investigation and all, if they felt that there is no injury and all, that duty will be refunded. Next, same rule, whatever rule we have read for 100% export oriented unit, same rule will become applicable even for countervailing duty also. For safeguard duty, we have seen, no, if 100% export oriented unit or SEZ, if they are importing the goods which are subject to safeguard duty, they are not required to pay safeguard duty unless you are clearing it for home consumption. Unless you are clearing it in the domestic tariff area, same rule will become applicable even for countervailing duty also. So if you are imposing some subsidized article, if you are a unit located in SEZ or 100% EOU, and if you are importing some article which is subsidized, but using that article, you are either doing export or you are using it for manufacturing and then exporting, then there is no requirement to pay countervailing duty. However, if some portion, if you are bringing into domestic tariff area, on that portion you will be required to pay countervailing duty. Next, countervailing duty will not be imposed unless, that means countervailing duty will be imposed only if the following conditions are satisfied. If the subsidy relates to export performance, that foreign government, in our example USA is giving subsidy only for exports, then only we will impose a countervailing duty. If the USA government is giving subsidy even for the local consumption also, then there is no purpose of importing countervailing duty. If the USA government is giving subsidy to their manufacturers only for the purpose of export, then only there is a need for countervailing duty. If the US government is giving subsidy even for domestic consumption also, then they are not specifically targeting exports, then there is no purpose of imposing countervailing duty. So subsidy relates to export performance. Subsidy relates to domestic goods over imported goods in export articles, or which this point, what do they mean by this is, US government is giving subsidy for local manufacturers for using local goods instead of using imports. US government is giving subsidy. So what they try to say here is, the government can impose countervailing duty only when that export country, in our example USA, is giving subsidy for only exports, or what US government is doing is, they are giving subsidy to their local manufacturers to encourage domestic usage instead of imports. Then also government can step in and impose the countervailing duty. So what do you mean by this is, say for example, in India, we have some imports in US. We can send some goods to US. You are selling some goods to the US. But what the US government has started doing is they have started giving incentive to their local manufacturers. Don't use imports. You use local manufacturing only. Then we will give you some subsidy. So like that, if you came to know, then also government can say, okay, you are giving subsidy for our imports now. When you want to export to our country, we will impose you countervailing duty. Then also you can impose countervailing duty. Or subsidy benefits a limited group except for specific exemptions like research, disadvantaged regions, and environmental adoption. Guys, I don't want you to undergo into deep logics. Why? Because this much is not important for your examination. Just you have to mug up this. So when countervailing duty will be imposed? So countervailing duty will not be imposed unless, that means if countervailing duty has to be imposed, it will be imposed only when these three conditions are satisfied. What are they? Either that subsidy should be relating to export performance, that subsidy relates to domestic goods over imported goods in export articles, subsidy benefits a limited group except for specific exemptions. So I don't want to go into the details. Even if I go into the details, also not that important from the examination perspective. Next, retrospective levy. Countervailing duty can be levied retrospectively also if injury to the domestic industry is caused by massive imports or subsidized goods. The duty can be applied up to 90 days before the notification date. So what the government can say is, today they will release a notification, but even they can say whatever goods which are imported in the previous 90 days, on that also we will impose a countervailing duty. That also government can say. Retrospective levy also they can do. And central government may make rules for identifying subsidized articles, assessing and collecting countervailing duty. So how to identify the subsidized articles, how to calculate the amount of that CVD, all that government can make rules. And whatever laws that are applicable for basic customs duty, all that rules and regulations will become applicable even for countervailing duties also. Clear? Able to understand everybody? Right. Right. So now next thing we'll try to understand anti-dumping duty. Once again, very easy to understand. This also I will tell you background logic. Everything will remain same like countervailing duty and safeguard duty only. So I will tell you when this thing anti-dumping duty will come into picture. Say for example, China is there. China has manufactured mobiles in very large quantities. China has manufactured mobile. Actually, they used to do very large scale manufacturing of the mobile phones. And they used to consume it in the local market also. But recently what happened is, in China, there is some recession. Just example say guys, in China, there is some recession. Because of that, they are not able to sell the mobile phones in their local market. In China, they are not able to sell it. Or some calamity has taken place, some natural disaster has taken place, whatever it is. Because of this reason, they have a huge quantity of manufacturing. They have a huge amount of supply. But they are not able to sell them in their local market due to various reasons. Like as I've told, it could be recession, it could be natural calamity, it could be war, whatever it is. They are not able to sell that huge quantity. So if they are unable to clear that stock, they are going to face a huge loss. It is going to add up even to the bad consequences on the economy. So somehow they want to clear that supply. Whatever that huge quantity of supply of mobile phones they are having, they want to clear it. So now what they have started doing, they have started dumping it into India. So they have started giving huge discounts because they have to clear the supply. No. So they are not worried about the losses. So they have reduced the price. They have cut down the price. Say for example, this product can be sold at 20,000 rupees. But since the supply is very much higher, they have to clear this stock at any cost. So what these Chinese manufacturers have started doing is they want to dump all the stock into India. So they have reduced the price very much, 10,000 rupees, whatever used to cost at 20,000 rupees, they have reduced their export prices. Now by cutting the prices to half, they are dumping these mobile phones in huge quantities into India. They're dumping these huge quantities into India. So because of that, local mobile manufacturers might face huge damage, huge loss, and they might face huge consequences. Now also government has to take some action. No? So how the government will take action is, government will impose on this something called anti-dumping duty. They will impose something called what? Anti-dumping duty they will impose. Sir, how much amount of anti-dumping duty they can impose? They will calculate something called dumping margin, or margin of dumping also you can say. They will calculate something called dumping margin. Sir, what is this dumping margin? They say dumping margin is normal price minus export price. Normal price minus export price. Sir, what is normal price? So if normally that product has to be sold, that could be sold at 20,000 rupees. But in order to do the dumping, they are exporting it at 10,000 rupees only. So here this 10,000 rupees is the dumping margin. Now what Indian government will do is, on that imports, they will levy something called anti-dumping duty at the rate of 10,000 rupees in order to tackle this bad trade practices. Understood? This is what the entire concept of anti-dumping duty, and all other rules and regulations will remain same like whatever we have read for safeguard duty and all, everything will remain the same. Only here and there a few points will get added. I think with this background understanding, we can read that anti-dumping duty as well. Okay, shall we do it, everyone? So let us do it. So if we start reading it, anti-dumping duty, section 9A. Dumping occurs when goods are exported at a price very much lower than their normal value, which distorts trade, which damages the trade. Anti-dumping duty is imposed to counter this unfair trade practice and ensure fair competition. So when this will be imposed, when anti-dumping duty will be imposed, so what are the conditions? An article is exported at a lower price than its very normal value, and this article is getting imported into India. Sir, how much amount of anti-dumping duty can be imposed? Central government can impose a duty up to margin of dumping. Sir, how to calculate that dumping margin or margin of dumping? Difference between normal value and export value. Sir, what is normal value? So if that product is getting normally imported, in normal conditions, if the product is getting imported at 20,000 rupees, so normal price will be 20,000. Say for example, till now from China, we did not import only. Till now from China, we did not import only. That means the same article is not getting imported into India. Then how to calculate the normal value? Some comparable article compared to that thing. If any other comparable article, if any identical article is getting imported, that its value we can use. So that's what they say. Normal value, the comparable price for the same article in the exporting country. In case if you are already importing from China, in previously also we used to import, that we can take it as normal price. But say for example, if we never imported mobile phone from China, then what you can do is other same article we can use it. If instead of mobile phone, if there is some other similar article, what is that similar article? It depends on facts and circumstances. If you are importing some other similar article, that price you can take it. If that is also unavailable, sir, even if the same article is also not available, sir, we are not importing any kind of product from China, then what you could do? Then you have to determine it on the basis of cost of production in the country of origin. So basically in China, you need to determine what will be the cost of production of that mobile phone. On that, you will add normal margin percentages and all, and then you will calculate the normal price. If same article is getting imported, we will use the same price. If same article is not getting imported, we will use a comparable article. If that is not at all available, then what we do? Then using the cost of production and normal profit margins of that in the foreign country of that exporter, we will somehow arrive at the normal price. Next. So margin of dumping, they are telling it is normal price minus export price. So normal price we have calculated. So then what is export price? How to calculate the export price? Comparable price of the like article in the exporting country for domestic consumption determined as per 9A sub rule 6. So according to at what price that foreign country is importing into India. So that export price will calculate. If no such a sale exists or not comparable due to market conditions, normal value can be the price of the like article exported to an appropriate third country or the cost of production in the country of origin plus reasonable addition for administrative, selling and profit cost. So once again, if you are unable to determine that, you can use comparable article. If comparable article is not available, you can go for cost of production, and to that you can add reasonable level of selling and profit cost. So this point you ignore it. In case of transshipment or when article is not produced in country, normal value is determined on the basis of country in origin. So all these points you ignore it. I don't want to unnecessarily complicate the things. Just you remember normal price minus export price. They will give it in the question itself. In the question itself, they will say if at all they want to ask a question regarding the anti-dumping duty. In the question itself, they will say what is the normal price, what is the export price. In the question itself, they will try to tell you. You can easily calculate it. Okay, next. Duration of imposition, same like countervailing duty. So like it can be initially imposed for 5 years, but can be extended by 5 more years. If review has to take place, it can remain valid for 1 year pending a review. Circumvention and absorption. If you are trying to circumvent, how you can circumvent? By doing the disassembled or assembled condition, by involving some other country. I told you in the previous example, right? So if you are trying to circumvent it, or if it is getting absorbed, the government can modify that anti-dumping duty. Provisional duty, if final determination is pending, the government can impose provisional anti-dumping duty also. Same exemption will become applicable for 100% export-oriented units or SEZ units, whatever we have read in the previous two things. Retrospective levy, like countervailing duty, even anti-dumping duty also can be levied retrospectively, same 90 days. So if there is a history of dumping causing injury, the injury is caused by massive dumping over a short period, the duty can be levied up to 90 days before the notification date, and whatever rules and regulations that are applicable for normal basic customs duty, all that rules and regulations will become applicable for anti-dumping duty also. Clear? Next. So we have one more rule, refund of anti-dumping duty in certain cases. Say for example, you are an importer, you are required to pay anti-dumping duty. So government has calculated. Government told that a normal price is 40,000 rupees, but the export price is 30,000 rupees only. You are required to pay 10,000 rupees of anti-dumping duty. You paid it. You want to clear the goods for home consumption. So you paid that anti-dumping duty of 10,000 rupees and clear the goods for home consumption. But you know that, but you have a strong belief that government has calculated the dumping margin wrongly. Government has made some mistake in calculation. But you are in urgency. You have to clear that goods for home consumption. So you paid anti-dumping duty and cleared the goods. But you strongly object to this calculation. According to you, the normal price is 40,000, whereas the export price is 35,000. You are liable for only 5,000 rupees of anti-dumping duty, but the government collected from you 10,000 rupees of anti-dumping duty. So now what you can do is you can go and request to the proper officer, submit the proofs, submit the evidences, and if the government is satisfied, they can give a refund of that excess anti-dumping duty which they have collected from you. So that's what they say. If an importer pays anti-dumping duty in excess of the actual margin of dumping, they can request a refund for the excess amount. Conditions for refund. When the government will give you refund, the importer must prove to the central government that they paid excess anti-dumping duty, and excess duty must be more than actual dumping margin, and refund is not applicable for amounts already refunded under 9A sub rule 2. You can ignore this. If the amount is already refunded, you can't make a double claim and all. Government's role, the central government will reduce excess duty as soon as it determines the actual margin of dumping, and it will authorize an officer to dispose of the application and determine the excess duty. The moment they receive the application, they will take all the measures. They will appoint one officer to calculate the amount of margin correctly, and if they found it excess, they will give you refund. Refund process. After determining excess duty, the Deputy Commissioner of Customs or Assistant Commissioner of Customs will refund the excess duty amount to the importer. Important for MCQs and all. Who will give refund? Deputy Commissioner or Assistant Commissioner. So what are the rules and regulations? Central government may create rules to determine the manner and time for the importer to apply for the refund, within what time you have to make a claim, in what manner, which form you have to submit. All that government will make rules, and it will also authorize the officer to handle the applications and determine the customs duty. Next, in some cases, there will be no levy under 9 or 9A. Sir, what is this 9 or 9A? So 9A is talking about this anti-dumping duty. 9 will be talking about the countervailing duty. So sometimes what the government will do is, government will neither impose countervailing duty, neither they will impose anti-dumping duty. When, sir? Very simple. If you have a favoring nation, if you have a friendly nation. So if there is a dumping happening, but that dumping is happening from a friendly nation, or if that, see, we all have World Trade Organization, no, even India is also a member. So like that, other countries also are there who are there with World Trade Organization. So if there is another country which is there with World Trade Organization, you are also a part of World Trade Organization. Or if there is some friendly nation from that country, dumping or subsidizing is happening, then the government can say, okay, it is our friendly nation only. No, in our difficult times, they have helped us. Let us help them in their difficult times. Let us not impose a countervailing duty. Let us not impose the anti-dumping duty. Government can take decision, but subject to some conditions. See, government will give relaxation. Government will try to do the favor to the other country if we are not in the deep grave. If our industry, the government can't go to such an extreme to damage our entire domestic market and do a favor for the foreign country. Government can't go to that extreme. It is okay till the stage our industry is not getting affected. They can do the favors for our friendly nations. But even with the friendly nations also, if they are doing such a favor where our domestic industry itself is crashing altogether, such a favors government should not do. So that's what they even say. In case of friendly nations, in case of World Trade Organization members, the government can take a decision of not imposing countervailing duty or anti-dumping duty, but so long as a domestic industry is not in complete danger. So that's what they even say. Number one, first thing, no double levy. The government cannot impose both countervailing duty and anti-dumping duty simultaneously. They can't impose both. Either countervailing duty or anti-dumping duty, any one only they can impose. Both simultaneously they can't impose. So that's what they say. Articles cannot be subjected to both countervailing duty and anti-dumping duty for same situation of dumping or export subsidization. Any one, either countervailing duty or anti-dumping duty. Exemptions. No duties will be levied if the article is exempt from duties or taxes in the country of origin, or if there is a refund of such duties or taxes. What does that mean is, say for example, this example I have already told, US is giving subsidy. For example, in US, huge stock of mobile phones is there. Sorry, China we have used, no? Say for example, China is there. In China, there is a huge pile up of stock of mobile phones manufactured. Now the Chinese government somehow wants to clear that stock of that mobile phones. So what they are doing is, they are giving subsidy. They are giving subsidy in the domestic market also. If the manufacturer is selling that goods in China, then also they are giving a discount. And if the manufacturer is giving export, then also they are giving a subsidy. So that means China is not having any intention of dumping all their stock in our country only. So if there is such a situation where only exports are not getting favored, same benefits are given for even local manufactured products also, on local consumption also, then the government will not take an extreme decision of countervailing duties or anti-dumping duties. However, if the government comes to know the other country's intention is purely to dump all their stock, purely to encourage only exports of that respective country, then the government will take extreme action of countervailing duty or anti-dumping duty. So that's what they say. If the article is exempt from duties or taxes, even in the country of origin, not for export, even in the country of origin also, same exemptions are there, same refunds are there. Or if you are importing from WTO member, World Trade Organization member countries, or countries with the most favored nation agreement with India, unless it is determined that import causes or threatens material injury to the India's industry. So we can do favors to other countries so long as our industry is not in complete danger. And also on imports from specified countries, unless there are preliminary findings of subsidy or dumping and a determination that a duty is necessary to prevent injury from during the investigation, blah blah blah. So once again, you can even import, the government will even take a decision if you are importing from specified countries, but so long as it does not cause damage to our local industry. However, subsection 2 and 3 do not apply if a countervailing duty or anti-dumping duty has already been imposed to prevent injury to a third country's domestic industry exporting similar goods to India. So that means if the countervailing duties are already imposed to prevent injury to a third country's domestic industry exporting similar goods to India. That means, say for example, if you have already imposed on that article, say for example, on Vietnam, you have already imposed countervailing duty or anti-dumping duty is already imposed on Vietnam because they are dumping these mobile phones in large quantities. If you have already done to a third party, if you are already done to a third country's domestic industry, so you have to do it even for China also. Okay, so once again, not that important from the examination perspective. So simply they say subclauses 2 and 3 do not apply if a countervailing duty or anti-dumping duty has already been imposed to prevent injury to a third country's domestic industry exporting similar goods to India. Next, the central government may not levy countervailing duty under section 9 if exporting country or exporter voluntarily undertakes to eliminate or limit subsidy or revise price, and if government is satisfied that subsidy's harmful effect is removed. So nothing but if the exporting country, if we started imposing countervailing duty or anti-dumping duty and that country has voluntarily undertakes, that country has came forward. For example, our government started imposing countervailing duty on China. So China has accepted their mistake and they voluntarily came forward and told, sorry sir, we will not give so much of subsidy. We will limit our subsidy. We will rectify our action. We will make sure that there is no dumping or subsidy happening. If the country came forward and take the action, then also we don't impose countervailing duty. Or anti-dumping duty under 9A if an exporter voluntarily agrees to revise prices or stop exports at dumped prices and if the government is satisfied. So either the government or the importer, they came forward and they have agreed to rectify their mistakes and they have agreed to increase the prices and all, then also government will stop imposing countervailing duty and anti-dumping duty. Next, rules for investigation. Central government may make rules for the investigation process, including how investigations will be carried out, what factors to be considered during the investigation process. And export duty, till now whatever we have seen, all that is relating to imports, and whenever you are making exports, on that exports generally duties are exempted unless in special cases. So that's what they say. Export duty is generally not levied on exported goods. However, the government imposes export duty on certain goods like leather goods, ferrous waste and scrap, snake skin. Export duty is applicable in cases where the goods are outside the scope of GST. Like example, alcoholic liquor for human consumption. Even if you are exporting the goods which are outside of the purview of GST, if you are exporting alcoholic liquor for human consumption, then the government can impose export duty on that. So except in few circumstances, generally export duties are exempted. Only in few cases, export duty will be imposed. Understood? Clear and comfortable, everybody? Right. See, just one small thing. See, I want to change my explanation. I think I have given here wrong explanation. So we have taken this point fast. So I will tell you. I will try to re-explain this. Okay. Yeah. Sorry. So I told that if you are importing from friendly nations or if you are importing from WTO members, generally we don't impose anti-dumping duty or safeguarding duty, no. But they have told that second and third point will not become applicable in some circumstances. In which circumstances? So what do they mean by here is, say for example, Russia. So in India we have India has started giving subsidy for exports. India has started giving subsidy for their exports, or they are doing dumping. They are doing dumping. So Russia is a friendly nation. Russia is a friendly nation. It is also a World Trade Organization member. It is our fellow partner in the WTO. So now what they are doing is, generally, if we are importing the goods from Russia and all, unless there is a damage to our domestic industry, we don't impose countervailing duty or we don't impose anti-dumping duty. Yes or no? But what they're telling is this will not become applicable when, because say for example some third country is there, China is there, okay, developing country they use, sorry, third country, say for example China is there. So in India we are not importing, we are not importing countervailing duty, or on imports from Russia we are not imposing countervailing duty, we are not imposing anti-dumping duty, since Russia is a friendly nation. So what Russia has first done is they tried to dump all their goods into China. They try to dump all their goods into China. So, but what China has done is, in order to protect their local market, in order to protect their domestic industry, so what China has done is they have started imposing anti-dumping duty and countervailing duty. This is a third country. Russia is a friendly nation. So what Russia first started doing is they started dumping all their products into China. But what China has done is they have imposed additional anti-dumping duty or countervailing duty to protect their domestic market. Now Russia is having no chance to dump their products into China. Now they have only one route, which is what? India. Which is what? India. Now that rule will not become applicable, even though it is a friendly nation. Now, why that rule is not applicable is, why this friendly nation or World Trade Organization rule will not become applicable is, since China has already protected its market, now dumping will happen at a increased pace. Now dumping, they will do aggressive dumping into India. Why? Because China have their own measures at place. So now we will be at loss, no, in this extreme step. So if that is the case, even though Russia is a WTO member, even though Russia is a friendly organization, still the government has to impose anti-dumping duty or countervailing duty. Why? Because some country has already taken measures. Now we have to face all the heat. If we still allow if we still allow importing without this additional duties and all, we have to face the heat. So that's why government told here that 2 and 3 will not become applicable. Okay, so this in a hurry I missed out some point, so I thought of clarifying it. Why? Because some students, this is not important. Once again I will tell you, this question they will not ask you in the examination. There is no chance of asking this question, but still I don't want to leave with some, I think I told something else here, so but I wanted to clarify it. Okay, right, so that's all. This is what regarding various types of duties. Clear everyone? Bye, take care. Hey my dear students, hope you guys are all doing good, hope you guys are all perfectly fine. So let us resume our discussion, let us proceed ahead in the topic of customs. So let us have a quick recap of what and all we have discussed in our previous session. So if I'm not wrong, in the just previous session we have understood what are the various kinds of duties which can be levied under customs once you are importing or exporting. What and all are different kinds of taxes which the government can impose on you. So all that things we have understood. Different kinds of duties we spoke about. If we have a quick recap, so first there will be something called basic customs duty, and that basic customs duty can be imposed in two ways. Either that customs duty can be calculated on ad valorem basis, that is on the basis of value, a certain tariff rate, a percentage will be prescribed that you have to multiply on the value, then you will arrive at the customs duty figure. On the other hand, it could also be a specified duty, or even you can call it as a specific duty or quantity based duty also, you can say, where the government will say a fixed amount of duty you have to pay for certain goods and services, and in some cases it could be even combination, also a combination of ad valorem and specific, both collectively also can be imposed. So that is the first and foremost levy which will happen in the customs, which is basic customs duty. Then we have something called social welfare surcharge. And this social welfare surcharge, the rate is fixed 10%. This 10% is not on the value. This 10% is going to be on the customs duty. So whatever basic customs duty you will pay, no, on that 10% will be multiplied the resulting figure which you get, that we call it as a social welfare surcharge. And apart from that, what else are there? What else are different kinds of duties? So even you have to pay IGST. So whenever you are making an import, in addition to that, you are required to pay IGST. And on what value you have to pay IGST? So there will be something called transaction value will be there. On that basic customs duty we will add. On that social welfare surcharge we will add. Apart from that, if any other duties are there, like safeguard duty or if there is any protective duty, or if there is any other kind of duty, like we have discussed anti-dumping duty. So all that duties we have to add, then we will get one figure. On that figure you have to multiply the applicable rate of IGST. Not just that, in addition to IGST, you are also required to pay GST compensation cess at the prescribed percentage, and this percentage also will be multiplied on which value? On this value. So that value of import, on that whatever customs duties, social welfare surcharge, and all other duties, after adding that, whatever figure you get, so on the same figure you have to multiply IGST, on the same figure you have to multiply even GST compensation cess also. Then after that we have seen safeguard duty. When the government feels that certain items are getting imported in larger quantities which create a danger to the domestic market, then they can take safeguard measures. What kind of safeguard measures they can take? They can take they can start imposing safeguard duty, or they can have even tariff rate quotas. So safeguard duty means generally they will impose, in addition to basic customs duty, some additional duty also they will impose. However, if you are importing from a developing country, then it will not be imposed. However, there are limits. From each developing country, it should not exceed 3%. For all developing countries put together, the aggregate limit is 9%. Next, even they can impose a tariff rate quota also, that we have discussed in our previous session. Then apart from that, they can also impose something called countervailing duty on subsidized articles if the government feels that some foreign government is giving subsidy for the purpose of exports, to encourage the exports and all. And so that because of that, so many goods are coming, since it is available at a subsidized price. People in India are importing that goods in larger quantities than when compared with the domestic quantities, domestic goods. Then the government can impose something called CVD, countervailing duty on subsidized articles. And along with that, the government can also impose something in the name of anti-dumping duty if it feels that some countries or some manufacturer is dumping the goods in our country, because of which there is a danger to the locally manufactured products and all. Then they can impose something called a anti-dumping duty. And a few important points here and there. See, either there will be countervailing duty or anti-dumping duty. Both cannot be imposed simultaneously. On a single import, you can't charge both CVD and anti-dumping duty, anyone. So either there will be countervailing duty or there will be anti-dumping duty. Both cannot be imposed simultaneously. And also, if you are if the goods are getting imported from friendly nations or from World Trade Organization members, so then also countervailing duty and anti-dumping duty will not be imposed, provided to the extent there is no danger for the domestic industry. So like this, a few important points are there. So all that we have covered in the previous session. Now we are coming to the most important part, which is valuation. This is from where the question is going to come in the examination. This is where the question is going to come in the examination. So which is regarding valuation rules. Let us try to understand what are these valuation rules. What does the chapter speak about? Let us try to have a brief about that. See, this chapter is going to be very similar to the value under GST. In the GST chapter, in the GST concept, if you remember, we have understood something called value of supply, where we have explained section number 50. So what we have in fact learned in the value of supply under section number 15 of the CGST Act. So there we have learned how to determine the value of supply. So basically, as we all are aware, if you want to know what is the amount of GST you are required to pay, so there will be value. On that value, you have to multiply the percentage of GST which is applicable. Then you will get one resulting figure. That figure we call it as GST. That is the amount which you are required to pay. See, percentage we can find it out from the rate chart. So once you find the HSN code of the goods, you can find the what is the rate of GST applicable on that. But you need to determine value. In order to know what is the amount of GST, you need two things. One is you need to know what is the value at which the transaction has taken place, and also what is the percentage. These two things you have to know. So percentage we can easily find out from the rate chart once you get to know about the HSN or SAC code of the goods or services, but we need to determine value. Sir, how to determine value? So we have seen in the GST, so that value is nothing but transaction value. So to that value, certain items will be added. To that, from that value, certain items will be excluded, like discounts and secondary post supply discounts and all. So all that discussion we had in the value of supply chapter, similar kind of discussion we are going to have even in this topic of valuation under customs. So when I say for example, you are a person residing in India. So from a foreign country, you have imported the goods. From a foreign country, you have imported the goods. So when you have imported the goods, you are required to pay basic customs duty and all other kinds of duties, whatever we have discussed in the previous session and all, right? So if it is a ad valorem duty, you have to determine what is the value. So on the value, if you multiply that tariff rate, then you will get the customs duty figure. So here also we need to know how to determine that value of that imports or exports. So if you are importing, as I've told, when you are importing, you are required to pay duties. In exports, in majority of the cases, duties will not be there, but in some exceptional cases, there will be even duties on exports also, like we have seen in the previous session, leather goods and all. So on specified items, there will be duty. So whatever it is, whether it is import or whether it is export, if you are required to pay customs duty, you need to determine what is the figure of the customs duty. To determine what is the figure of the customs duty, you need to determine what is the value of imports or exports. So how to calculate that value, sir? How to calculate that value? That is what the discussion going on in this chapter. So like the way we have discussed how to determine the value of the supply so that we can calculate the GST figure, in the same manner, in this chapter, we are going to learn about how to determine the value of imports and exports so that we can determine what is the amount of customs duty. Able to understand? So that's what the discussion of this, that's what the discussion we are going to have in this entire chapter. Clear and comfortable, everybody? So since we understood what we are going to deal in this chapter, so first we will try to understand how to determine value in the case of imports. As I was saying in the previous session also, main discussion, whatever we are going to have in the customs, that is only regarding imports. On exports, in majority of the cases, there will be no duties. If at all there are any duties, the procedures and complications are not there. Very simple procedures will be there. But where all the complications are going to come is in the case of imports, there are so many complications, so many interpretations, so many things which we have to keep in mind. So first we will talk about, in case if you are importing for the purpose of payment of customs duty, how to determine the value, that we will try to understand. So I will try to give the entire structure. First we will try to understand the entire concept, then we will try to read the material. Okay, first I will give you the overall structure. Say for example, there is a person in India. Okay, so there is a person in India. Now this person wanted to import some goods from, say for example, from USA. He wanted to import some goods from USA. He wanted to import some goods into India. See, as a process, as a part of this import, there are various costs, various expenses, various things which will happen. This import will not happen for free of cost. At various prices you are required to pay, various expenses you are required to incur. So all that things has to happen. So we have to understand the technical terminology. Okay. So now, who is exporter here? He is the exporter. A person is there in USA. Say for example, there is a person, Mr. John. So Mr. John is an exporter. He is exporting the goods from USA to India. So Mr. Ram is in India. He is an importer. He is a what? He is an importer. He is importing the goods into India. And who is exporter? Mr. John, who is in US. That person is an exporter. He is exporting to India, and this person is importing. Now what will happen? See, what John has to do is, say for example, some goods are getting purchased. Now what this John will do? He will have a factory. He will have one factory. He will have his factory. Now in his factory, in his company, whatever it is, the goods will be there. The goods will be manufactured. The goods will be prepared. Now these goods are required to be brought to port. These goods are required to be transported. No. So now these goods are required to be brought to the port, either airport or vessel, whatever it is. So they have to come to USA port. In US there will be customs authorities. Like in India we have customs authorities. In US also they will have customs authorities. So this John, whenever he wants to export the goods, he will make the goods ready in his factory or at his company, and he will bring the goods to the US port. Either that could be a ocean port or it could be a airport, whatever it is. Now, so after by bringing the goods to the port, what he will do? He will load that goods at the port, at the customs port of US. He will load the goods. He will do the loading. He has to incur all the transportation cost and all. Now what that goods will do? Now that goods has to come from US port to the place of importation. To the place of importation. Okay, say for example, here we have Vizag. At the Vizag port, it has to come. Okay, so okay, let me do one thing. So from the US port, they have to come to the Vizag port. Say for example, the goods are coming in a vessel. The goods are coming in a vessel. So these all goods are loaded on a vessel, and this vessel from US port, it has to come to Vizag. So Vizag is a port of importation. Vizag is what? Vizag is a port of importation. Yes or no? Guys, I'm introducing the technical terminology. See, the concept will become very, very easy just to follow the terms, whatever I'm using. So an exporter from his factory, he will bring the goods to the export port. From there, the goods will be loaded on a conveyance, on a vessel, on an aircraft, and that conveyance will come to the place of importation. That conveyance will come to the place of importation. Now what will happen? See, now what and all are the prices which are involved? At factory, price at the rate of factory. See, when exporter has to send the goods, when this person is selling the goods, he will have his price. No, he will quote the price. Say for example, he will say 1,000 rupees, $1,000 per product. Like that, some pricing will be there. No, say for example, some X is the pricing. So price at factory. Say for example, he's saying at factory the price is $1,000. Each unit he is selling it for $1,000. So that will be the price at factory. So that will include cost, his profit margin, everything he will add, and he will quote a figure. So that we call it as price at the factory. Now, in order to bring that goods from his factory, to the export port. So from its factory, he has to bring it to the US port now. So what he has to incur? He has to incur some transport charges. He will incur something called transport charges. Some X figure he will incur. Okay. Then after that, these goods are required to be loaded. So transport cost, he will bring all that goods to US port. Now at the US port, these goods are required to be loaded into the conveyance. No. So loading charges will be there. What will be there? Loading charges also will be there. So he will also incur loading charges. So now by incurring all these expenses, price at the factory, transportation charges he will incur. After that, loading charges also he will incur. Now the goods are brought on board at the export port. Now the goods are brought on board at an export port. What is an export port in our example? At US port, the goods are ready to move from US to India. So that price, after adding all this, whatever figure we get, that we call it as free on board, FOB price we call it. What do we call it? FOB we call it. Free on board we will call it. What do we call it, guys? Free on board. See, this term you hear it very often. So yeah, I'm making you very familiar with the concept now. So how to calculate the free, how to arrive at the free on board? Price at the factory, that local transportation cost from bringing the goods from factory to the export port, and at the export port you have to load all that goods into a conveyance. At that point of time, the goods are boarded on a conveyance at an export port. So at that point of time, whatever price is there, that we call it as free on board. So after adding all these three things, that figure we are going to call it as free on board. Okay, now the goods are here at the US port on free on board, free on board price. Now these goods are required to be moved from US port to the place of importation, to the Vizag they have to come, no? So now you tell me, compulsorily two cost has to be incurred. From the US port, if the goods have to come to Vizag, compulsorily two kinds of cost will have to be incurred. Without that two cost, that movement will not happen. Sir, what are that? Two compulsory things which has to be incurred, two compulsory cost which has to be incurred in order to bring that goods from the US port, from the export port to the import port. One is transport charges. So from US port to India port, no one will bring it free of cost. No, you have to incur transport cost, transport, loading, unloading, and handling charges. Up to the place of importation. Up to what stage? To the place of importation. That's what they say. Or to the port of importation also you can say. To the port of importation. Up to the port of Vizag. In our example, import port is Vizag. Till the point of that Vizag port, whatever transport, loading, unloading and handling charges you have incurred. Without that, the goods will not come. That we simply call it as freight. Let us call it as freight. So when I say freight, what and all is included here? So transportation cost from the exporting port to import port, in between any loading charges, in between any unloading charges and any handling charges up to the place of importation, that has to be compulsorily added. So that we will call it as freight. For the time being now, we call it as what? Freight. And in addition to that, these goods will move from foreign port to Indian port. See, always risk will be there when you're causing the movement. High value of the goods are getting imported and exported. During the transit, damage also could happen. So that's why, as per the authorities also, as per the laws and regulations of the countries also, unless you take the insurance, unless you pay the unless you insure that goods which are getting moved, they will not clear the customs procedures. So that's why compulsorily, if that movement has to happen, you have to incur insurance cost. What you have to incur? You have to incur insurance cost. So compulsorily you have to incur freight, compulsorily you have to incur insurance to the place of importation. In order to bring it to the place of importation, till the place of importation, you have to incur the insurance cost also. So you get FOB. To that FOB, two things you have to compulsorily add. Freight you have to add, insurance you have to add, compulsory addition you have to do. Then you will get one figure. That figure we call it as CIF value, cost, insurance, freight value. What do we call it? CIF value we call it, cost, insurance, freight we call it. And in fact, this is the assessable value. This is the value on which the customs duties will be levied. On this value, we are going to multiply the percentage of the tariff rate. Able to understand? Clear and comfortable, everybody? So what did I say till now? So what is the most important figure? What is the figure on which we are going to multiply that rate of customs duty on the CAF value? That is what we even call it as assessable value. Able to understand? So how to arrive at the CAF value? We have to first arrive the free on board FOB. In most of the questions, they will give in the question itself. They will start the question in fact with the FOB value. But two items must be compulsorily added. These are all compulsory. These two are compulsory. So two items must be added. Compulsorily, it should be added in order to arrive at the CAF value. So what is that? Transport, loading, unloading and handling charges up to the place of the importation, which we call it as a freight in simple. Along with that, insurance charges that have been incurred to the place of the importation. So that also we call it as insurance. And if when you add that two figures compulsorily, you have to do that. The resulting value, we call it as CAF value or assessable value. CAF value is basically assessable value. On that, the rate of customs will be multiplied. Okay, but here there are few things which we need to keep in mind. See, generally in the questions, what they will do is they will say FOB. What is the FOB value? Say, for example, they told 1 lakh worth of goods are imported. What did I say? In order, first we have to arrive at the CAF value. In order to arrive at the CAF value, we have to compulsorily add. Compulsory. In all the cases, it is compulsory. Compulsorily, you have to add the freight, you have to add the insurance. Say, for example, in one question or in one case, they have given FOB value. 1 lakh they have given. Now, in the same question itself, or as per the customs authorities or whatever it is. So, say freight. First, we will talk about the freight. Freight is given. Freight is actually given in the question itself. All freight you can determine. The freight you can determine. Or in some cases, what will happen is freight will not be given. Or freight is not determinable. You are not able to determine the freight figure. They have not given any information. See, now what they have told us, say for example, if in the question itself they have told the freight which has been incurred is 10,000 rupees. If it is given, we'll talk about it later. So if the freight is already given in the question, what we will do, we will take that freight. But sometimes what they will say is, they will only give a FOB value. They will not give any information regarding freight. Say for example, freight value is not determinable. Then what you should do? Freight value has not been given. Sir, can I ignore it? Can I continue without adding the freight to calculate the CAF value? No. Why? Because what did I say? Two compulsory additions must be done. Freight compulsorily should be added. Sir, but freight is not given, sir. Then what I should do? If the freight is not given, then what the Customs Act says is, if the freight is not given, take freight as 20% of FOB. What they have told? 20% of the FOB you have to calculate. That itself will be deemed as freight expenses. You can't simply say, sir, freight figure is not given in the question, I will not add it, only I will add insurance. You can't say that freight is compulsorily required to be added. If not given in the question, if not determinable on the basis of the documents, you have to take 20% of the FOB itself as a freight. Able to understand? Clear and comfortable, everybody? Now, sir, what if freight is given? Say for example, in one question they have told FOB is 1 lakh rupees, whereas in freight charges, transport charges is somewhere around 30,000 rupees is the transport charges. 30,000 rupees is the transport charges. Now freight has actually been given in the question. Then what we should do? Here we need to do one more thing. What we need to do is, we need to check whether the transportation is happening by way of vessel or by way of any vehicle. That means by water or by land, if the transportation is happening. And the freight figure is actually given in the question itself. Take whatever has been given. Whatever actual expense that has been given in the question, that we will add. But however, if the freight has been given and if the transport has taken place by way of air, if the transportation is happening by way of air, and freight expenses is also given. But here what they say here is, in case if it is happening by way of air, actual freight or 20% of the FOB, whichever is lower. If it is happening, if the transportation is happening by way of air, either actual freight expenses or 20% of the FOB, whichever is lower, that much amount of freight only should be added. Able to understand? Sir, why? What is this? What are you trying to convey here? See, when the movement of the goods is happening by way of air, it will be costly, no? freight expenses will be higher when you want the movement of the goods. See, generally when you will opt for air transport, when you have little emergency, when you want the goods at least time available, then you will generally opt for air. So air expenses, air freight will be little bit higher. So when you take that actual air freight, what will happen is the value CAF will increase. See, when the freight expense is increasing, what will happen? CAF value will increase. When the CAF increases, customs duty also will increase. No, that means it will make the import even more and more costly, right? So by putting a restriction, so they say that in case of air freight, either actual or 20% of the FOB, whichever is lower. By putting a restriction, they are actually doing a favor on the importer. On the SSC, they are doing a favor. Boss, we know airport air freight expenses will be higher, but if we ask you to add that actual air freight expenses, the assessable value will be very higher. Customs duty which you will be required to pay is very high. So that's why we are doing a favor on you. If you are causing the movement of the goods by way of air, either take actual or calculate 20% of the FOB, whichever is lower, that much if you add it as freight, it will be enough. Clear? Able to understand? However, if the movement is happening by way of vessel or vehicle, that is by way of roadways or land, then whatever actual expense is there, that you have to add. There is no restriction, you have to add it. Understood? Sir, if it is not given, whether water, air, vessel, whatever it is, sir, if the freight expense is not given or it is not determinable, then what you should do? 20% of the FOB you have to calculate, and that you have to add it. The restriction, the cap is there in the case of air freight, if actually is given. Understood? Next. Sir, what about insurance? What about insurance? Sometimes what will happen is they will say FOB. They will say FOB. They might not say insurance. They might not say, they might not give you insurance figure. Then what I should do? Then what I should do is here also two things. If it is given or if it is determinable. It is given or if it is determinable. Or there could be a case where it is not given or it is not determinable. So if it is not determinable, what you should do is, in this case also here what the act has told is, you take 1.125% of the FOB. FOB figure you will have, no? On that multiply 1.125%, whatever figure you get, that you have to take it as insurance cost. You can't say, sir, since insurance is not given, I will not add the insurance and I will calculate CF value. You can't say that, because two things are compulsory additions to the FOB. One is a freight, other one is insurance. Even though if insurance is not given or not determinable, you multiply 1.125% on the FOB and that insurance you have to compulsorily add. Sir, what if it is given? What if it is given in the question, or what if it is determinable? Here take actual. Here you take actual. Here there is no bifurcation, whether it is air, whether it is by way of water, vessel, there is no such things are there here. If insurance figure is given, whether it is by way of water, land or air, whatever it is, actual expenses you have to add. If it is not given, 1.125% of the FOB you have to add it. Understood? So this is going to be very, very important. Without this point, there will not be a question in the examination. Compulsorily, they will have one point regarding this freight and insurance. These two are required to be compulsorily added. If given, what we should do. If not given, how to add it. All I have covered. Okay. So once again, come on, let us have a quick recap. So which value is relevant for the purpose of calculation of customs duties? So we have to get something called CIF, cost, insurance, freight. Sir, how to calculate that? First, there will be FOB. First, in majority of the cases, they will give you FOB in the question itself. So you will start with FOB. Or in some cases, what they will do is they will give you the price at the factory, that they will give you. So if they have given from price at the factory and all, first thing what you have to do is FOB you have to calculate. But in majority of the cases in the examination, they will directly give you the FOB figure. Now to that FOB figure, two things you have to compulsorily add. Which two things you have to compulsorily add? Number one, you have to add freight. Sir, how to add the freight? Now we have to see in the question whether freight has been given or not. If the freight is given, or first thing, if the freight is not at all given, then what you should do? 20% of the FOB you have to calculate, that much freight you have to add it. Sir, if freight is given, then we have to check what is the mode of transport. Is it by way of land? Is it by way of water? Is it by way of air? If it is by way of land or water, if actual figure is given, that actual figure exactly we have to add it. However, if the transportation is happening by way of air and the air freight is also given in the question, then we need to check. Then we need to do that calculation, actual air freight or 20% of the FOB, whichever is lower, that much amount only we have to add it. So by putting a restriction of this 20% of FOB, who is getting favor? Importer is only getting favor. Government is giving a little bit of relaxation to the importer. Sir, then what about insurance? In case of insurance, here also we need to check, is it given or determinable, or is it not determinable? If it is given in the question itself, take the actual. If it is not given in the question, take 1.125% of the FOB. Okay, so now I will give you a few illustrations. Let me see whether you will be able to answer it or not. Okay, some simple illustrations we will try to do. So take a case, FOB 1 lakh. Okay, freight is there, actual freight. It is happening by way of water. The freight is 25,000 rupees. Insurance is 2,000 rupees. Customs duty, the rate of customs duty applicable is at 20%. Tell me what is the customs duty figure. What is the customs duty figure? I want the answer. Do the math and do it to me. These are the facts. FOB is 1 lakh. Freight, the transportation is happening by way of water. 25,000 rupees is actual freight. Insurance is 2,000 rupees. Customs duty rate applicable is 20%. What is the value? What is the amount of customs I am required to pay? So simple. So once again, if you go to the table, whatever we have seen. So first we will start with FOB. FOB 1 lakh. Okay, very good. Now freight we have to add. So is it given in the question or not? As it is given in the question. Freight is happening by way of water or by way of air or land? It is happening by way of water. Actual is given. What we will do? Actual we will take. Insurance. Have they given it in the question? Yes, they have given it in the question. We will take the actual. So it will come to 1,27,000. And the rate of customs duty applicable is at 20%. So on this 1,20,000, you multiply that. 1,27,000, you multiply that 20%. The answer will come to how much? 54,000, I guess. So 54,000 only. No, right? 4. Sorry. 4, 5. 15,400. So no. Sorry, let me do the calculation. Sometimes simple things we miss out. See, we got so habituated, no? So 1,27,000 rupees into 0.2. So which will come to 25,400. Sorry. So 25,400, not 2,54,000, 25,400 rupees will be the amount of customs duty which you will be required to pay. Understood? Now, let me give you case 2. Let me give you question number 2 here. Say, for example, just they have given FOB 1,25,000. FOB 1,25,000, or for ease in calculation, let me put it this way. They have given FOB is 10 lakh rupees. Determine what is the customs duty. Rate of customs duty applicable is at 10%. They have asked you in the question, calculate what is the amount of basic customs duty. Tell us the amount of duty which you are required to pay. Now you tell me how you will calculate. How you will calculate? So FOB, what 10 lakhs they have given. Next, you have to compulsorily add freight. Did they give anything in the question? No. But what we will do? We'll calculate 20%. So if I calculate 20%, how much it will come to? 2 lakh rupees. Insurance, have they given it in the question? No. If not given in the question, what we will do? 1.125%. How much it will come to? 11,250 it will come to. Am I correct? Yes, 11,250 it will come to. So if you add everything, how much it will be? 12,11,250. This will be the CAF value. This will be the assessable value. On that, customs duty at the rate of 10%, which will come to 1,21,125. And if you remember, social welfare surcharge also will come at the rate of 10% on customs duty, which will come to 12,112. So if you add this to, that is the amount of the duties which will be required to pay. I'm not going into the duties of the GST and compensations. That also will be added anyhow. So just I'm concentrating on determination of the value. Okay, guys, able to understand? Now let me give you one more scenario. Another question I will give you. FOB 1 lakh, freight by way of air 30,000, then insurance 2,000. What is the value? What is the value for the purpose of calculation of customs duty? So now what we will do? So they are giving, we will start with FOB. So how much is FOB? 1 lakh rupees is the FOB. Very good. Now they are saying freight is by way of air. If freight is by way of air and if actual figure is given, what I have told? Actual or 20% of FOB. How much is the actual? 30k. 20% of FOB will come to how much? 20,000. So even though whichever is lower, which one is lower? 20k. Even though actual freight has been given here, but how much freight we will add? Only 20,000 we will add because the movement is happening by way of air. Insurance actual figure has been given. We'll take the actual one, so which will come to 2,000 rupees. So total 1,22,000 rupees will be the value. This is the value on which we are required to pay the duties. Understood? Now let me give you one more case. In some cases, what they will say, question number 4. Let me put it this way. They have given CAF value. CAF 1,42,000. CAF 1,42,000. Freight by way of air 40,000. and insurance. And insurance, actual insurance cost come to 2,000 rupees. Now, rate of customs duty applicable is 10%. What is the amount of the basic customs duty? Say, for example, this question has been tested in the examination. What is your answer? These are all the facts. CAF, they have given directly freight, 1 lakh for freight by way of air has taken place, which is 40,000 rupees. Actual insurance is 2,000. What is the rate of customs duty? Now, what you will do, sir, anyhow, directly CAF value has only been given. So we'll take the CAF value, which will come to 1,42,000. So anyhow, you have told customs duty is at 10%. If I multiply that, it will be 14,200. That is the amount of customs duty. Absolutely wrong. Wrong. So here they have given CAF value, but first let us calculate what is the FOB. What is the FOB? See, what did I say? How to calculate CAF? If you take FOB, to that if you add the freight, to that if you add the insurance, you will get something called CAF, no? So now what is the actual FOB? So CAF they have given, in the question itself, they have given CAF. What is the CAF? 1,42,000. Okay. Freight is, insurance is how much? 2,000. Freight is how much? 40,000. If you take both, how much is the FOB value? If you do the reverse calculation, actually FOB is 1 lakh rupees. So FOB is here 1 lakh rupees only. Now, to this FOB, you have to add freight. But here the transportation is happening by way of air. If it is by way of air, what did I say? Actual or 20%, whichever is low. How much is actual? 40K. 20% of FOB is how much? 20% of FOB, if I calculate, it will come to 20,000 rupees only. Which one is lower? 20,000 is lower. I can add only 20,000 rupees of freight. What I can do, even though the actual freight is 40,000, I can add freight of only 20,000 rupees. Why? Because it is a figure it is a movement happening by way of air. In case of movement happening by way of air, either actual freight expenses or 20% of FOB, whichever is lower. Then comes the last one, insurance. Insurance, since actual figure has been given, that I will add 2,000 will be the insurance. Total it will come to 1,22,000 rupees only. Customs duty rate they have given it as 10%. So if I multiply that, the basic customs duty will be 12,200 rupees only, not 14,200. So this is also one case which they have tested many times in the question. This is how you are required to do in case if they have asked a question regarding CAF. Okay. Say for example, if they have given a question, I will do one more question for the sake of your understanding. See, just because of the sake of your clarity, your conceptual clarity, I'm giving these many examples. Hope you guys are able to follow. Say for example, in the question they have given CAF 1,35,000, freight by way of water 30,000 rupees, insurance come to 5,000 rupees. Now, rate of customs duty is at 10%. Calculate and tell me what is the basic customs duty. What is the basic customs duty? See, here you need not worry. What you can do is directly on the CAF, you can multiply that 10%. 13,500 will be the customs duty. Sir, why, sir? Why? Because here we need not check anything. Here there will be no limits applicable. Why? Because the transportation is happening by way of water, and if actually is given, that actual figure we will take. No need to check that 20% condition. So even if you do all the math also, you will arrive at the same thing. So we have to calculate FOB. So they have given freight they have given, insurance they have given. So how to calculate the FOB? So CAF they have given it as 1,35,000. If you take out from that freight 30,000 rupees, if you take out from that insurance 5,000 rupees, FOB value will come to 1,30,000. So once again, if you add, 1 lakh. So once again, if you start adding, freight is there. How much is the freight? 30,000. Actually, you can take directly, you can take 30,000 rupees. Insurance actual only we will take 5,000 rupees. Once again, your CF value will come to 1,35,000 rupees only. So if the freight is by way of water or land, no need to do anything. Directly, you can take the CF value and multiply that rate of customs duty. You will arrive at the figure of basic customs duties or any other kinds of duties. Understood? Clear and comfortable, everyone? Now, let us come to these are the few things which you need to keep in mind. Now, let me add a little bit more information. Few more things I would like to add here. Right. See, sometimes what they will do is they will give FOB. Say for example, 1 lakh FOB they have given, or they might give it something like this. They will say in the question, FOB along with insurance. FOB along with insurance both put together is 1 lakh rupees. But freight they have not given. Right? They have not given. So what did I say? They have given combined figure of FOB and insurance. They did not give separately what is FOB, how much is insurance, they did not give. So in the act, they have told that in case if you know FOB plus insurance, collective figure you know, but you don't know freight, then what did I say? So generally, what did I say? If you know FOB, but if you don't know insurance, if you don't know freight, you have to multiply 20%. In case of freight, I have told you. But this is a case where they have given FOB plus insurance value they have given. Separately, what is FOB, what is insurance, they have not given. Combined figure of FOB and insurance, they have told it as 1 lakh rupees. If that is the case, in case if the freight has not been given, here what the act says is, here you take 20% of total value. If they have not given a breakup, so that FOB and insurance value they have given, no, on that total value you have to multiply that 20%. So here my freight expenses which I have to add will be 20% of 1 lakh rupees, which will come to 20,000. If FOB insurance separately given, only on FOB only will multiply. But sometimes in the question they will say, they will give a combined figure of FOB plus insurance, but they will not give freight. In that case, what we should do is 20% we have to multiply on that combined figure. Similarly, what also could happen is sometimes they will give a combined figure for FOB plus freight. Guys, when I say freight, once again I am telling, in the initial part only I have told, when I say freight, here I am referring to transport, loading, unloading and handling charges up to the place of importation. That you have to keep in mind. So sometimes also what they will say in the question is FOB plus freight value they will give. So say for example, they have given FOB plus freight, it is coming to 1,50,000 rupees. But they have not given insurance. But they have not given what is the insurance. Now what we should do if that is the case, here also what does the act says, you take 1.125% and apply it on the combined value of free on board plus freight. So if I do that 1.125% into 1,50,000, now this total value you have to multiply. So you will get that figure, that will be the insurance. Okay, so summary is this. If FOB value has been separately given, on that FOB value only 20% or 1.125% we will apply. In case if the combined figure is given, like freight and insurance collective figure has been given, but insurance figure has not been given, so then we will do 1.125% of that combined figure. Freight and insurance is given, but freight is not, FOB plus insurance is given, but freight is not given. In that case, we will multiply 20% on the total combined value. If bifurcated value is given, or we will apply it on the bifurcated value only. If combined figure is given, we have to multiply it on the combined figure only. Understood? Everybody comfortable till here? Right. So what and all I have told you till now? I have told how to arrive at the CIF value. What did I say? First, you take the FOB, two compulsory additions you have to add. One is a freight you have to add, and compulsorily you have to add insurance when given what you are supposed to do, when not given what you are supposed to do. Everything I have covered. Then you will get one resulting figure that we call it as CIF or assessable value. This is the value on which you are required to calculate the customs amount, customs duty figure. On this value, you have to multiply that rate. You have to multiply on this customs figure. Okay, right. So going forward, so till now I spoke that there are to the FOB you are required to do two compulsory additions. So I will call them broadly as compulsory additions. So there are two things which are required to be compulsorily added to determine the value. So what are the two compulsory additions? One is number one, freight we have. So when I say freight, what and all will be included here? Transport will be included, loading will be included, unloading also will be included, and even one more thing here, loading, unloading also will be included, and finally handling charges also will be included. Okay, so everything put together 20%, guys. I'm not talking, when I say freight, I'm not talking about just one thing. So all these expenses put together 20%. Okay, right. Next, and one more thing I would like to clarify here. So once again, let us take the same example. There is a person in India. Okay, he is importing from US. So now what we will add during this transportation till, say for example, they are coming to the Vizag port, till the place of importation, till this place of importation, whatever transportation, whatever loading, whatever unloading, whatever handling charges, all that we will add. Now say for example, after the vessel has reached Vizag port, after that the goods will be unloaded, no? After that the goods will be unloaded, right? So there also unloading charges we will incur at the Vizag port. After reaching that place of importation or port of importation, unloading of the goods will happen. Say for example, some 10,000 rupees of unloading expenses have taken place. This should not be added. That should not be added. Only transport, loading, unloading and handling charges till the place of importation, up to the port of importation only it will be added. If the goods are getting unloaded after they have reached that place of importation or port of importation, after that you should not add anything. So this you have to keep in mind. When I say unloading, I was talking only till the stage of place of importation. During, in between this, if any unloading charges or loading charges have taken place, that only will be added. That only will be added. After reaching the port of importation, after that, if any unloading charges have been incurred, that will not be added. Able to understand? So let me put it this way. Say for example, FOB value of the goods is 1 lakh. FOB value of the goods is 1 lakh rupees. So transportation is happening by way of water. Say for example, during the transportation, during that travel, transportation charges are somewhere around some 5,000 rupees. Loading charges are 2,000. Unloading charges, not at the port, in between, during the way, if there is any unloading charges, say for example 3,000. Handling charges are there, some 5,000. So all put together, how much we have during the transportation till they reach that place of importation, how much transportation, loading, unloading, handling charges have incurred. So 5 plus 5, 10, and another 5, 15. So actual freight we can take. Why? Because since it is a vessel, water transport it is happening. So actual freight we can take. So freight I will add, 15,000 I will add. Now say for example, in the question they are giving, after the goods have reached the place or port of importation, these goods are unloaded at the import port and their unloading charges worth 5,000 rupees have been incurred. Will you add this? No, you should not add this. Why? Because I have told you specifically there, when even writing it here also I have specifically emphasized that transportation, loading, unloading charges to the place of importation, up to the place of importation, that only will be added. At the import port, if any unloading charges are incurred, that will not be added. Okay, this point you have to keep in mind. And one more thing, say for example, these goods are unloaded here. After unloading, these goods are brought to the factory. After unloading, these goods are brought to the factory of the importer. For that, transportation cost of 20,000 rupees have been incurred. Should we add this? No. This is a transportation cost from the import to port to the factory or office of the importer. That also should not be added. Why? Because we have specifically told transport, loading, unloading, handling only up to the port of importation only will be added. Once they have reached the port of importation, after that any unloading, any travel, anything will not be added to the value. Okay, so this is also one point which I thought of clarifying. Okay, this also I have done. Next, one more thing I will try to explain it here. After freight, what else will be added? Insurance will be added. So these two are compulsory additions. Now we are going to talk about some optional additions. Some optional additions. See, when I say optional additions, these are certain kind of expenses. If incurred, they will be added. In addition to freight, in addition to insurance, if any extra expenses are incurred by the importer, then only it will be added. If those expenses are not incurred, it will not be added. See, what did I say in the question? Whether freight is given or not, whether insurance is given or not, you will compulsorily add. But when I talk about these optional additions, I'm going to list a few items. These items will be added only if they have been given. If they are not given, we will not do some calculation like we have done it for freight or insurance, some 20%, 1.125%, like that we are not going to do. For what? For the optional evidence, for the optional additions. Only when they have been actually incurred, only when they are given in the question, then only we are going to add this optional additions. If they are not given, we are not going to do anything. Okay, sir, what are that optional additions? So if you come to the question here, so what are that optional additions which you are required to do? Right, see here. So the transaction value of the imported goods should include certain other items also. Apart from insurance, apart from freight, apart from insurance, there are some other items which are required to be included. What else is required to be included? If as an importer, if you are paid any commission and brokerage, except buying commission, those commissions you can add. Key takeaway, important thing, many times suggested in the examination, buying commission will not be added. Buying commission should not be added. Apart from that, if any other commission importer has paid, that commission you have to add it. Commission, brokerage you have to add, except buying commission. Buying commission you should not add. So somewhere they will give what is the meaning of buying commission. Yeah, sir, what is the meaning of buying commission? Fees paid by an importer to agent for representing them abroad in purchasing goods. So you are an importer, you want to buy the goods from export country. In the foreign country, you have appointed an agent. He will represent you and he will procure the goods for you on your behalf, acting as your agent. For him, you will pay commission. That commission we call it as buying commission. That buying commission should be added or should not be added. Buying commission should not be added. Apart from buying commission, if any other commission or brokerage has been paid by the importer, that you have to add it. Okay, so number one, what should be added? Commission other than buying commission should be added. Cost of containers. See, when you are importing, you will also get you will get that content in the containers, right? If you are incurring the cost of containers, that containers cost also you have to include it. But sometimes what will happen is you will get the goods in containers, but those containers are returnable. Those containers are returnable. Say for example, you need some goods, guys. Okay, so you ordered some 10,000 quantity of the goods. So that 10,000 quantity of the goods should come in some container, no? So some containers, like in the vessels in movies and all, you might have seen cargo places where big containers will be there. So you got all your goods in the container. Now say for example, for this container you paid some 1 lakh rupees. But what is the option available to is, once you get your goods to your factory, you can return that empty container, and this 1 lakh they will give it back to you. So whatever cost you have paid to the containers, if you are returning, if those containers are returnable and you will get back your money, that cost should not be added. Only non-returnable, cost of non-returnable containers, that means you have paid some money, you got the container, you can't return it, that you only have to keep it. So that cost of those containers which are not returnable, which are not refundable, that cost you have to add. However, if you can return back the containers and get back your money, that should not be, that is not your cost. No. Why? Because you are getting it back. So that should not be added. So that is one thing. So commission and brokerage you have to add, except the buying commission. Cost of containers you have to add, that to non-returnable and non-refundable. Cost of packing, whether for labor, materials, if you are incurring some packing cost for the purpose of that import. So any special packing, general packing, whatever it is, that cost of packing, both incurred on labor and materials, everything you can add. And appropriate value of following goods and services supplied by the buyer free of charge or at reduced cost for use in the production and sale for export of imported goods. Sir, what do you mean by this? So what do they say here is, say for example, this plastic bottle, this steel bottle is there. So say for example, I'm a importer in India. Okay, so I want to import this kind of water bottle. This water bottle, this steel water bottle, I want to import it from US. Now when I want to import the water bottle, what I have to do? So what I should do is, so this US exporter, he will use his steel, he will manufacture that steel bottle, and he will send that goods to me. He will send that goods to me. Say for example, I'm getting some bulk quantity of the water bottles. I have to pay 50 lakhs rupees for this. But I'm not happy with the quality of the steel which they're using. I'm very happy with the design of the product, but I'm not happy with the steel. So what I have told to this exporter is, boss, you do one thing. You do one thing. So I will send you the steel. I will send you 20 lakhs worth of steel, free of cost or at a discounted price, whatever it is. So I will send you 20 lakhs worth of steel to you. Using that steel, you manufacture. Using that steel, you manufacture the goods and then you export it to me. Now, since the steel was provided to the manufacturer already, now when he is selling the goods to the importer, what he will do? He will charge you 30 lakh rupees only. He will charge 30 lakh rupees. Transaction value will be 30 lakh rupees only. But what the act has told you, no. So in case, since you have supplied this material free of cost for the purpose of that import, even that 20 lakhs also should be added to the transaction value. Even that 20 lakhs also should be added. On total 50 lakh rupees, you will be required to pay the customs. Able to understand? So say for example, sometimes what will happen is, I will not give the entire steel free of cost. I will give it at the concessional rate. So what do you mean by giving it at a concessional rate? Say for example, I'm an importer. Same, I want to import the steel bottles. So what I told to the exporter is, boss, you do one thing. I will send you the steel. I'll send you the steel amounting to 20 lakh rupees. 20 lakhs worth of steel I will send. But I will not give everything free of cost. I will give it to you at 10 lakh rupees only. I will give it to you at 10 lakh rupees. So 20 lakhs worth of steel, I am giving it to that exporter, which he will use it in the manufacturer at a concessional rate, at a discounted rate. So now this exporter told, okay, I will use your steel. Previously, I used to charge 50 lakh rupees, but since you have given me steel at a concessional rate, I will charge from you only 40 lakh rupees. So he charged 40 lakh rupees only from us. Now, what does the act say is, since you have given this material at a discounted rate, that concession, whatever you have given, how much concession you have given, 10 lakhs rupees worth of concession you have given, that 10 lakhs also should be added. That 10 lakhs also should be added. So like this, that is what the next item which should be added. Appropriate value of the following goods and services which are supplied by buyer, in an example importer, either free of charge or at reduced cost for use in the production and sale for export of imported goods. Which kind of items you are providing? Either you are giving material, component, parts and similar items which is incorporated in the imported goods, or you are providing tools, dies, molds and similar items which is used in the production of the imported goods, or you are doing some engineering, development, artwork, design work, plans and sketches undertaken elsewhere other than in India and necessary for the production of the imported goods. This is very, very important. This is also very important. See, if you are giving molds, materials, dyes, or any other thing you are giving, either free of charge or at a concessional rate, that should be added to the value of to the value. But they say one more thing here. Say, for example, okay, say this steel bottle, I want this to be manufactured. This is steel bottle, or let me not take the steel bottle. Let me do one thing. Let me give you one example. Okay. See, I am a new mobile phone brand. I have started a new mobile phone brand. So I want from China to import. I want the China to manufacture the mobiles and send it to me. I'm importing the mobile phones from China. I'm starting my own mobile phone brand, but whatever mobile phones I'm selling in India, that I want to get it manufactured from China. Say, for example, I'm ordering 1 lakh worth of mobile phones. 1 lakh worth of mobile phones. Now the vendor told, sir, 1 lakh worth of mobile phone, every mobile phone will cost somewhere around 5,000 rupees. He told 5 CR. Total 5 CR worth of goods I'm importing. Okay, so I'm the person who is importing that goods. But for this mobile phone, design and development should happen now. How to design this mobile phone, what specifications should be there, what software they have to use, what should be the display size, how the phone should look like, what should the back side look like, what should the front side look like. So that design and development activity, for designing and development, I have incurred some expenditure. For designing and development, I have incurred some expenditure. Say, for example, that design has taken place in India. On this product, I have spent some 50 lakh rupees. On the design, for the design and development, I have spent 50 lakh rupees, and this design and development has taken place in India only. This design activity, this development activity has taken place in India. For that, how much expenditure I have incurred? 50 lakhs worth of expenditure I have incurred. I have a design. I shared with that exporter. Using that design, he manufactured the goods and he charged from me 5 CR. Now what they are telling is, this 50 lakh rupees you should not add. No need to add this 50 lakh rupees. You can pay customs only on 5 CR. So if you incurred design and development charges within India in relation to the goods which you have imported, no need to add it to the value. But however, if you have incurred design and development charges outside of India, if you have incurred design and development charges outside of India, say for example, you have developed this design, you want this Chinese manufacturer to manufacture your mobile phone, you developed a design, you got the development of that product, but that expenses has also taken place in China only. So you are spending the money for designing and development of the product, but that expenditure you have incurred in China. Say for example, the same 50 lakhs worth of development and design has taken place in China. Now what they are telling is, even that design and development charges also should be added. So conclusion is this: design, development charges, art, etc. If that expenditure has been incurred in India in relation to that imported goods, that should not be added to the value. However, if that design and development charges have occurred outside of India, even that also should be added to the value. Understood? So very, very important, guys. On this point also, many times they have tested. So engineering, development, artwork, design work, plans and sketches which are undertaken elsewhere than in India, other than India, if that expenses are incurred somewhere else and you are making it available, making that design or development available to that exporter, even that also should be added. Guys, tell me what and all I have told. Optional additions which you have to do. Number 1, commission and brokerage except buying commission. Number 2, cost of containers, that too non-returnable, non-refundable. Number 3, cost of packing materials. Number 4, if you are providing some material, molds, dyes, tools, or any other thing which are used in the production of the goods, either free of cost or at a concessional rate, that also you have to add. And design, development, artwork, plans and sketches, if that expenditure is incurred elsewhere in India, other than India, if that expenditure has incurred in any other country, that also should be added to my value. If it is incurred in our country, no need to add it to the value. Apart from that, royalties and license fees the buyer must pay as a condition of sale. This is very, very important. Say for example, you are importing some article. Say for example, mobile phones only you are importing from the Chinese manufacturer. Now the Chinese manufacturer told, boss, I will sell the goods to you in India. But if I have to sell the goods to you in India, if I want to send the goods to you, I will send you the mobile phones. But on every mobile phone you sell, you have to give me 5% royalty also. On every mobile you sell, you have to give me 5% of royalty. If you agree to that, then only I will sell the mobile phones to you. So now you tell me, should this royalty also be added? Yes, it is also should be added. So if any, in the name of royalty, in the name of license fee, if there is a condition, as a condition of making sale, this exporter, whoever is selling the goods to us, in order to make the sale, he's putting a condition that I have to pay him royalty or license fee, even if it is there even if you are incurring that royalty expenses or license fee expenses, but provided it is incurred as a condition of sale, very very important guys, if it is incurred as a condition of sale, that also should be added to my value. Able to understand? So that is very very important. So royalty and license fee the buyer must pay as a condition of sale. Not just that, proceeds from any subsequent resale, disposal or use of the goods that benefit the seller. So this like this sometimes importers, sometimes exporters also will pay a condition. Boss, if you make any payment, if you make any sale, I will sell the goods to you, but if you make any subsequent sale, from that sale you have to share me some percentage. So like that, after you have imported and when you are selling that goods, if any share is going to that buyer, if any share is going to that seller, once again as a condition of sale, that also should be added. And not just that, all other payments made by buyer to the seller or third party to fulfill seller's obligations. Not just this, he might collect anything after importation. If he is asking you to pay something, post importation charges, we say that post importation, after importation has been completed, even after importing also, if you are making some payment to that seller as a condition of sale, very very important term, as a condition of sale, if you are incurring any other post importation expenses, that also should be added. But that thing should be there as a condition of sale. When making the sale only, he's putting a condition, after this point of time, either you have to pay me royalty or license fee, or you have to share the sale proceeds with me, or you have to pay some charges to me, then only I will sell the goods to you. So like that, as a condition of sale, if you are incurring any other expenses, that also should be added. But very important is it should be there as a condition of sale. Understood? Clear and comfortable everybody? So these are the things which are required to be added. These are the things which are required to be added. So what and all should be added? Tell me guys. Two things are compulsorily added. What is that? Freight should be added. Along with that, you should also add insurance. Compulsory, whether given or not given, you have to add it. But these things will be added only when actually incurred. If not incurred, these will not be added. So what are that? This I call it as optional additions. Commission and brokerage, except buying commission. Cost of containers you have to add it. The cost of packing you have to add. Appropriate value of materials, tools and dies, either provided free of cost or at concessional rate. Engineering, development, artwork, design work, plans and sketches undertaken elsewhere than in India. That also you have to add. Royalties and license fees as a condition of sale. Proceeds from any subsequent resale, disposal or use of goods that benefit the seller, or all other payments made by buyer to the seller or third party to fulfill the seller's obligation. Now you will get a doubt, sir, where I have to add this? Where I have to add this? I told you previously, right? So first, price at factory will be there. Price at factory will be there. Yes or no? This is the starting point, right? Initially I have told. Do you guys remember? I have started my lecture like this only. So first there will be price at exporter's factory. Yes or no? This is once again very important guys, listen carefully. Price at exporter's factory. Then transport from factory to export port. So that you have to add. Then you have to add loading charges at export port. Loading charges at export port. So now you will get something called FOB value. Free on board value you will get. Now what you should do is immediately after this step, you have to add all that additional expenses. Optional additions I have told you, no, here you have to add. Like if you have to incur any commission, that commission you have to add it here. Similarly, if you are incurring any packing material, that also you have to add it here. Apart from that, material provided free of cost and all, design development charges, post importation charges, royalty, whatever I have told, everything you have to add it here. After adding all that, you will get something called FOB value. This I will say it as FOB value for the purpose of customs. FOB value for the purpose of customs. After this, you are required to add something called freight at the rate of 20%. Sir, on which value you will multiply 20%? That I told you, no, if freight is not given, 20% you have to calculate, no. On which value you will calculate 20%? Will you calculate 20% on this FOB value, or will you calculate 20% on this FOB value? The answer is you have to calculate that 20% on this FOB value as per customs. Okay, so after you have arrived at the normal FOB value, after making all these optional additions, whatever figure you get, that we call it as FOB value for customs. There you have to multiply that 20%. Able to understand? And similarly, insurance. So whatever insurance charges you are incurring, that insurance charges also you have to multiply. If not given 1.125%, I told no, that 1.125% also here you have to add on this value. FOB value for customs is there, no, on that you have to add 1.125%. Then the resulting figure, whatever you get, that we call it as CIF value. Able to understand? Clear and comfortable, everyone? So this format you have to remember. This you need not copy. I have given it even in the material also. See here. See this thing I have given here. So first we will start with value of material ex factory. Then you will add carriage, freight, insurance up to the port of shipment in the exporter's country, that you will add. Loading charges and all you will add. Then you will get free on board. FOB value you will get. To that, whatever optional additions I have told, all that you have to do, if incurred, commission and brokerage except buying commission, packing cost except cost of durable and returnable packing, this also I have told, cost of engineering development and plan or sketches which are undertaken outside of India, royalties, license fee, value of subsequent resale, value of material supplied, all this you have to add. Then you will get something called FOB value as per customs. So this will be the value on which we will multiply that 20% or 1.125%. On this value we are going to multiply it. So actual cost of freight, if not specified, 20% of FOB value as per customs. On this 20% we will multiply. If actually is given, but if it is in the case of air, there also will restrict it to maximum 20%, no, so that we will do. Similarly, you have to, I will come to this point later. And to that you have to add insurance charges also. If not specified, 1.125%, and that 1.125% on what? 1.125% on this value. And in addition to that, after adding this cost, insurance and all, you should also add few more expenses, which we call it as ship demurrage charges on chartered vessels, light dredge or barge charges. This you have to add here. Guys, where you are adding is very, very important. Why? Because this is going to have a significant impact on your final answer. There will be some other charges in the name of something called ship demurrage charges on chartered vessels or light dredge or barge charges. So like this, some charges will be there. This also you have to add. Not in the FOB value. After that you have to add. Okay, after this FOB value as per customs, one more kind of charge you have to add, which is what? Ship demurrage charges or chartered vessels light dredge or barge charges. So first I will talk about what do you mean by light dredge charges. So what do you mean by light dredge charges is light dredging or barging charges. What do you mean by this is, say for example, the ship is coming from US, okay, that has to come to Vizag port. So here there is a Vizag port. But here what is happening, the water levels are very low. Because of some reason at the shore, water levels have come very low. So a big cargo ship might not come till the coast. It might get stuck. So in some cases what they will do, you know, this cargo ship, since they can't bring it, or there's sometimes there might be a huge pile up of containers standing here, vessels are standing here. So that's why they might not come directly. So in that cases what they will do is, this vessel will come and stop at a distant place. A few kilometers away from the shore it will stop. Now what will happen is small boats will go, and that boats will bring from this big cargo vessel, that small boats will go and bring that goods to the importation, to the port. So now for that they have to pay some charges. For these small boats, for carrying the goods from this large vessel to the shore, they need to pay some charges, no? So that we call it as barging charges and light dredge charges. That we call them as what? Barging charges or light dredge charges. This also should be added. So no doubt you have to add that also. Okay, so that's what they say. Barging and light dredge charges when ship is not brought up to the jetty because deep draught at port or ports are busy or any other reason. In this case, cargo shall be discharged at the anchorage, and charges for bringing goods from outer anchorage to the jetty, that expenses we call it as barging or light dredge charges. That also should be added, but please be careful. Don't add it before FOB value as per customs. Add the actual figure after you have calculated the FOB value as per customs. So that you have to add. Apart from that, you will be required to pay something called demurrage charges. So even that demurrage charges also you are required to incur. You are required to add it. Sir, what do you mean by demurrage? So what do you mean by demurrage charges is, say for example, how do I put it? Okay. So US port is there. Okay. From the US port, the vessel has started. It has to come to Vizag. Now, say for example, from US, this vessel has to come and it has to reach the Vizag port. During the midway, say for example, the ship is coming from US. From US, in between one more port it will touch. After touching one more port, then it will come to Vizag. From foreign port, at some international port, it will stop for some time. So at some international country, this vessel has stopped for a while. Say for example, this vessel can stay there only for one day. Only for one day. After that, it has to continue its journey. But what happened is, because of some reason, they have stayed one more day extra. They have stayed one more day extra. It's another international port. Now, since they are staying for one more day extra, they might collect some charges. Say, for example, they say 50,000 rupees you have to pay since you stayed more than one day. So this we call it as a demurrage charges. This demurrage charges also should be added. This demurrage charges should also be added. This we call it as shipping demurrage charges. But sometimes what will happen, say for example, this vessel has come to Vizag port also. This vessel has come to Vizag port also. Now, after it has come to Vizag port, there the goods are required to be unloaded. There the goods are required to be unloaded. Or say for example, or these goods are unloaded also. Now, as a importer, within a limited period of time, you have to come and clear these goods. Either you have to submit a bill of entry for home consumption, or you have to move it to the warehouse. Say for example, customs is saying once the goods are unloaded, 2 days time they will give. Within that 2 days of time, either you have to clear, either you have to submit the bill of entry for home consumption, or you have to submit a bill of entry for warehousing. So if you don't do it within 2 days, you have to pay extra charge, because you are occupying the customs space. No. So say for example, you did not come after 2 days, 2 more days extra you have taken. Now what customs authorities will say is, since you have come late, for these 2 days extra, you pay the demurrage charges. This we call it as port demurrage charges. You are paying this demurrage charges at the port after the goods are unloaded at the port. This should not be added. Why? Because this is cost incurred after the place of importation, after they have been unloaded. No. So this port demurrage charges should not be added, but ship demurrage charges, before they have reached the port of importation, if any demurrage charges are incurred, that you have to add it. But at the port, if you are paying the demurrage charges, that should not be added. Why? Because that is the expense incurred after the importation has been completed. Clear? So 2 things: only add ship demurrage charges, don't add port demurrage charges. And also you have to be very careful that ship demurrage charges or lighterage or barge charges should be added after determining the FOB value as per customs. Okay. See, you have to be very careful. Why I am telling you this is, if you add it here, if you add it any place here, this 20% will be including, this 20% will be multiplied even on demurrage or lighterage charges also, which should not happen. So that's why this 20% and 1.125%, whatever you are multiplying, that should be on FOB value exclusive of demurrage charges and lighterage or barge charges. So that's why don't add this here. You add it after you have calculated the FOB value as per customs only. Understood? Clear and comfortable, everybody? So this is what regarding how to arrive at CIF value. So if you see here, what are the costs which are not required to be included? So what have to be included we have seen. Now specifically they say what is not required to be included. Duties and taxes which you pay in India, that should not be added. Why? Because duties and taxes you pay in India after importation has completed, so that you should not add it. Cost of erection charges in India, if you are bringing any plant and machinery into India, and after bringing the plant and machinery, after getting the custom clearances, you went and installed that plant and machinery at your premises, should you add that also? That you should not add. Transportation and insurance from port to factory in India, this I have already covered. From the customs port, from the Vizag port, if I am bringing the goods to my factory, I will incur in transportation cost in India. Should I add that also? No, you should not add it. Development charges for imported machinery, don't add it. Port demurrage charges and unloading charges in India, this I have already told, this also should not be added. Post shipment charges, unless there are preconditions for importation. As I have told, if any post shipment charges or post importation charges you have incurred, if they are incurred as a condition of sale, then only you add it. If there is no condition of sale for that post shipment charges or post importation charges, those things should not be added. Okay, so these are the items which should not be added. Clear? Able to understand, everyone? So the most important discussion, whatever we had till now, the most important discussion is this one. So on this we are going to solve a many number of problems, but I want you to remember this thing. So there are a few more things which are required to be clarified. So after clarifying on those few things, we'll start solving the questions and answers. Okay, so till here everybody comfortable? Right. So let us resume our discussion. So in the previous session before this, we have discussed how to arrive at the value. Whenever you are importing, you will be required to pay the customs duty, and if that customs duty is on ad valorem basis, you have to determine the value of that imports. How to determine that value of the imports, that we have seen. So this thing which we have given in the material, this is going to be very, very important. So this we will do one quick recap, then we will try to do some questions. One more point I have to explain regarding the valuation. So once we are done with that, then we will solve some questions to get the comfort of the concept, and also you will get a practice how to answer the questions in the examination. So for that, we will solve the questions first. But before that, let us have a quick recap. So first, there will be ex-factory price for the exporter. To that, we have to add the carriage freight insurance up to the port of that shipment, and loading charges at that exporter's port, that also will add. So that will be FOB price for the exporter. To that, we'll have to first add some optional expenses, optional additions we have to do. When I say optional, what do I mean by that is, if these expenses are incurred, then they will be added. If these expenses are not incurred, then we will not add them. So what are the few things which are required to be added? Commission and brokerage, except buying commission. Buying commission should not be included. Packing cost also have to include it, either for incurring labor or material relating to packing cost, that has to be added, except the cost of durable and returnable packing. So if you are receiving any containers which are returnable or refundable, that you should not add. The cost of the containers which is not returnable, which is not refundable, that cost you have to add it. Cost of engineering development plan or sketches, provided if that is elsewhere outside India, other than India, if that expenditure has incurred, that also we will add. Then royalties and license fees which are related, which are as a condition of sale, that we have to add it. Value of subsequent resale if payable to the foreign supplier. So if any condition is there as a part of sale, that should be added. And also value of the material supplied by the buyer, either free of cost or at a reduced price, that also have to add it. The resulting figure, whatever you get, that we call it as FOB value for the purpose of customs. Now after this, to this value, we have to compulsorily add two items, whether given or not given, we have to compulsorily add two items. One is freight, I call it. So what do you mean by freight? What and all will be included? When I say freight, here transport will be included, loading, unloading and handling charges up to the place of importation. So that actual cost of freight, or if not given, 20% of the FOB. In case of air freight, even though it is given, maximum we will add only up to 20% of the FOB. Then insurance cost, insurance also you have to add. If actual is given, actual we will take. If actual is not given, 1.125% of the FOB value as per the customs that we will determine. In addition to that, I told you to add the ship demurrage charges or vessel or chartered vessels, light rage or barge charges. This also has to be added. And one important thing, this should not be added above, this should be added here. And I think I might have told you a few things which should not be added. In that, one important point which you have to keep in mind, demurrage charges paid at the port. Port demurrage charges, we say it, that port demurrage charges should not be included. So that is one important point. That is where majority of the students will do the mistake. So this is what this format you have to remember. Now, see, we'll try to do some questions, but before we do that questions, I have to clarify one more point for you. I have to clarify one more small thing for you. See, generally, when you are importing, if you are a person in India, so you are a person residing in India, okay? So from US, you are importing some goods. You are importing some goods. So when an exporter is selling the goods to you, generally, price they will mention in dollars. Yes or no? If you are importing from US, the seller will quote the price in dollars. Say, for example, if you are importing some 1,000 quantity of the goods, the buyer has told the total 1,000 quantities will cost $1,000. He will quote the price in the dollars. And even international freight, when you are paying international freight, when you are paying international insurance outside of the country, if you are paying insurance and freight, that also will be in a foreign currency. That also will be in a foreign currency. But in India, we have to pay the customs where we have, when you are importing, you have to pay the customs in India. So to the Indian government, you have to pay the customs. And in what currency you have to pay the customs to the Indian government? You have to pay the customs in Indian rupees. In rupees, you have to pay. You can't go to the government and say, sir, I will pay the customs to the Indian government. In US dollars, you can't say that. So you are ultimately required to pay the customs to the Indian government, and that payment has to be made in INR, Indian rupees. You have to make the payment. So whatever this FOB price, in many questions they will say FOB is $1,000. So like that they will say freight $200, insurance $40. So like that, in many questions you will find they will give you the quotation, they will give you the terms, the prices in foreign currency. In order to calculate what is the amount of the customs you are required to pay, these foreign currencies should be converted into INR. Whatever amounts that are there in a foreign currency, that could be dollar, that could be Japanese yen, whatever it is, if the prices, if the FOB value, freight and all have been given in foreign currency, in order to calculate the customs which is required to be paid to the Indian government, since we are required to pay the customs in INR, those foreign prices, those foreign values should be converted at INR. Now the doubt comes, sir, at which exchange rate I have to convert? What should be the exchange rate I have to take? So when I say here, say for example, if I am saying FOB is $1,000 rupees, so one thing you have all agreed, this is required to be converted into rupee. Sir, but at what exchange rate? At what exchange rate? So here there are a few provisions of the Customs Act which talks about this exchange rate. First, I will tell you summary, then we will start the reading. So what exchange rate should be used? See, CBIC will release exchange rate, RBI also will release exchange rate. But the Customs Act has specifically mentioned you should take the exchange rate which is given by CBIC. CBIC. So whatever exchange rate which has been given by CBIC, that exchange rate you have to take. That exchange rate you have to take. And on which date, sir, which date foreign currencies undergo changes each and every day? Which dates rate will be taken? So one thing is sure, we will not use RBI's rate, we will not use a bank rate, nothing we are going to use. We are going to take the reference of CBIC, exchange rate released by CBIC. But on what date, which dates is the exchange rate you are going to take? So in the case of import, whenever you have submitted the bill of entry, whenever whether for warehousing or for home consumption, whenever as an importer, whenever you have submitted the bill of entry either for home consumption or whenever you have submitted the bill of entry for warehousing, so whatever it is, whenever you are submitting the bill of entry, at that date, whatever exchange rate is there which is released by the CBIC, that exchange rate we have to take, and using that exchange rate we have to convert our foreign currency into INR. Able to understand? Clear and comfortable, everybody? So that is what a few provisions regarding exchange rate we have. So just I wanted to clarify on that one point, and then we will proceed further. Okay, so exchange rate we will see this one. So what is the date relevant for determination of rate of exchange? So rate of exchange, price of goods for customs duty calculated, is determined using the rate of exchange as on date when, in case of imports, whenever bill of entry is presented. Export I will talk about it later. This you keep it aside. Exports we will talk about it later because we are only concentrating now on imports. So in case of imports, which dates exchange rate you will take? Whenever bill of entry has been presented either for home consumption or for warehousing. So whenever that bill of entry is presented, on that date, whatever is the exchange rate that we have to take. Okay, in the question they will try to confuse you. They will say exchange rate as on the bill of entry, exchange rate when entry inwards has happened. Entry inwards in the sense whenever the ship has arrived, like that, something they will try to confuse. So they will say whenever the payment has taken place, multiple dates they will give. So I will show you some questions also. What they will say is they will give multiple dates. So they will say 3 dates. Like for example, in one case they say bill of entry has been presented on 15th of January. Entry inwards happened on 12th of January. Payment was happened on 20th of January. They will give exchange rate on all the 3 dates. Say for example, here they have given exchange rate as 85, here 84, here 83. So which exchange rate you have to take? You have to take exchange rate whenever bill of entry is submitted. What is the exchange rate on entry inwards date, on the payment date? All that doesn't matter. In the question, they will try to confuse you by dumping so many dates and all. Don't get confused. When it comes to exchange rate, the exchange rate prevailing whenever the bill of entry has been submitted. In the case of imports, that exchange rate we have to take. Understood? Next. The rate of exchange will be determined by CBIC, or it will be ascertained on the basis of CBIC's directions for converting Indian currency to foreign currency or vice versa. So generally, there are various authorities which will give exchange rate, like CBIC will give exchange rate, RBI will release exchange rate, Foreign Exchange Dealers Association of India, they will also release the exchange rates. But all this you ignore it. Which exchange rate we have to consider? We have to consider the exchange rate which is released by CBIC. Sometimes they will confuse you like this also. They will give what is the exchange rate given by CBIC, what is the exchange rate given by RBI, what is the exchange rate given by the bank, what is the exchange rate given by foreign associations. So like that, multiple exchange rates they will give. Don't get confused. For the purpose of customs, we are going to take only the rate which is given by CBIC. Next. And one more thing for imports. So this is one simple thing which we need to remember. For import, you have to take the selling rate. For export, you have to take the buying rate. So this you remember it. When it comes to import, you have to consider selling rate. When it comes to export, you have to take the buying rate. Basically, small margin will be there. Like for example, they are saying buying rate is 85.25, selling rate is 85.35. Some margin they will keep. So for imports, you have to take the selling rate. For exports, you have to take the buying rate. Next. Yeah. So this is what these are all. This anyhow we will do some illustrations, some examples. And one more note they are saying here, note on RBI's rate. RBI's exchange rate is not considered for customs duty purposes. Only CBI's rate will be used. Okay, right. So we know how to calculate the CIF value. We also know which exchange rate we have to take. So with the help of this background discussion, we'll try to solve some questions. So what I will do is whatever questions which have been given in our institute study material, that only I will use in order to make you understand the concept. Why? Because whatever critical things they are going to ask, that I have covered in the examples, that I will cover in the upcoming examples also. So we'll try to get the feel of the questions. We'll try to do it. So like here, if you see, determine the rate of exchange for the purpose of computation of customs duty in the following cases. So they're asking you to determine what rate of exchange you have to use for the purpose of computation. I will talk only on imports now. Later I will talk about exports. So when it comes to import, they have given different dates. Date of bill of entry. So what is the date of bill of entry? 20th of October. Date of entry inward, which is what? 15th of October. And on first for this, as on this date, the exchange rate is 82 rupees. As on this date, exchange rate is 83 rupees. So now you tell me. And also they have given rate which is given by CBIC on that date, and what is the rate notified by RBI they have given. So which date we have to use? As I have told, in the case of imports, whenever bill of entry is submitted, on that date, whatever exchange rate which is released by CBIC, that I have to take it. So which rate I will take? 82 rupees will be my appropriate exchange rate for the purpose of imports. Okay, next. So since we got the hold of it, so let us try to do some illustrations now. Right, so here we have a few illustrations. So here they have given 3 cases. Compute the, what is the requirement? Compute the value of imported goods for customs purposes with the following information. So 3 cases they have given. Each case we will try to take it separately. First case, price actually paid to the seller, 10,000 rupees. So you can consider something it as FOB. So price paid to the seller is how much? 10,000 rupees is the price which has been paid. Cost of, okay, let us take the format. We'll do one format here. Okay. So first what they are telling, price they are giving. How much price has been paid? 10,000 rupees has been paid. Now they are giving some extra items. Cost of packing material. Should we add this? Yes, cost of packing material should be added. So packing material added 1,000. Sorry. So 1,000 rupees you add it here. Next. Sorry. Labor charges for packing. Will we add this also? Yes, we will add this also. Even whether material or labor, whatever you are incurring for packing cost, that you have to incur. So labor for packing. How much they are trying to say here? 200 rupees. Okay, that also we will add. Next, what else we have? Sorry. Price of material supplied to the seller by buyer free of cost. Should you add this or not? Yes, we have to add this. Remember the chart. Remember the additions. So material supplied free of cost, that should be added. How much? 1,000 rupees. Add it. Next, after that, cost of transport, insurance. This anyhow we have to do it separately. So first we have to determine FOB value as per customs. After making all the optional additions, you will get FOB value as per customs. Then we will see freight and insurance. So insurance and freight. In the first case, they have told freight actual amount has been given. Insurance is unascertainable. Even though insurance is unascertainable, as we all know, 1.125% of the FOB value as per customs we have to take. So we'll say about this later. Cost of transport and insurance. Local transport in India. Should you add this? No. Transport cost only up to the place of importation. That transport cost only will be added. This should not be added. What is the mode of transport? C. So if the mode of transport is C, if actual transport cost is there, that actual we can take. Insurance 1.125% we will have to take it. So now, so here there are, apart from this, there are no optional additions. So if I calculate till here, how much value I will get? I am going to get 12,200. So this will be the FOB value as per customs. Now they are telling the mode of transport is water. If the mode of transport is water, no need to check that 20%, whatever actual cost is there, that you can take. So what is the actual cost of transportation? 1,000. So freight you have to add it. Actual you can take 1,000. Oh, sorry, not this one. 1,000 rupees you have to add. Next, insurance they have told unascertainable. Insurance you can't ascertain. Can we ignore that? No. If you are unable to ascertain the insurance, what you should do? 1.125% of 12,200, that you have to calculate. Yes or no? So 1.125% of 12,200, if I calculate that, so just let me do that calculation part for you. Just I will keep the calculator ready. Okay. So 12,200 rupees into 1.125%. So if I calculate that, it is coming to 137.25. So if I add everything, so let us cross verify with the answer. So 137.25 rounding off they have done. Yes, 12,200 rupees plus 137 we will take. So if you do all that addition, 733 13,337 will be the value for the purpose of customs. Able to understand? Now let us come to case 2. In the case 2, what they have told, actual price paid is 20,000 rupees. So now if you start doing case 2, in the case 2, price paid is 20,000. Okay, we will start with that. Cost of packing material nil, labor charges also nil. So here there is no packing material labor charges, so nothing we will do. Next, price of material supplied to the seller by buyer free of cost, 500. So this we have to add. Next, what happened here? What is the mode of transport? Here also they are telling mode of transport is C. Local transport in India, this anyhow we will not add it, and this we have already considered. They are telling transport is also not ascertainable, insurance is also not ascertainable. Shall we ignore that? No. Till here you will get the FOB value as per customs, which will come to 20,500 rupees. Since the freight is not given, we will take 20% on 20,500. So if you calculate that, 20% on 20,500, which will come to 4,100, and also insurance also you have to calculate 1.125% on 20,500. If you calculate that figure, which will come to 231 rupees. So now that will be the value for the purpose of calculations of customs. So 24,831 will be the value for the purpose of customs. Now we have one more case also. Third case, price paid to the seller is 30,000. Okay, here it is 30,000 rupees. Then what extra information provided? Cost of packing material 500. This we have to add. Labor for packing material 300. This also we have to add. Next, price of material supplied to the seller by the buyer free of cost 2,000. This also we have to add. Now after adding all that, you will get the figure 32,800 rupees. This will be the value for the purpose of customs. So this will be the FOB value for the purpose of customs. Now freight. See here they are telling mode of transport is air. See, if the mode of transport is air, even though the actual transportation cost has been given, they have given actual transportation cost as 12,000. But in the case of air, 12,000 rupees or 20% of FOB, whichever is lower. So what is the FOB for the purpose of customs here? 32,800. So now if you calculate 32,800 into 20%, if I do that math, it will come to 6,560 only. So 12,000 rupees or 6,560 rupees, whichever is lower, how much we will add? 6,560 only we will add. Did they give the insurance cost? Yes, insurance cost they have given 500. We will take the actual only. Here we need not do any 1.125%. So if you add that, the resulting figure will be the value for the purpose of imports, for the purpose of calculation of customs. So 39,860 will be the value for the purpose of determining the customs duty. Understood? Clear and comfortable? So this is one question. So let us try to proceed further and do some more questions now. So going forward with the next illustration, so let us try to solve few more. From the particulars given below, find out the assessable value of imported goods under the Customs Act 1962. So here also they are giving various details. They are asking us to calculate what is the value. First, cost of the machine at the factory of the exporting country. So once again, let us start with our format. So they have told X factory price. So nothing but at the factory of the exporter, what is the price they have given? So what is the price they have given at the factory? 20,000 US dollars. See, these prices are in dollars. So $20,000. Next, transportation charges incurred by the exporter from his factory to the port of shipment. Should it be included? Yes. Exporters of factory to the export port. That also should be added. No. So that is $1,000. Okay, let us add that also. So transportation cost from factory up to export port, which will come to $1,000. Okay. Next, handling charges paid for loading the machine in the ship. Once again, at the exporter's port, loading charges. How much? $100. Okay, this also we have to add. So this will be loading charges. So till here, you will get FOB value as per the exporter. Before adding, so once again, if you remember the chart, whatever chart we have drawn here, right? So this one, this is the price we are arriving. So they gave X factory price, freight from the factory to the exporter's port, and loading the goods at the exporter's port. So here you will get FOB value as per exporter before adding these optional additions. Okay, right. So once again, till here, how much it is? $21,100. Next, what happened? Buying commission. Now they are talking about optional expenditures or optional additions. Buying commission, should it be added? No. I told commission and brokerage, every kind of commission and brokerage can be added except buying commission. So this we will not add. Freight charges from exporting country to India. freight. This anyhow we have to see it later. So that means apart from this buying commission, there is no other kind of additional expenses. So that means anyhow buying commission we will not add it. So there is no optional expenditure. So 21,100 will be the FOB value as per customs. But as I have told you, this amount has to be converted into INR. So what is the exchange rate? If you look at the question, they have given the exchange rate in the question itself. Exchange rate is 85 rupees. So you have to convert that 21,100 at 85 rupees. So if you do that conversion, it will come to 21,100 is the value. So here you can convert it, or even you can convert it at the end also, but better I will do the conversion here only. So better if you could do the conversion here. So 21,100 into 85 FOB value in INR. Okay, 1 second. So before that we can do one more thing. Let us see. Okay, see, freight charges are also given in dollars. No, since the freight charges are also given in dollars, we will do one thing. Freight also will add it in the dollars only. Okay, since in many questions what they will do is this freight they will give in INR. So in those cases, what will be the better thing is you convert here only into INR, then add the freight. But in the given question, what they have done is they have given the freight charges also in dollars. Let us add it here only. So freight also will add it in dollars. So what is the amount of freight they have given? Freight they are telling it as $2,000. So 20% I need to check here. See, in the question they did not mention anywhere it is air. If they did not mention anywhere it is a air transport, we will consider it by way of vessel. Generally we'll consider it as water or land. So unless they say it is an air transport or somewhere there is a hint in the question that it is an air transport, we will generally imagine as other than air only. Since the freight charges anyhow they have given it, we will take the actual, assuming it is other than by air. So once again I am telling you, if in the question they did not say anything about whether it is air or water or road, we will generally not imagine it as air. Unless they specifically mention, we will take the actual. If actual is given as it is, you can take it. So 2,000 freight you will add. Sir, apart from that, insurance also you have to add. No, but in the given case they did not give any information regarding insurance. Look at the entire question here, you will not be able to find any information regarding insurance. Sir, can we skip that? Can we ignore that? No, we can't ignore. Even though insurance is not given, we will have to calculate 21,100 into 1.125%, so that you have to calculate FOB value. So if you do that calculation, that will come to how much? So once again here anyhow answer is there. So 1.125% of FOB, if you calculate, it will come to 237.38. And freight anyhow this also we will add. Now you will get the figure CIF value will get it, which will come to 23,337.38. Now this has to be converted at 85 rupees. If you do that conversion, this is what the value, 19,83,677. Okay, right. Next, I'm proceeding further. XYZ Industries Limited has imported certain equipment from Japan at FOB cost of 4 lakh yen Japanese. The other expenses incurred by XYZ Industries in this connection are as follows. Okay, so now they are telling once again in the foreign currency, they have told FOB cost. What is the FOB cost? Now the currency is in Japanese yens, not in INR. So what they are telling, 4 lakhs. Okay, so 4 lakhs yens, Japanese yens. So I will keep it as Japanese yens. Next, now they are telling expenses. Freight from Japan to Indian port. Freight we will see later. Freight we will do a separate addition. Freight we will do later. Insurance also we will see later. These are two are mandatory additions. No, these two we will talk about it later. Freight and insurance. Let us see whether any optional expenses are there. Designing charges paid to consultancy firm in Japan, 60,000. Should we add this or not add this? I told design, development, plan and sketch related expenditure if incurred outside of India, we have to add it. So here also they are telling designing charges are paid to consultancy firm in Japan, 60,000. Yes, this has to be added. So add designing charges. That 60,000 Japanese yen, that also should be added. Next. XYZ Industries Limited has expended 2 lakh rupees in India for certain development activities with respect to the imported equipment. Should we add it? No. Design development charges incurred in India should not be added. This you have to ignore it. XYZ Industries has incurred road transport costs from Mumbai port to their factory. After importation from the Mumbai port to the factory, they have incurred some freight charges. Should we add this? No, they should not be added. Now they are talking about exchange rate. CBIC has notified exchange rate as 1N at 0.69. The interbank rate was 1N is equal to 0.7. And Mr. XYZ Industries has effected the payment to the bank based on exchange rate of 1N at 0.71. I told they will give you multiple exchange rates to confuse you. Ignore everything. Whatever CBIC rate is there, that only we have to consider. So appropriate exchange rate is 0.69. Okay, exchange rate. When we have to convert it, we have to use the exchange rate of 0.69. Next. The commission payable to the agent in India was 5% of the FOB cost of the equipment in Indian rupees. So whatever 5% of the FOB cost is that, so on that 5% you have to pay that on your FOB 5% you have to pay it as commission. Did they say anywhere it is a buying commission? No. If they don't say anywhere it is a buying commission, we will not assume it. Unless they say buying commission, we will consider it as other than buying commission only. That should be added. So what they are telling, 5% of FOB. How much is 5% of FOB? 4 lakh rupees. So in that 4 lakh, if you calculate 5%, you will get the commission. So commission amount will come to 20,000. So this 20,000 Japanese yens commission you have to add. So how much? 20,000 Japanese yens commission you have to add. So these are the only optional expenditure. Any extra information is there? No, no extra information is there. So this is the optional expenditure which has to be added. Now if I add everything, so it will come to 4,80,000 Japanese yens for the purpose of FOB value as FOB value as per customs. So as per customs, FOB value comes to Japanese yen 4,80,000. Next. Now we have to add two mandatory items. One is a freight from Japan to Indian port and insurance paid to insurer in India. See, insurance figure, actual figure they have given. This insurance figure as it is we will take. Insurance figure in INR they have given. So we will take the insurance figure in INR. Since insurance has been given in INR, let us do one thing. Here only we will convert it. Here only we will convert it into INR. Okay. So let us do the conversion. So which rate we have to take? So in the question we have already marked the rate of 0.69 we have to take. So if you do that conversion, so let me do that conversion for you. So 4,80,000 into 0.69. If I do that, it is coming to 3,31,200. INR will come to 3,31,200. Now to this we have to add the freight. Now that and we have to add insurance. See, insurance cost directly they have given. If insurance is given, actual we will take. So 20,000 rupees of insurance we will take it. Now they are talking about freight. How much is the freight they are telling? Freight from Japan to Indian port is 40,000 yen. How much? 40,000 yen. So did they say anywhere in the question the transportation is happening by way of air? No, they did not mention anywhere the transportation is happening by way of air. So we will imagine this is not by way of air and actual freight we will take. Actual freight itself we will take. So what is actual freight? 40,000. So anyhow, since we have already converted that into INR, so this 40,000 rupees or this 40,000 N also let us convert into INR. So 40,000 into 0.69, if you do that math, which will come to 27,600. So freight actual we will add it. So 27,600 we have to add. So which will come to 800. Here also 8, 7, 3,78,800 rupees will be the value. See, here there is a mistake in the answer. Here actual freight they have given in the question as 20,000 rupees, but I don't know from where they have got this 10,000 rupees of insurance. This is a mistake in the material. This is a mistake in the material. You can ignore this. So you can stick with this answer. So as you could see here in the answer, whatever they have solved, they have added the actual insurance cost as 10,000. Yes or no? They have done that, but that is not right. In the question, clearly they have given insurance paid to the insurer in India is at 20,000 rupees. 20,000 they should have added it here. Okay, so that's why this answer is wrong. Actual answer is 3,78,800 rupees. Mistake in the answer. Fine, right. So let us proceed ahead. Now, let us proceed further now. How shall your answer differ if the information regarding freight and insurance are not available? Now, they are changing the facts. Let us keep the question as it is. Just imagine if the freight and insurance is not given, then what will be your answer? Till here, everything will remain the same. So till here, actual value will FOB as per customs value will come to INR 3,31,200. If the freight is not given, what we will do? 20% we will add. 3,31,200 into 20%. If you add it, which will come to 66,240. If insurance is not given, here we will take 1.125% of the FOB value as per customs. On this 1.125% we will multiply, which will come to 3,726. Then our valuation will be 4,01,166. This will become our value on which you are required to pay the customs. Understood? Next. Let us come to the next question. BSA and Company Limited have imported a machine from UK. From the following particulars furnished by them, arrive at the assessable value for the purpose of the customs duty payable. Once again, they have given various information. From that, we have to calculate what is the value. Okay, let us see. FOB cost of the machine. How much? UK pounds. The currency they have given in UK pounds. So what is the FOB value? 10,000. Not FOB value as per customs before adding all the additions and all. Before that, the value is 10,000. Okay, let us take it. FOB of the exporter. How much? UK pounds. UK pounds 10,000. Very good. So now we have to add any optional additions. Let us see whether anything is there. Freight is by air. We will do it later. And clearly they have mentioned they are doing the transportation by way of air. That actual freight they have given. But we know that in case of air, 20% restriction is there. That we will anyhow see later. Engineering and design charges paid to a firm in UK. Should this be added? Yes. Engineering design charges incurred outside India should be added. 500 you add it. Design and engineering charges 500 UK pounds you have to add it. Next. License fee relating to imported goods payable by the buyer as a condition of sale. Should we add it? Yes, we have to add this. And this one is 20% of the FOB cost. That means on this 10,000, 20%. If you calculate that, how much it will come to? 2,000. So that license fee and all 2,000 rupees that you have to $2,000, 2,000 pounds, sorry, that you have to add. Next, material and components supplied by the buyer free of cost. Should this be added? Now this is in INR. Now this they have given in INR. So we can do one thing. What we can do is till here we can convert. After that, all they have given it in INRs only. So till here we can do the conversion. But once again, I am telling FOB value as per customs we have not yet arrived it. FOB value as per customs we have not yet arrived it. So till here, or else even you can do one more thing. You can simultaneously calculate the INR also. You can have a column here. I will calculate in INR. So, but for that we need to know exchange rate. Let us see what exchange rate they have given. Interbank exchange rate as arrived by the authorized dealer is 102.5 per UK pound. CBIC has notified for the purpose of section 14 of the Customs Act exchange rate as 100.25 per UK pound. So which one you will take? Will you take the exchange rate fixed by authorized dealer, or will you take the exchange rate fixed by CBIC? You have to take the exchange rate fixed by CBIC. So what you can start doing here is simultaneously one more column you can take. So you have to take 100.25. So let us do the conversion. Let us do that conversion now. So 10,000 into 100.25. So which will come to 10,02,500. 10,02,500. Next 500 into 100.25. So which will come to 50,125. Next 2,000 into 100.25, which will come to 2,05,500. That only, no, 100.25 only, right? Yeah, 100.25. Next, okay. So now instead of doing the addition, let us see whether anything extra is there. What else is there? Insurance paid to the insurer in India. So this we will see later. But this components is there, no? Material and components supplied by the buyer to buyer free of cost value. This 20,000 also should be added. So this they have directly given it in INR only. This material cost 20,000 rupees we will add. Insurance we will see later. So after deriving the FOB value as per customs, then we will add the freight and insurance separately. Anyhow, freight actual they have given, actual we will take. Buying commission paid by the buyer to his agent. Buying commission, should you add it? No, we should never be adding it. Buying commission should not be added. So till here if you calculate, that will become the FOB value as per customs. How much that will be? How much that will be? 1,02,500 plus 50,125 plus 2,05,500 plus 20,000. So if I do all this math, it is coming to 12,73,125. So let us cross verify. Is it the same here? Yes, 12,73,125. This is the FOB value as per customs. Now we have to do addition for freight. But here the freight is by air. What is the actual freight they have given? What is the actual freight they have given in the question? Actual freight they have given 3,000 UK pounds. So when I do 3,000 UK pounds, when I do that conversion into INR, but actually 3,000 into 100.25 is the appropriate exchange rate. So 3,000 rupees into 100.25. So which will come to 3,750 or 20% of FOB, no? Or 20% of 12,73,125. 12,73,125 into 20%. So if I do that calculation, which is coming to 2,54,625, whichever is lower, that only we have to take. So 2,54,625 only I will take. Why? Because whichever is lower, that we have to consider. So even in the answer, you will be able to find the same thing, 2,54,625, that only you have to consider. Why? Because in the question, they have clearly given air. Next. After that, we have to take insurance. Insurance, you need not do any math. Why? Because insurance cost they have given directly. So 6,000 they have given, no need to do that 1.125%, that 6,000 rupees you have to add it. So resulting figure you will get, so plus 12 lakhs, total value you will get 125 plus 6,000, which will come to 15,33,750. This will be the total value for the purpose of calculating the customs duty. Yes or no? So let us cross verify with the material. So yeah, 15,33,750. So this is what the value even we have also got. Now, so we have one more question. X Limited imported goods from Switzerland 400 units at $110. Further information is also needed to be considered. They have given. So first FOB price they have given. So what is the FOB price? So once again, let me start doing the math here. FOB price. So how many quantity they have imported? 400 quantity at 110. So if you multiply that, the figure you will get is 44,000. Now to this we have to add additional expenses first. Optional additions we have to do. What are they? Freight, we will see the treatment later. Vessel they have given. So actual we will take. Demurrage charges paid to port authority. What did I say? Ship demurrage charges you will add it. But here it is a demurrage charges paid to port authority. For port I have paid the demurrage charges. It should not be added. It should not be added. Insurance actual cost they have given, but anyhow insurance later we will see. Apart from that, any optional additions are there. Royalty for use of patent, should we add this? Yes, we have to add this. Royalty related to sales, that also we should add. How much it is? They are telling $1,000. Okay, 1,000 we will add. And not just that, royalty as a condition of sale, this also we have to add. If it is a condition of sale, that $20,000 also you have to add. So resulting figure, whatever you get, that will be the FOB value for the purpose of customs. So what will be the FOB value? 44 plus 1 plus 65,000 will be the $65,000 will be the customs value. Exchange rate also they have given. This 82 is the exchange rate. But anyhow, freight and insurance is also given in dollars. So actual we will take. Anyhow, we have to take the actuals only. So freight you can take. Freight is how much? $5,000 as it is we will take, because it is by way of vessel. Then they have given insurance. This also actual we will take 50. So if you do all that addition, the amount will come to $70,050. This has to be converted at INR at 82 rupees. You will get 57,44,100. That will be the assessable value for the purpose of calculation of customs duty. Clear, everyone? So now let us come to the next illustration. Illustration number 8, we will try to do. C Limited, an importer, has imported a machine from USA at FOB cost of $10,000. So FOB cost they have given $10,000. Okay. Freight from port in USA to Indian port. So anywhere in the question, I think they did not give. This is a air transport. So we'll consider it as water vessel transport only. So freight they have anyhow given. So actual freight we will take. Anyhow, freight adjustment we will do it at the end. Insurance was paid to insurance in India, 6,000 rupees. Actual only they have given. This also actual we will take. This freight also actual only we will take. Design and development charges of 2,000 were paid to a consultancy firm in USA. Should this be added? Yes, this has to be added. So design development charges incurred outside India, that you can add it. The importer also spent an amount of 50,000 in India for development work connected with the machinery. Should you add this? No, you should not add this. 10,000 were spent in transporting the machinery from the Indian port to the factory of the importer. No, this we should not add it, because this is a post importation charges. Rate of exchange as announced by RBI was 84.7. Rate of exchange as announced by CBIC was 85.60. Rate which bank recovered the amount from the importer was 85.3. So which rate you have to take? CBIC rate I have to take 85.60. At this rate you have to convert. Next, foreign exporters have an agent in India. Commission is payable to the agent in Indian rupees at 5% of FOB price. So did they say anywhere buying commission? No, it is not a buying commission. So this commission you have to add it. So there is no nothing 20%, 1.125%. That interpretations is also not there, guys. So whatever we have to add, that you have to add. Whatever I told you ignore, that you should not ignore. That you have to ignore. And finally, whatever figure you got, that you have to convert it at 85.60. You will get the value for the purpose of customs. Very simple. I think you can manage the answer, because multiple kind of questions we have done. Similar questions we have done multiple times. Next. Let me see whether any other illustrations are there. These are yet to be discussed. These we have not yet discussed yet. Then whether any other illustrations are there, that I will try to see. Okay. These concepts we are yet to discuss. There should be some questions. I was looking for that. Yeah, this one is there. This is also one simple question. from the under mentioned relating to import made on 12/10/2024 of product Mimic from New York, USA to the Kochi airport by Mr. Prahalad, the importer, details they have given. They are asking us to calculate assessable value also. They are even asking us to calculate the tax and also duty payable by Mr. Prahalad. Anyhow, let us come to the details. So airport, they have told Kochi airport. That means that this transportation is happening by way of air. In the question itself, they have told us. Okay, let us see what else we have. So FOB value is $10,000. Okay. Cost of transport, they have given 3,500, but we have to check 20%. We have to restrict it to 20%. That calculation we'll do later. Insurance, actual cost they have given, we will take it. Unloading charges at Kochi airport. Should you take this? I told no. Unloading charges after importation, after the place of importation, you should not include it. So unloading charges at Kochi airport, this should not be considered. So basic customs duty is a 10%, IGST is 18%, exchange rate notified by RBI is 84.5, exchange rate notified by CBIC is 84. Which one we will take? This we will take. So very simple question, nothing. So this will become FOB value. Why? Because there are no additions. So 10,000 will become FOB value. So what is the freight? They are telling actual freight is 3,500, but since it is by air, so either 3,500 or 20% of the FOB. What is FOB value? 10,000, which will come to 20% of 10,000, which will come to 2,000. So 3,500 or 2,000, whichever is lower. Which one is lower? 2,000 is lower. So 2,000 freight we will add. Insurance actual one we will add. 1,000 we will add. So CAF value will become 13,000. And this has to be converted into INR. Which rate we will use for conversion? 84 we will use for conversion. So if you convert that, 10,92,000 rupees. So assessable value is how much? 10,92,000 rupees. Okay. Now, what and all taxes you are required to pay? So as I have told, basic customs duty you have to pay. What is the rate they have given? The rate of customs duty in the question they have given it as 10%. Okay, multiply that. On 10% we will calculate. If you calculate that, 1,09,200. Then we know social welfare surcharge will be there at the rate of 10%, which has to be paid on basic customs duty. So if you calculate that, 1,09,200 on that customs duty 10%, if you calculate, which will come to 10,920. That will be the surcharge. So sorry, social welfare surcharge. Now if you add everything, that will become the value for the purpose of calculation of IGST. So even they have given IGST also, IGST information also they have given. So you have to charge IGST also. But on what value you have to calculate IGST? After including all the customs. After including all the customs. So after adding all these three things, what will be the figure? The figure will be 12,12,120. So 12,12,120. This will be the value. IGST at the rate of 18% is required to be paid on here. On this value 18%, if you calculate, the amount will come to 2,18,182. So I'm not doing all the math. 2,18,182. So total this amount also you have to pay. Sir, you are required to pay compensation cess also. Yes, you are required to pay compensation cess also. But anyhow, they did not give any information regarding GST compensation cess. What is the rate of GST compensation cess? All they did not include in the question. So we will not do that calculation. We'll stop our calculation with basic customs duty, social welfare surcharge, and IGST. Yes, even GST compensation cess is also required to be paid, but no information they have given in the question regarding the GST compensation cess. So we will ignore that. Next. Okay, so here we will do. Here also I disagree with the answer here. On one small point I will disagree with the answer. Okay, so what I will tell you. Why I am disagreeing, I will tell you. Yes, so regarding this treatment, regarding this local agents commission, I have a small disagreement. So first let us solve the answer in our way, whatever we have learnt. Okay, so illustration number 14. Compute the assessable value of a machine imported from Germany by RLI Limited under Customs Act 1962. So they're asking you to compute the assessable value. Also determine duty liability. They're also asking you to calculate the duty liability. So figures are given in US dollars. So FOB value, how much? 30,000 rupees. Air freight. So actual freight they have given, but as we all know, since it is a air freight, it will be restricted to 20% of FOB. So we have to calculate what is the FOB value for customs. That we will do later. Insurance cost they have told not known, so we have to calculate it at 1.125% of the FOB value for the purpose of customs. So what we will do, first we will start with FOB value. How much is the FOB value they have given? So FOB value they have given it as $30,000. 30,000. Okay, very good. Freight and insurance will do adjustment at the last. Designing charges incurred in India. What you will do? Will you add it? No, you will not add it. So we'll do one thing. Since even all the expenses are also given in INR only, apart from this air freight and all. So what we will do is we will convert it. We will convert into, we will maintain one separate column. So US dollar we will maintain, INR also we will maintain. But for that we need to know exchange rate. Let us see what is the exchange rate. So rate of exchange notified by CBEC is 85. So this we will convert. So this 30,000 rupees at 85 we will convert. So if I do the calculation, so 30,000 rupees into 85, if I do the math, it will come to 25,50,000 rupees. Okay, very good. Next, what extra information has been provided? Indian agents commission. In India, they have paid some commission to the agent. How much? 20,000. Did they say anywhere it is a buying commission? No, they did not say anywhere it is a buying commission. So we have to add that commission also. We have to add that commission. In INR only they have given. What is the commission they have paid? So commission they have paid 20,000 rupees. So 20,000 rupees of commission directly in INR they have given. That only I will take. Next, transportation charges from port to factory in India. Should you include that? No, we should not consider it. Then they have given what is the rate of duty, what is the IGST they have given. Apart from that, nothing else. So my FOB value for the purpose of customs, my FOB value for the purpose of customs, it will come to how much value? 25,70,000. This will be the FOB value for the purpose of customs. Now they have given freight. What is the actual freight they have given? Actual freight they have given it as 7,250. So if you start converting it, 7,250 into how much dollars? 85, or 20% of FOB value on customs, 20% of 25,70,000, whichever is lower, that figure we have to consider. So if you do that calculation, 7,250 into 85, 7,250 into 85, which will come to 6,16,250, or 20% of 25,70,000 into 0.2, which will come to 5,14,000. Whichever is lower, that we have to take. So we will add only 5,14,000. That will be the freight. Then we have insurance. Insurance we have to calculate it down. 25,70,000. That will be the FOB value as per customs. So 25,70,000 into 1.125%. If you multiply that, so 25,70,000 into 1.125%. If I add that, the figure will come to 28,912. I will do it to 913. Rounding off I will do. So now total assessable value for the purpose of customs will be 25,70,000 plus 5,14,000 plus 28,930. So total value is going to come to 31,12,930. So on this customs duty at the rate of 10% you have to pay. So if you calculate that 10%, which will come to 3,11,291. On that 10% social welfare surcharge you have to pay. So which will come to 31,129 rupees. Now when you add all this, so if I do all that math once again, so 31,12,930 plus 3,11,291 plus 31,129. So this will become my assessable value, 34,55,333. On this IGST at the rate of 18% also will has to be calculated. So if I do that also, it will come to 6,21,960. So total this GST also you are required to pay. So after adding GST, the value will come to 34,55,333, which will come to 40,77,293. This will be the value inclusive of GST. But in the question, if you look at it, in the answer, if you look at it, the things will be a little bit different. The GST figure and all will look a little bit different. So if you see here, correct only. So I got 6,21,960, but here they got 6,21,116 only. And even on customs also, there will be a little bit of difference. For our calculation, we got 3,11,291 is the customs, and social welfare surcharge will be this much. This is what actually correct. But why here, as per the institute material, you have got the wrong answer is, so do one thing here. If you look at the answer, see, for the purpose of customs, FOB value for the purpose of customs, to that, even that commission should be added. No, that is what even the format they have given in the study material. Here, what they have done is, before adding that commission only, they have taken the FOB value. But as per the format which they have given in the study material itself, what is the format they have told? Commission should be added. After adding that commission, the resulting figure, whatever we get, that will be considered as FOB value for the purpose of customs. So on that you have to multiply that 20%. On that you have to multiply that 1.125%. That is what even we have done in the answer. So FOB value to that commission, optional addition that we have to do, the resulting figure we get, that is the FOB value for the purpose of customs. But in the answer in the study material, what they have given is, they have given FOB value, this itself they have taken it as FOB value, $30,000 only they have taken it as FOB value. They did not do that adjustment for commission. They did not add that commission part. So this is what I disagree. I don't agree with this answer. Why? Because the format itself they have changed here. Commission also should be added. That will become the FOB value as per customs. On that you have to multiply that 20%. On that you have to add that 1.125%. So that's why the figures whatever I have given here and the figures whatever the in the study material they have given, those are different actually. Understood? Clear and comfortable? Yes, here and there these kind of mistakes in the study material is there here. But yes, this is what the correct answer. This is what the appropriate answer. Okay, right. Sir, what to follow in the examination? Yes, you can write this answer in the examination. You have to write this answer in the examination only. But unfortunately, if this question is as it is tested, if this question, so I will tell you why this is wrong. I will tell you why, because we will have one more question. We'll have one more question. If you look at that question, no, they have, there will be some other question, right? See, if you solve this question, here they will do whatever we have done. Commission payable to, in this question also you will find commission, but here they have done it correct only. Like if you see price of the machine, then they have added design and development charges. To that they have added commission. Then they have determined FOB value as per customs. On that they have multiplied 20%. On that they have multiplied 1.125%. See, two questions, different treatment they have done. See, if you read the facts, this question I will do it as, I will give it to you as, I will ask you to solve it on your own. Whatever I have done now, whatever we have solved it like this, in the same manner they have solved it. Same facts, everything is same. But here they have added it, here they have considered that local commission for the purpose of FOB value as per customs. But in another case, they have ignored it. They did not add it to the FOB value as per customs. Two same questions, but different treatment. Yes or no? So I don't personally believe this answer is correct. So why? Because anyhow we have similar question, illustration number 16 we have, which is a very similar question. There they have in fact added that commission to the price of the machine for the purpose of calculating the FOB value as per customs. On that they have multiplied that 20% and on that they have multiplied 1.125%. So this answer will be correct, but this answer is not correct. Same point, two different treatments they have done in the answers. So this I don't agree. So this you can follow. This answer you can follow. Okay, clear and comfortable? Right. So this is what regarding this question. So this question you solve it. See this, you can download the material from the ICMA website and all. So there you can get all this study material. From there only I'm solving the questions. Yes. Next. See, this is also one more straightforward question. So this is also just you have to follow the format. This also I would suggest you to solve this once, because we have done multiple questions. Everything if I do, you will not get that practice. This is same as it is. We have done so many kind of questions. Just that format is there. No, you have to fill that format. So the most important thing here is you have to remember this format. That is the only thing. This format you have to remember when, at which point of time, what will be added. If you remember this format, everything is so damn simple. Okay. So just this question, this illustration number 17 is just like filling of this format only, filling it at the respective places. So this also you try to solve it on your own. You can easily crack it. There will not be any confusion here. Okay. So one thing which you have to keep in mind is this light rate charges. Everything else will remain the same. But as we have seen in the format, light rate charges will not be added here. Light rate charges will not be added here. Light rate charges will be added here. Ship demurrage charges and light rate charges will get added after freight and insurance. There you have to add it, not in the FOB value as per customs. So that's why I insisted at the time of explanation of this table also. So this ship demurrage charges and light rate or barge charges should be added after making that freight and insurance adjustment. At that point of time you have to add. So that is the only new thing here. Nothing else you will be able to find it. Yeah, that's it. See here, they have added here, add light rate charges paid by the importer at port of importation. They have added this here. That is the only one thing which you have to be careful about. This should not be taken into FOB value as per customs. Everything else will remain the same. So this also you can solve it, just filling the table. Okay, so these illustrations are enough regarding the concepts, whatever we have learned in the valuation, but we have valuation rules to discuss. I have completed that calculation of assessable value, but we have some valuation rules, or rule 3, rule 4, rule 5, rule 6, rule 7, and rule 8. So some 8 rules are there for the purpose of valuation relating to imports. So that valuation rules we'll try to do it in our next class. Hey my dear students, welcome back. Let us resume our discussion. Today we are going to complete our entire customs related discussion. So if you here and there a few concepts are left out for your examination, so if we are done with that, an hour of discussion, somewhere around an hour of discussion is left. If we are done with that entire customs portion, we would have completed 10 marks of weightage we would have covered. So before I proceed further, let us try to have a quick look of what and all we have understood in our previous session, so that we will try to have a quick look. So in fact, in the previous session, we did not discuss anything new. In the previous session, we have solved the questions on valuation. So valuation related rules, we have discussed it in before session. So, and in the previous session, what we have done is we have solved some questions in order to get a feel of the exam, how the questions will be tested, what order you have to follow, and all we have seen. So if I give a quick recap of the valuation, how you are supposed to do the valuation. First, you have to start with the price, X factory price you have to take. To that X factory price, you have to add the transport from the exporter's factory to the exporter's port, loading charges at the exporter's port, that also you have to add. The figure which you get, that we call it as FOB for the purpose of exporter. To that, you have to make optional additions if incurred, like commission, brokerage, packing, returnable materials, containers, all that things we have covered. Optional additions you have to add. So if you do all that, then you will get the FOB value as per customs. So to this, you have to add the freight. If actual is given, that actual we will take. If air, if the transport is by way of air, even though actual has been given, we will restrict it to 20% of the FOB value. If it is not given, if freight is not ascertainable, directly we will take 20% of the FOB value. And in addition to that, insurance also we have to add. If actual insurance value is given, that actually we will take. If not given, 1.125% of the FOB we will take. And here I have told you to add one more thing: ship demurrage charges, right? Light rate charges, barge charges. So that thing also you have to add. Then the figure you get, which we call it as CIF, cost, insurance and freight, which we also call it as assessable value. On this value, we will calculate the rate of customs duty, and accordingly we will determine our duties. And one more important key takeaway from our discussion: when you are converting the foreign currency into INR, you have to take the exchange rate. For the purpose of imports, you have to take the exchange rate which is released by CBIC, and on which date? On the date whenever the bill of entry has been submitted, that date's exchange rate we are going to take. So this is what the main discussion. Yesterday 1 hour of time we have spent on applying that concept in the questions. So that's what we have done. Now let us try to understand few more things. Now next concept which I'm going to explain is valuation rules. There are some valuation rules we have to understand. There are valuation rules for imports also. There are valuation rules for exports also. Exports we will see later. Exports hardly it will take 5 minutes. We don't have any questions to solve for exports also. But when it comes to valuation rules relating to imports, we have to discuss here. We have some significant discussion. So first I'm going to talk about valuation rules. And rule 1 general will be there, rule 2, rule 1 definition, rule 2 applicability. So like that, some things will be there. Rule 1 and rule 2 are not relevant. So we have to discuss now from rule 3 till rule 9. These rules relating to custom valuation rules, that to import rules. From there also rule number 3, from rule number 3 till rule number 9. So this is going to be important. Okay. So now let me try to list out what does this rule talk about. So rule number 3 says that in order to determine the value of the customs, in order to determine the value of the imports, you have to take the transaction value. So rule number 3 talks about transaction value. What should be the value? They say transaction value. I will talk about each rule in a detailed manner, but just let us get an overview. Then we have rule number 4, which says identical goods, which talks about identical goods, not identical, I guess. So let me show you the order. Right. Yeah, identical goods. Rule 4, we have identical goods, value of identical goods. Then we have rule 5, value of similar goods. We have rule 5, which is talking about determining the value of similar goods. Then we have rule 6. I will talk about this rule 6 later. Once we understand the methods, then you will get to know. Rule 7 talks about deduction method. Rule 7 talks about deduction method. Rule number 8 talks about calculation method. Calculation method for determining value. And rule number 9, we have something called residual method, we call it, or even best judgment assessment also we say. I will talk about it later. So I'm not explaining any concept, just I'm going to list out the rules which we are going to see. So what does valuation rules say? Valuation rules for the purpose of imports, mainly we have to concentrate from rule number 3 till rule number 9. What does each rule talk about? Rule 3 talks about transaction value. Rule 4 talks about value of the identical goods. Rule number 5 talks about value of the similar goods. Rule number 6, I will explain that later. Rule number 7 talks about deduction method. Rule number 8 talks about calculation method. And rule number 9 talks about residual method. So first I will pick up rule number 3, which is talking about transaction value. Sir, what is this transaction value? See, this transaction value, we have already used it in the concepts, whatever we have solved, we have already used the transaction value. See, everywhere I was saying that FOB price, the exporter is exporting the goods and FOB price of the goods is at 10,000. Basically, say for example, $10,000. There's an importer in India, he's buying the goods from US. The US exporter has told that FOB price is $10,000. So what do you mean by that? This 10,000 rupees is the transaction, is the value at which the transaction has taken place. This import transaction has taken at a value of $10,000. This is the price quoted by the exporter to the importer for the purpose of buying of the goods. So that value we call it as a transaction value. That value we call it as what? Transaction value. The price, the transaction, the value at which the transaction has taken place between the importer and exporter. See, in the previous sessions, whenever we have solved the questions, in the question itself they have told ex factory price or FOB value. They have told it in the question only. So that itself we have taken it as starting point for the purpose of calculation. But what does rule number 3 says is, so rule number 3 says that whenever import export transaction has taken place, you can take the transaction value, the starting point, you can take the transaction value itself as the value of the transaction. Like for example, if in the question they have told that FOB, the transaction has taken place at an FOB of 10,000. So this transaction value you have to start with. This is from where you have to start calculating the value of imports. But what does rule 3 say in a detailed manner is, rule 3 says two things. The transaction might have been importer and exporter, the parties to the transaction, may be related parties, may not be related parties. The transaction value, the transaction whichever is taking place between the exporter and importer, we have to see the relationship. If importer and exporter both are not at all related, they don't have any kind of relationship between them. If that is the case, in that case, whatever transaction value has been given, that transaction value we can consider, we can accept it. If the importer and if the exporter, they are not related parties, they are not related with each other, then you can consider the transaction value as acceptable, and on the basis of that transaction value we determine the CIF value, and on that basis we calculate our customs duties when both are not related. But in case if the transaction has taken place between related persons, if I came to know that say for example, there is a person in India, he wants to buy the goods from US from an exporter. Now this exporter has sold the goods to this importer. They told that the transaction value is 5,000 rupees. But if it was found out that this importer and exporter both are not independent parties, both are related persons, then the act says, then obviously no, then do you think whatever price that has been quoted between the related persons, do you think that will be acceptable in general circumstances? No. Because when two parties are related, the transaction might not happen at the fair price. So that's what even the Customs Act also says. In case if the importer and exporter, they both are related persons, we will not consider the transaction value. We will not accept the transaction value. If the exporter is saying 5,000 rupees is the value for the transaction, we will not take this 5,000. We will not consider this. Why? Because this might not be a better representation, because you both have related. Some influence might have been there. So Customs Act also says here we will not accept the transaction value for the purpose of valuation. Here you have to follow some other methods. Here you have to follow some other methods. Sir, what are that other methods? You have to start following the methods from rule number 4 to rule number 9. You have to determine the value on the basis of rule number 4 to rule number 9. So in case if the importer and exporter are not related persons, no need to go to 4, 5, 6, 7, 8. That rules you need not refer. Whatever transaction value is there, that itself we will consider it as value. That itself the customs authorities will accept, and that will be used for the purpose of calculation of the customs duties. But however, if both are related persons, then the customs authority says we will not accept the transaction value. You have to determine the value separately according to the subsequent rules. But here the act says one more thing. What exception they have given here is, say for example, if the transaction is taking place between importer and exporter, but both are related persons. But if the importer is able to prove to the custom authorities, if the importer is able to prove it to the government basically that even though they are related persons, that did not had any impact on price. If you are able to prove to the customs authorities, boss, yes, agreed, importer and exporter, we both are related, but our relationship did not had any effect on our price, the transaction value is genuine, there is no influence in determining the price. If you are able to prove it to the customs authorities, then they will accept that transaction value. But in normal circumstances, government will go with the assumption whenever the importer and exporter are related, transaction value is not acceptable. But if you are able to prove it to the government, sir, we are related, agreed, but price is not influenced by our relation. If you are able to prove it, then the government might accept that transaction value as the starting point. Understood? But here you will get some doubts. Sir, who is a related person? Who is a related person? When we will consider two entities are related, it will be very similar to the definition of related person, whatever we have seen it under GST. Okay. So now first we will try to cover rule 3. After that, I will talk about rule 4 to 9. So first let us try to read it. What does rule 3 exactly say? So let me come to rule 3 here. Yes. See here. Rule 3. What does rule 3 say? Transaction value is accepted if the following conditions are met. If they are giving you certain conditions, if that conditions are met, the government will accept that transaction value. What are the conditions? Sale occurs in the ordinary course of trade under fully competitive conditions. It is not a transaction beyond ordinary course of business. It should be a transaction within the normal course of business. As per routine terms and conditions, the transaction should have taken place. No restrictions on the use of the goods by the buyer, except for legal or public authority restrictions or restrictions on resale geographical area, or that don't substantially affect the goods value. Similarly, what government also says is, if the transaction is taking place between two parties, then transaction value itself will be accepted. When these goods are getting sold, there should not be any restriction. That means exporter should not say, hey, I am selling you the goods. No, after you have purchased the goods from me, you can use it only for limited purposes. That kind of restrictions should not be there. However, they can have restrictions like geographical restrictions. They can have resale related geographical restrictions they can keep. Like an exporter can say, boss, I'm selling you the goods, you are an importer, I will sell you the goods only if you are, but I will give you permission to resell the goods only in the area of Hyderabad. So that restriction is acceptable. Why? Because they might have, these foreign entities might have agents, they will give geographical specific selling powers. So that restriction they can keep. If that restriction is there, still you can take the transaction value as acceptable, or those conditions which don't substantially affect the goods value. Okay. So first condition, sale should have happened in the ordinary course of business under fully competitive conditions. Number 2, there should not be any restriction on the use of the goods by the buyer, except for legal or public authority restrictions, or restrictions on resale of geographical area, or those conditions which don't substantially affect the value. Similarly, the sale is not subject to conditions that make it difficult to determine the value. So once again, it is related to conditions only. This sale should not be made under so many complicated conditions where determining value becomes very complicated. It should not be like that. Any proceeds from resale or use of the goods by the buyer are not shared with the seller unless an appropriate adjustment is made. Or in case if the exporter has sold the goods to the importer with a condition that whenever you are making a subsequent sale, you have to share that money with me, then also transaction value is not acceptable. But when it will be acceptable is you have to adjust that once again. Subsequent sale, whatever you are sharing with the exporter, that you have to add it back. That's what we have done. That's what we have done in the optional additions in the previous session, if you remember. Next, the buyer and seller should not be related. Both the buyer and seller should not be related. So when all these conditions are satisfied, rule 3 says that you can take transaction value. Customs authorities will not question. Customs authorities will accept that transaction value. Able to understand? So tell me, what are the conditions which are required to be fulfilled, which is given under rule number 3 to consider the transaction value as acceptable? Number 1, sale should have occurred in the ordinary course of trade. There should not be any restrictions on the use of the goods, except some authority, legal or public restrictions, or resale on geographical locations, or those conditions which don't substantially affect the price. Number 3, the sale should not be subject to conditions that make it difficult to determine the value. Condition number 4, any proceeds from the resale of the goods should not be shared with the seller unless an adjustment is made, or the buyer and seller should not be related. The last condition is very, very important. Now you all will get a doubt, sir, who will be related party? You are telling related person, sir, who will be that related person? This related person definition will be very similar to the definition of related person, whatever we have seen under GST Act. Sir, who will be considered related? Let us see. The buyer and seller are considered related when they are officers or directors of each other's business. Same we have seen in GST. If they are legally recognized partners, then also they will be considered as related. One is the employer and other is employee related person. One who owns or controls 5% or more of the voting rights in both business. In GST they have told 25%, but here they are telling 5%. If you have even 5% of voting rights in other entity, then also you will be considered as related. This is one point where there is a change. This is one such point where there is a change. In case of under GST law, they say if you have 25% of the voting rights or profits, then you will be considered as related. But for the purpose of customs, even if you own or control 5% or more of the voting rights in both businesses, then also, sorry, one owns or controls 5% or more of the voting rights in both businesses. Sorry. So what do they mean by here is, say for example, there is an entity X Limited. Now this X entity owns 5% in Y Limited. This X Limited owns 5% in Z Limited. Since a third party is controlling 5% or more in both the entities, Y and Z both will be considered as related. Y and Z both will be considered as related. The same thing they will say even in the GST Act also, but instead of 5%, they say 25%. If one controls 25% or more in both businesses, then those both entities will be considered as related. This is one difference. And one controls the other. Similar to GST definition, related party, one controls the other, or both are controlled by a third party, or they both collectively control a third person, or they are family members. And legal persons also can be related, not just individuals, even companies also can be related with each other. And one more point is there here, one more difference is there here. Sole agent, distributor or concessionaire relationships will be considered related only if they fulfill above criteria. So here I want you to add one more line here, are considered related only if above criteria is met. This line was missing. I want you to make this correction. Only if above criteria is met. See, what is the difference here is, in GST they say if you are a sole concessionaire, if you are a sole distributor, if you are a sole agent, automatically you will be considered as related person, where under GST. But here what they say here is, under customs what they say here is, if you are a sole concessionaire, sole distributor or sole agent, in order to be considered as related person, you should fulfill any of these conditions. You should fulfill any of these conditions. Only when you are getting covered above, then only you will be considered as a related person, where under customs. But in the case of GST, what did they say? If you are a sole concessionaire, sole distributor, sole agent, directly you will be considered as a related party. But in the customs, what they say here is, if you are a sole agent, sole concessionaire or sole distributor, you will not be directly considered as a related person unless you are coming under any of these conditions. Okay, so what is the difference? So related persons, related person under GST, related person under customs. Two differences are there, just 2 points of difference. One is voting rights, they say 25%, where in GST, if you are holding 25% or more of the voting rights, you will be considered related. But in customs, they say 5%. That one point is replaced. Second difference, if you are a sole agent, sole concessionaire or sole distributor, you will be directly considered related. But under customs, if you are a sole agent, sole concessionaire, sole distributor, you will not be considered related unless you fulfill criteria. Unless you fulfill any of the criteria, then only you will be considered related person. These are the two differences. Okay, next. One more thing also I wanted to share here. Yeah. No, that related person I told you, even though you are a related person, but still if you are able to prove that price did not had an influence, then also it will be accepted. Somewhere they will try to say it here. Just give me a moment. Yeah, see here. Transaction value, related buyer. Transaction value can still be accepted if the buyer and seller are related in certain cases. Buyer and seller both are related. Generally, their transaction value should not be accepted, but the customs authorities are giving you permission. If buyer and seller both are related, still in that case also we can accept a transaction value, provided if you can prove that the relationship did not affect the price and the value of the goods is close to the transaction value of identical goods or similar goods to unrelated Indian buyers, or deductible value, computed value. What is all this? I'll talk about it later. These are all we are yet to see. What is identical, what is similar, deductive, computed, all that we are about to see. But just I want you to remember one thing. Till here you remember, even though buyer and seller is related, but if you are able to prove it to the customs authorities, boss, we are related, but the price has not got influenced because of our relationship. If you are able to prove that, still the customs authorities will accept transaction value as transaction value for the purpose of calculation of customs. Okay, so this is what simply rule 3 says. Okay, next after rule 3, see if rule 3 says, as per rule 3, say for example, buyer, seller both are unrelated person, and in that case a transaction value will be there. that transaction value will be accepted, and using that transaction value you compute customs duties. So in that case, you don't have anything to do from rule 5 to rule 9. You don't have anything to refer to that. But when rule 4 to rule 9 will come into picture is, say for example, buyer is there, seller is there. Both are related person, and they are unable to prove that that relationship did not affect the price. They are unable to prove it. Then the government says, we don't accept the transaction value. See, if the government is not accepting transaction value, then the government should give me rules how to determine the transaction value. Say for example, between the related persons, if the transaction has taken place at $5,000, government says we will not accept it. Why? Because you both are related. Then government should tell me, if 5,000 is not acceptable, then how to determine the value? Government should give the rules, no? That is contained in rule number 4 to 9. So now you got the overall scenario. So what does this customs rule says? If transaction value is not acceptable, if the transaction value is not acceptable, or if the transaction value is not determinable, then you have to determine the value in the sequence of rule number 4, rule number 5, rule number 7, rule number 8, rule number 9. In the same order you have to follow. In the same order you have to follow. If you are unable to determine the value as per rule number 3, then try to determine the value as per rule number 4. If you are unable to determine the value as per rule number 4, if you are not able to determine value as per rule number 4, then try to determine the value as per rule number 5. If you are not able to determine value as per rule number 3 also, rule number 4 also, rule number 5 also, then you try to determine the value using rule number 7. Sir, even rule 7 also I can't apply. Then you determine the value using rule number 8. Sir, using rule number 8 also I can't determine the value. Then you follow rule number 9. Able to understand rule number 9, you will be able to find it out. Now you all will get it out. Sir, 4 to 9 you have told, but in between 6 you did not say. What does rule 6 say? I will come to that later. It is a suspense actually. From starting I was holding no. So there is a suspense in that. I will talk about that suspense later. But did you get the context? In case if rule 3, as per rule 3, you can't use a transaction value, or if the transaction value is not accepted, then how to determine the value? You have to determine the value using rule number 4 to rule number 9. And that too in the same sequence you have to use. You can't say, if I am unable to determine the value as per rule number 3, directly I will go to rule number 5. You can't say. You have to compulsorily come and see whether you can determine the value using rule number 4. If you are able to determine the value using rule number 4, then no need to go to rule number 5 to 9. Able to understand? So you are unable to determine value as per rule number 3. You tried rule number 4. That is also not working for you. Then only you can come and use rule 5. If you are able to determine value as per rule number 5, well and good. There is nothing to do with the remaining things. Now, sir, I used rule 3. I used rule 4. I used rule 5. Still I am unable to determine the value. Then you can come to rule number 7. So in the sequential manner, not in whatever order you want, you have to apply the rules in the sequential order. Okay. So now what rule 4 says is, rule 4 says that if you are unable to determine value as per transaction value, then you have to take identical goods. If any identical goods are there which are getting imported, you have to determine the value of that identical goods. What? You have to determine the value of that identical goods, and that value you have to use it for the purpose of calculation. Sir, I don't have any, but for that we need to understand, before we proceed further with the remaining rules, first try to understand what is identical goods. So say for example, I'm importing this water bottle. I have imported this water bottle, 1,000 quantity of water bottles I have imported. But the seller is a related person to me. Government told, we will not accept transaction value. We will not accept transaction value. Now, first what I should do is, if the government is not accepting the transaction value for this, now the government will ask me to find out whether any other identical goods are there. The government will say, go and find out whether any identical goods are there which are imported from the same country, either from the same manufacturer or some other manufacturer. Determine the value of that identical goods and use that value here for the purpose of calculation of your value. But for that, we need to understand what you mean by identical goods. First, we have to get the clarity, no? So let us see what do you mean by identical goods. So what are identical goods? Identical goods means those goods which are same in all respects, including physical characteristics, quality, reputation, with minor differences. In all aspects, it is same. If it is not this water bottle, some other kind of water bottle which is physically the same, which is equal size, equal quantity, and also equal reputation, not some cheap brand, equal reputation that other product is also enjoying. But however, minor differences could be there, like cap color is changing, fine, no issue. So like that, with minor differences that don't affect value. and they should be produced in the same country as the goods being valued. Say for example, this water bottle I am importing from US, but the government is saying no, this bottle we will not accept the price for this transaction, we will not accept the price. Now I need to find out identical goods which are having same characteristics, same quality, same reputation from the same country. So from the same US, if any other identical product has been imported having same quality, same characteristics, same reputation, either produced by same manufacturer. If the same manufacturer has sold the goods to someone else, same manufacturer, same good, had he sold it to someone else in my country, that value I will use. Sir, same manufacturer did not sell to anybody else, or different manufacturer, same article, has it been sold by some different manufacturer? So that I will do. By the same manufacturer if available, or different manufacturer if no identical goods are available. If same goods are not sold to anybody else in India, I will use different manufacturer. Able to understand? So this is what the meaning of identical goods. Tell me, what is the meaning of identical goods? So first of all, when we'll start looking for identical goods, if you are not able to determine the value as per rule number 3, then rule number 4 says determine what is the value at which identical goods are imported and use that value. Sir, what do you mean by identical goods? Which are same in physical characteristics, quality, reputation, with minor differences that don't affect value. From the same country, they should come from the same country. And they should be produced by the same manufacturer, if available. No, the same manufacturer did not sell the goods to anybody else in India, then different manufacturer. Okay, so that goods value I have to use. So that's what rule number 4 says. The value of imported goods is based on transaction value of identical goods sold for export to India, imported around the same time. Okay, next. However, they are saying while determining identical goods, exclude goods with engineering design artwork done by the buyer in India free of charge or at a reduced cost. So what do you mean by this? Say for example, I'm importing water bottle. Okay, I'm importing water bottle. So I will tell you detailed scenario to make you understand. So water bottle, if you are importing, but it is a related person. The vendor told 10,000 rupees. The importer is telling 10,000 rupees is the transaction value. Government says, no, since you are related, we will not accept it. Now I came to rule number 4. Similar article, identical good, same kind of water bottle. Some other vendor or some same manufacturer or different manufacturer, same kind of water bottle. Previously, he has imported. Previously, he sold the goods to another person in India. He sold the same goods. Okay. Now here the price was $8,000 only. And for this water bottle, when he is importing, this importer, he has did the work of design, development, sketches, plans that was provided free of cost to the exporter. This point, if you remember, we have discussed in the optional additions. In optional additions, we have seen one point. What point we have seen? Design, development, plans and sketches, if they are carried out in India and if provided to the exporter for the purpose of manufacturing, that cost will not be added. So that means when you are taking identical goods, if you take such goods for which the design, development, art, sketches are done in India, that cost will not be added. That means this value is anyhow reduced. This value will be reduced. This value will be less. Why? Because government gave a relaxation here. If you are doing design, development, art, sketches in India, don't add it to the FOB. So that means for this water bottle, if you take this water bottle as identical goods, the cost of this is already reduced. So it will be a disadvantage to the government, no? So that's what the government told us. When you are considering identical goods, don't consider those goods for which design, development charges or sketches, plans have been done in India and which are provided that free of cost to exporter. That goods you don't consider. Some other article you have to consider. Some other identical article you have to consider. Able to understand? Why? Because for those articles where design, development, sketches and plans have taken place in India, the price, that cost is not added. That means that value is anyhow reduced. It will be disadvantage to the government if the importer uses that as identical goods. Able to understand the logic here? So that's why they have told you exclude the goods with engineering, design, artwork which is done by the buyer in India free of charge or at a reduced cost. Understood? Clear and comfortable? Right. So that is what rule number 4 says. But here, let me give you one scenario. Let me give you one example. With that example, I will try to explain. Okay. Say for example, I am importing 100 quantity of water bottles. 100 quantity of water bottles I am importing. But that is from a related person. So transaction value I told for each water bottle, the transaction value I told 5 rupees. Government told we will not accept it. Why? Because there is a related person price might have been affected. Now I have to come to rule number 4. What does rule number 4 say? In rule number 4, you take the identical goods and determine its value that you can use it. Now I found an identical good, but that identical good was imported in India at different quantities at different prices. Say for example, one vendor imported identical goods of 10 identical goods, 10 water bottles he has quantity, 10 water bottles he has imported at a price of 20 rupees each bottle. Another transaction is there, another transaction of identical goods is there. Another vendor, he has imported 15 quantity of water bottles at a price of 18 per bottle. Some another vendor is there, he has imported 40 quantity of water bottles at a price of 16 each. So obviously, when quantity is increasing, price will come down. Or take for example, some another vendor is there, he has imported 80 quantity of the water bottles at a price of 14 rupees only. Some another vendor is there who has imported 95 quantity of water bottles at a price of 12 rupees only. Some another vendor is there who has imported 110 quantity of the water bottles at a price of 10 rupees only. There is another vendor who has imported 200 quantity of the water bottles at a price of 8 rupees only. So now you will get a doubt. Sir, rule number 4 has told if I am unable to determine the value as per rule number 3, I can take the value of identical goods. Sir, identical goods I am able to find out, but those goods are imported in different quantities at different prices. Which I have to use, sir? Which reference I have to take here? So now what does the act say here is? Identical goods must be sold at same commercial and quantity level. If not, adjustments are made. I will talk about it later. So identical goods must be sold at same commercial level and quantity. So they are asking you take those quantities which are commercially the same. See, when I say commercially the same, I am importing 100 quantity. Which one is at equal levels? Is 10 is equal level? No, it is very less. 15 is also very less. 40 is also very less. 200 is also very high. So what is in a close range? Need not be exact. They did not say exact quantity you have to take. They are asking you what? Take such quantity which is at same commercial level and quantity level. They are not asking you to take the exact quantity, commercially same. So what is commercially same here? These three are commercially same here. Yes or no? Sir, three things are there commercially same at equal, more or less closer. Three kinds of transactions are there, and these three transactions has taken place at different prices. Now which one I have to take, sir? Now what does the act say here is if multiple transaction values of identical goods are found, the lowest value is used to determine the value of imported goods. So here I have three kinds of similar transactions, three kinds of similar commercially equal quantities. Which value I have to take? Lowest of the three. Which one is lowest of the three? 10 is the lowest of the three. So this 10 I will take. So I will not accept 5 as a transaction value. On the basis of rule number 4, I will take 10 as a transaction value. Able to understand? Clear and comfortable? Understood? So what does rule number 4 say in a deeper manner? So they say that when you are considering the identical goods value, you have to determine other transactions which have been taken at the same level, at the same quantity, same commercial levels, at the same commercial levels and same quantity. But sometimes what will happen is at the same commercial levels or the same quantity, you might be able to find multiple transactions. In that case, you have to take the lowest. Okay, now let me give you another scenario. The same thing we will take. I'm importing 100 quantity. I will give you different scenarios to make the concept very clear. Quantity, price. Okay. So another importer has imported 10, value is 5. Another importer has imported 20, value is 20. Another importer has imported, the value is 90. Some importer has imported 85 quantity at a price of 12. Some importer has imported 200 quantity at a price of 13. Okay, whatever it could be. So say for example, price is 10. Some another importer has imported 500 quantity of identical goods at a price of 6. Now here you don't have any trouble. Why? Because at commercially same level, we have only one transaction. Directly we can use this. Like in the previous case, we don't have any trouble here. Why? Because at the same commercial level, we have only one transaction. This 12, we can use it. Okay, let me give you another scenario. Quantity, price. Okay, 10, 20, 20 quantity, 90, 90 quantity, 90 quantity at 17, 100 quantity at 20, 100 quantity at I will say 18, 100 quantity at 18. Next we have 200 quantity at 10, 500 quantity at 6. Now what you will do? I am importing 100 quantity. Now which value I have to take? Now 10 is far out of reach, 20 is also far out of reach, 200 is also not possible, 500 is also not at commercial level. But what most of the students will do now, I am importing 100 quantity. Some another vendor has imported 100 quantity at 18 rupees only. Directly let me take 18 rupees. No. Why? Because what did they say? We have to check same commercial levels at similar quantities. So even 90 is also more or less within the same level only. 90 is also closer only, no? So 90 is also in the same level only. I have to take lowest 17 only. I have to take not 18. Able to understand? This students, this mistake majority of the students will do. They will not test this level of question in the examination, but just I'm letting you know this thing you have to keep in mind. So you have to determine the commercially same level. Now you should not look for equal quantity. You should look for at the same level. Sir, what is the same level? That is completely your judgment. You have to use your judgment and determine it. So, but don't worry, this question they will not ask in the examination. If at all they ask it, don't in a hurry write the answer as $18 because of equal quantity. Determine whichever is commercially equal, lowest value 17 you have to take. Okay, $100 into 17, that I will use for the purpose of determination. See, but in some cases what will happen is same level is not at all available. So one vendor is there. So when I determine the identical goods, transactions are something like someone has imported 10 quantities, someone has imported 20 quantities, someone has imported 300 quantities, someone has imported 400 quantity. So there is nothing same only. At the equal level, it is not there. Commercially same quantity is not there. Then what you have to do is you have to adjust your figures for the quantity. So you have to adjust here, prices will be there, no? So some adjustments you are required to do, and then you have to take the value. Sir, how to do that adjustments and all not relevant for our examination. So that is what the sentence they say here. If not, that means if you are not able to find the same commercial level and quantity level, then adjustments are required to be made for differences in the commercial level or quantity. Then some adjustments you have to do. What are that adjustments? We need not worry about it here. Understood? So this is what rule number 4 says. So what does rule number 4 say, guys? When rule number 4 will come into picture? So first you have to take rule number 3. You have to determine value using transaction value. If that is not acceptable, you have to come to rule number 4. You have to identify identical goods, and that value you have to take and you have to use it. Sir, if I'm not able to find any kind of identical goods, then what I should do? You should come to rule 5. What rule 5 says? Determine similar goods. Determine what? Similar goods. Determine its value, and that value we can take. Now you will get a doubt, sir, what is the difference between identical goods and similar goods? So if you look at the definition, similar goods means goods with like characteristics and components. See, for identical goods, they told same. In every aspect, it should be same. But in similar goods, they are telling not same, not exactly same, but similar, closer characteristics, not exactly same characteristics, which is like characteristics, similar characteristics, and components that perform the same function, commercially interchangeable, considering quality, reputation, and trademarks. Say, for example, I'm importing water bottle, but I'm unable to find any other identical good. No one else has imported the same kind of steel bottle, but someone has imported aluminum bottle. Just I'm saying for example's sake. So whatever steel bottle is there, aluminum bottle might also have similar characteristics. They are also fulfilling the same purpose. This bottle is also, I'm using it for drinking. That zinc bottle also, zinc or aluminum bottle also, I can use it for drinking. So whatever it is not an exact example, guys. Just I'm giving you to make you understand. So if you are not able to find identical goods, what you should do is you should find similar goods. Similar goods are those which have similar characteristics and components. They perform the same function, commercially interchangeable. Instead of the steel bottle, I can use aluminum bottle also to fulfill my purpose. So whatever it is. Considering quality, reputation, and trademark, it should be produced in the same country. From whichever country you are importing, in the same country that should have been imported, either by the same manufacturer or different one, if no identical goods are available. And here also same condition, it should exclude the goods where engineering design artwork is done by the buyer in India free of cost or at a reduced price. Why? Because this will reduce the value that you should not use. And conditions are also same. Similar goods must be sold at same commercial level and quantity. No, if there are multiple transactions, the lowest value you have to use. If you are not able to find the same commercial level or quantity, then you have to adjust the price for that level of commercial level or quantity. Understood? Same, everything exactly same. But only thing what they say here is in the rule 5, they replace the term identical goods with similar goods. So first you should start searching for identical goods. If you are unable to find the identical goods, then come and start searching for similar goods. Okay, clear and comfortable everybody, right? So let us now proceed further. So what did we see now? Rule number 3, rule number 4, rule number 5, we are done. Sir, but what will happen in case if transaction value is not accepted? I am not able to find any identical goods. Rule number 4 also I can't use it. So I tried for looking for similar goods. Sir, I am unable to find any similar goods also. One of a kind of article I am importing. There are no identical goods. There is no similar goods, but the transaction I am doing with a related party. So rule 3 I can't use. Rule 4 I can't use. Rule 5 I can't use. Then what I should do, sir? then what you should do is, now the act says you have to come to rule 7. See, in between rule 6 is there. I will tell you in a short while of what is that rule 6. But let us talk about rule number 7. So what rule number 7 says is, you determine the value. In case if you are unable to apply rule number 3, rule number 4, rule number 5, now you have to determine the value by using rule number 7. And rule number 7 says, what is the name of the method which is used in rule number 7? So rule number 7 says about deductive value. You have to determine the value using the method called deductive value. Sir, what do you mean by deductive value? See, deductive value, the name itself says we have to derive what is the value for the purpose of customs by doing something called reverse calculation. By doing a reverse calculation. So if you are unable to determine at what value, what should be the value of imports for the purpose of collection of customs duty, then what rule 7 says is you have to deduce that value from customs. Sir, from where I will derive, sir? You have to derive it from the resale value. So if you are unable to determine what is the cost of imports because you are importing it from a related person, rule 3 is not applicable. You are unable to find identical goods, you are unable to find similar goods, then you have to come to rule number 7. And rule number 7 says that if you are unable to determine value of imports, what you do is, after you have imported the goods, you will resell it. No, either you will resell it as it is, either you will resell it as it is, or you will do some further processing and then resell it. That resell value will be there. No, you take that resell value. From that resale value, you have to deduct whatever taxes you have paid in India. So whatever taxes that you have paid in India, that you have to deduct. Whatever profits that you have made, that you have to deduct. And after that, you should also deduct whatever expenses you have incurred after importing. So you have to do that reverse calculation. So if you take the resale value, and from that, if you deduct your profit margin, from that, if you deduct your expenses, whatever you have incurred, from that, if you deduct what is your customs duties and GSTs, whatever you have paid, when you deduct all that, by doing that reverse calculation, you can arrive at the CIF value. You can arrive at CIF value. That's what the deductive value method says. Okay. So let me give you one example to make you understand. So guys, the method is very simple. You have to derive the imported value from the resale value. If you are unable to determine directly after importing the goods, either you will resell it as it is, or you will do some processing and resell it. Take that resale value, deduct all your expenses, deduct all your taxes, deduct your profit margins. By doing the reverse calculation, derive at the value of the imports, and on that you calculate your rates of customs duties and pay that customs duties accordingly. Okay, sir, how to do that? Say for example, what I will say is, say for example, you imported some article. Rule number 3 is not applicable, rule number 4 is not applicable, rule number 5 is also not applicable. Then what you should do is, you should take what is the resale value. After you have imported the goods, when you are reselling it, what is the resale value you have to take? Say for example, my resale value is 1,18,000. My resale value is 1,18,000. When I am finally selling the product, I am selling the product at 1,18,000. Now from this 1,18,000, I have to take out my GST, I have to take out my profits, I have to take out my customs duty and all that things I have to take it out. Sir, how to take it out? See, generally, what is the process of the sale? First, imports will happen, no? CIF value. So once you have imported the CIF value, so there will be assessable value. Generally, I will tell you from top-down approach, then we will go to bottom-up approach. So assessable value will be there. Generally, how we calculate customs, assessable value will be there. So on that assessable value, what we do? See, when I say assessable value, that is completely CIF value. After adding that expenses and all, freight, insurance, after adding all that, you will have assessable value. On that, what we pay? First, we have to clear that goods from home consumption. So for that, we have to pay customs duty at the applicable rate. So that we will add. And on that, we have to pay social welfare surcharge at the rate of 10%. So that also you have to add. Then you will get one figure. On that, we will pay IGST as per customs at the applicable rate. On that, we will pay GST compensation cess also at the applicable rate. So after paying all this, then the goods will be cleared for home consumption. Then after that, after we pay all these duties, customs, social welfare surcharge, IGST as per Customs Act, composition cess as per Customs Act, all that we will pay. Then after incurring all that cost, we clear that goods for home consumption. Once we have bought that goods to the factory, to bring that goods to the factory and all, we incur expenses like freight expenses will be there, or if we are making any extra process on that, extra processing charges will be there. That charges also we will incur. And after that, we will also incur administrative overheads, administrative expenses and all we will incur. And also we will incur selling expenses. So we'll all incur the selling expenses also. So then you will arrive at the total cost. To that, what we do? We will arrive at the profit margin. So we'll add our profit margin at the applicable rate. So on this profit margin, you will get the sale value of sale. So on that, once again, you have to pay the GST, no? When you are selling in your country, then also you will be required to pay GST at the applicable rate. So then when you add the GST also, whatever final figure you get, that will be the resale value. That will be resale value. Yes or no? So in the question, they will give you this. They will give you resale value. Now we have to do the reverse calculation and we have to arrive at this value. We have to do the reverse calculation and arrive at this. So what and all will be added? Once the goods reach the customs, assessable value will be there. To that assessable value, we have to pay customs duty, we have to pay social welfare surcharge, we have to pay IGST as per Customs Act, we have to pay GST compensation as per Customs Act, and we have to incur, once we have to bring that goods to our factory, we incur expenses. If we do further processing, that processing charges will be there, administrative expenses will be there, selling expenses will be there. To that we will add a profit margin, and whenever we are selling that goods in India, once again we have to pay the GST, and after charging that GST, whatever value you get, that will be the resale value. Yes or no? Let me tell you one example. So say for example, we got to know that resale value, the article which is getting imported, it is getting resold at 1,18,000. Now here they have given, now we have to reach here. So we have to do the reverse calculation. So first, what will be there here? Whenever these goods are sold in India, GST will be there. So this figure is inclusive of GST. This figure is inclusive of GST. Say for example, applicable rate of GST is 18%. So now I have to calculate what is the component of GST in that. So this value is 1,18,000 inclusive of GST figure. So now if I calculate 1,18,000 into 100, into 18 divided by 118. So this will be my value, right? So when you calculate, GST amount will come to 18,000. So here the value will be 1 lakh. Now we have arrived at this figure. Okay. So this is the figure which we have arrived at. Now from this, what I have to deduct? My profit margin I have to deduct. Say for example, this figure is inclusive of profit. In that I have added the profit also. Say for example, my profit margin on selling price, I maintain a profit margin of 20%. In this 1 lakh rupees, on the sale price, I have 20% margin. So if I take out that 20% margin, so 20,000 rupees of margin, I will take it out. So now if I have, now what I will have is 80,000 before taking it out. So now I have arrived at this figure, profit figure I have arrived at. Before profit, this is my value. Now I have to reduce all my expenses. Say for example, some administrative expenses, further processing expenses, further processing, administrative, selling, all that expenses comes to some 30,000 rupees. So I will deduct all my expenses. Now what will be the value? 50,000 rupees. Now I have arrived at this figure by here, 50,000. Now in this, what and all will be included? In that, GST compensation cess also will be there, IGST also will be there, and social welfare surcharge and customs also will be there. So now I have to exclude that component also. For the time being, now assume that there is no GST compensation cess. Generally there will be GST compensation cess also, but in questions they don't test it. Just imagine that only GST you have paid, because calculation will remain the same. Whatever calculation we are doing for IGST, the same calculation will be there for GST compensation cess also. Say for the time being now, you did not pay compensation cess as per Customs Act. They will not ask you in the question, don't worry about it. So assume you have not paid the GST compensation cess. Then what will be the calculation? So in this figure of 50,000, what is also included? IGST is also included. What is included? IGST which you have paid as per customs. Say for example, applicable rate of IGST as per Customs Act is 5%. So this 50,000 is inclusive of GST. I am imagining that compensation cess is not paid by you. If compensation cess is paid, that also you have to consider as included in this figure and do the reverse calculation. But don't worry, they will not test this level of question in the examination. So IGST, or let us do one thing, IGST and compensation cess both put together 5%. IGST is 5%, GST compensation cess is also 5%. So let us do the example in a complicated way only. So say for example, you have paid 5% of GST compensation cess and 5% of IGST, both you have paid. So now you have to calculate that figure. What is the component of IGST? What is the component of CGST or GST compensation cess? Both you have to calculate. Both put together how much? 5 plus 5, 10%. So in this 50,000, IGST is also there and GST compensation cess is also there. So both put together how much percentage? 10%. So if we do that calculation, this figure is inclusive of IGST and GST compensation cess as per Customs Act. So which comes to total of 10%. So if I calculate that, 50,000 rupees into 10 divided by 110. Yes or no? I hope you guys are able to get these figures and all. I am considering we are doing reverse calculation, nothing else. So now if I take out that GST and compensation cess, so say for example, 50,000 rupees into 10 divided by 110. So GST and compensation cess which is included in this figure is 4545. You take it out that. So 50,000 rupees minus 4545. If you take it out, the figure will come to 45,455. This is the figure inclusive of custom and social welfare surcharge. Inclusive of customs and social welfare surcharge. Now I have to take it out from this. What is the customs duty? I have to deduct these two components also, no? Social welfare surcharge and customs. This also I have to take it out. Say for example, applicable rate of customs is 10%. So in this 45,455, customs duty at the rate of 10%, and on this 10%, once again 10% will be there, no? 10% of the customs, which will come to 1%, right? Say for example, if 1 lakh rupees of value is there, on that what you pay, say for example, customs duty comes to 10%. The customs duty value will be 10,000. On that social welfare surcharge also have to pay on this 10,000. That means on this customs are 10% once again. So if you do that, your value will come to 1,000. So both customs and social welfare surcharge both put together, you have paid 11%. Yes or no? So 10% of customs and social welfare surcharge, which is 10% of customs once again. So it will come to total customs duty and social welfare surcharge both put together 11% here. So now you have to exclude that also. So this figure 45,455 is inclusive of customs and social welfare surcharge. So if you take out that component, how much is the customs and social welfare surcharge component? 45,455 into 11 divided by 111. Okay, so if I take it out, 45,455 into 11 divided by 111. So if I do that, 4505 is the customs duty and social welfare surcharge. If I take that also, 45,455 minus 4505, if you do that, the amount will come to 40,950. Finally, this is the assessable value. On this value, this will be the assessable value for the purpose of calculation of customs. So this is what you are supposed to follow in case if rule number 3, transaction value is not acceptable, you are not able to find identical goods, you are not able to find similar goods, then only option which you have is you have to determine the value as per rule number 7, which is deductive method. You have to do the reverse calculation. You have to determine the value on the basis of resale value of the goods. So how to do that? Let me give you the format here. So resale value, you have to take. From that, you have to reduce first IGST, but in most of the cases, they will ask you to ignore the GST also. In most of the questions, I will show you some questions also. They will ask you to ignore the GST and do the calculation. So here, whatever is that, IGST at appropriate percentage. So that IGST value, you have to reduce, that is inclusive, that you have to reduce it. So then you will get that thing. After that, you have to reduce all your expenses, transport cost, further processing, sale, administrative overheads, all that you have to exclude. No, first we have to exclude profit margin. In that, profit will be there, no? So you have to take the profit margin out. So after you take the profit margin, you will get cost, value inclusive of all the cost. From that, you have to reduce all your cost you have incurred. So then you will get one figure. So this figure is inclusive. This is value inclusive of IGST, GST compensation cess, and customs, and also social welfare surcharge. Everything is included here. Now from this, first I have to take it out IGST and GST compensation cess by doing the reverse calculation. So that I will take it out. But don't worry, in the question, in the exam, they will ask you to ignore IGST and GST compensation cess altogether. So you will get this figure. So from this, we have this figure is inclusive of customs and social welfare surcharge. You have to take out that customs duty and social welfare surcharge also by doing the reverse calculation. Then after that, whatever figure that has been left out, that will become your assessable value. This is what rule number 7 says. That's it, guys. Now if you start reading it, so what does rule number 7 say? Deductive value. How to calculate the deductive value? The deductive value is based on the unit price at which the goods are sold in India in greatest quantity to unrelated persons in India. So at whatever you have to take that value on the basis of resale value. Okay, whenever you are reselling. But say for example, you are selling in different quantities. You have imported 1 lakh quantity of the goods. Okay, you are reselling it, but you are reselling in different quantities. To one customer you have sold 1,000 quantity, to one customer you have sold 10,000 quantity, to one customer you have sold 50,000 quantity. For another customer you have sold the remaining quantity of 35,000. So you have sold in different quantities, and different quantities at different rates. Say for example, 1,000 quantity you have sold it at 100 rupees, 10,000 you have sold it at 95 rupees, 5,000 you have sold it at 80 rupees, 35,000 you have sold it at 70 rupees only. Sir, which resale value I have to take? They say at whatever quantity, whatever is the greatest quantity, that to unrelated persons, that you have to take. If entire goods are sold in one single lot, that resale value we will take. If it is sold in different quantities, at whatever price highest quantity of goods are sold, that value we are going to take, that resale value we are going to take. So highest quantity is 50,000 here, that price we will take, that resale value we will take. And from that, what we have to deduct? All the commission, profit, additions, or whatever expenses you have incurred in India, that you have to deduct. Cost of transport, insurance, and other cost which you have incurred in India, that you have to deduct. Customs duty and other taxes, whatever you have paid in India, you have to deduct it. After deducting all that, you will arrive at that figure. So if goods are not sold at the time of importation, the value is based on unit price at the earliest sale date within 90 days. That means you have to take the resale which have taken place within 90 days only. If some resale has taken place after 90 days of importation, that you should not consider. So whatever resale you are doing within 90 days, that resale quantities only you are required to consider. After 90 days, whatever you have sold from the date of importation, after 90 days, even if you are selling it, that price will not be considered. Whatever resale you are doing within 90 days, among that greatest quantity, whatever price you have sold, that only we will consider. If I do one illustration, everything will be sorted. If the goods are sold at further processing in India, the value is based on unit price of the processed goods sold in greatest quantity to an unrelated person, reduced by the processing and other cost. Even if you are not selling the good as it is, if you are doing some processing and reselling it, that processed goods also you are selling it in different quantities. There also what we will do, highest quantity we will take, that resale value we will take. Anyhow, while doing the reverse calculation, we will reduce the processing expenses also, no? So whatever it is, if you are selling the goods as it is, at whatever highest quantity you have sold, that price we will take. After you have imported the goods, you are doing some further processing and processed goods you are selling, then also same logic, at whatever highest quantity processed goods are sold, that price we will take it. Okay, so we'll have some illustrations. Let us have a look at the illustration, you will get the better clarity. So we have here rule number 7. So let us see here. Following are the sale details of product X, being 12,000 units imported from Japan. On which date? On 1/1/2025 they were imported. You are required to compute assessable value of product S for customs duty by applying deductive method. So when it was imported, 1/1/2025, within 90 days from the date of importation, whatever sales they have taken place, that details they have given. On 1st of January they have sold some quantity. On 10th of January they have told some quantity. So here they have sold 1,000 at a price of 100. And on 10th of January they have sold 2,000 quantity at 98 rupees. So like that, different dates they have given. On 19th they have sold some quantity. On 27th they have sold some quantity. On 3rd of March they have sold some quantity. 13th of March they have sold some quantity. 30th of March also they have sold some quantity. On 7th of May they have sold the quantity. See, 7th of May is beyond 90 days from the date of importation. This we should not consider. Whatever sale that has taken place on 7th of May, that should not be considered. Why? Because that has taken place after 90 days of importation, and just in the provision we have read now, whatever resale has taken place within 90 days, that only you have to consider. Now if you see here, different quantities are sold at different prices. Now we will see at each price what is the total quantity sold. Like if you see here at 100 rupees 1,000 quantity was sold. Here once again at 100 rupees 1,500 quantity was sold. So total at 100 rupees, total how much quantity was sold? 100 plus 200 plus 1,500, 2,500 quantity was sold. Then we have 98 here, 2,000 quantity. Here also 98, 1,000 quantity. Here also 98, 1,000 quantity. How much? So at a price of 98, 2 plus 2, 4,000 quantity was sold. Then we have one more price, 101. At 101, 500 here. So at a price, only one quantity, only one sale, I guess. So at a price of 101, they have sold 500 quantity. One more color, let me use it. Then we have one more sale at 99 rupees. At 99 rupees, 500 quantity was sold. Tell me which is the highest quantity. At 4,000 is the highest quantity, and that sale has taken place at 98. So that resale value we will consider. 98 we will consider. So resale value we have to take it as how much? 98. Why? Because at that price highest quantity was sold. Assume the expenditure incurred in India, including profits, is 18. See, directly they are giving figure. You need not do the calculation. So this is the resale value. In that, how much profit and cost is included? 18 rupees of profit and cost is included. Duty is charged on such article at the rate of 25%, including social welfare surcharge. So in the example we have used, we assumed the duty as 10% and all. But now they are giving the percentage also here. Customs duty, including social welfare surcharges, 25%. Now they did not give any information regarding GST. That means they are asking you to ignore the GST calculations altogether. So how the answer will look like? So resale value will be 98. From that, if GST would have been given, we would have excluded the GST component, but GST they did not give. So we will ignore the GST. Then what we have to deduct? Profit and cost, both put together, they have given collective figure. So 18 rupees is the profit and further cost in India. How much it will come to? 80 rupees. Now this 80 rupees is inclusive of customs duty and social welfare surcharge. Sir, what about GST and GST compensations? As they did not give the information. No, we will ignore it. So this 80 rupees is inclusive of customs duty and social welfare surcharge. Both put together, percentage is 25. So this 80 rupees is inclusive of that 25. So this 80 rupees is inclusive of the customs duty and social welfare charge, social welfare surcharge, which they have told it as 25%. So that means in this 80, 25% is already included. That means this is 125%. This is 125. So customs duty is 25. If assessable value is 100, on that 25 is customs duty, and if you add that, the total value inclusive of customs will come to 125. No, so 125. This 80 is inclusive of GST. So then, sorry, this 80 is inclusive of customs. So then what will be the component of customs? How to calculate that customs figure? So how to calculate that customs figure is 80 into 25 divided by 125. If you do that, you will get the value of 16. So whatever balance is there, that will be 64. So here the assessable value is going to be 64 rupees. Able to understand? So as simple as that. Clear and comfortable, everybody? So 64 will be the assessable value. Now how much quantity total they have imported? 12,000 quantity they have imported. So 12,000 quantity into 64. If you do that calculation, it will come to 7,68,000. So on this 7,68,000, once again, duty they have given it as 25%. That 25% if you multiply, once again, you will get this value of 1,92,000. Understood? Clear and comfortable, everybody? So this is what regarding demonstration of that provision. Okay. So I think we will have one more illustration here. So you'll find one more illustration. Yeah, this is also more or less the same kind of illustration. Yeah, nothing here. There should be one. I have seen somewhere that question. Let me show that to you. Yes. Somewhere it is there. Yeah, here if you see. RPG Limited 125 units of mineral from high seas for sale in India. So they have imported 125 units of minerals. Selling price is exclusive of duties and taxes. Freight from port to depot in India is 2,530 and insurance is 310. That means expenses whatever has taken place in India from the port to India, from the Indian port to the depot in India. So cost which is incurred in India 2,530 and 310. So 125 quantities they have imported. 125 units of minerals from high seas were imported. Now sale quantity. Now they are giving the details of sales. Some 80 quantity of sales are done at 105. 60 quantity they have sold it at 90. So like that at different prices, different quantities they have sold. So basic customs duty is at 12%. Assume there is no IGST applicable for the product. You are required to calculate total customs duty as per rule number 7. Rule number 7 is what? Deductive method. So for deductive method, what we should do? Greatest quantity we have to find out. So like the way we have done in the previous table, if you start doing that. So at 90 rupees, total 130 quantity. So if you do all that math, I'm not doing all that math. So just I'm explaining the logic here. So if you start adding like we have told here, 130 quantity were sold at 90, 50 quantity were sold at 95, 100 quantity were sold at 100, 120 were sold at 105. So which one is the highest quantity? 130. So 90 we will take. So total 90 quantity. So that will be the resale price. Total how many quantities they have imported? 125 units they have imported. So 125 into 90, that we have to use 11,250 you will get. From that you have to reduce the expenses. They have given expenses. They did not give any profit information also. They have given expense related details in India. So where they have given here 2,530, 310. These two you have to take it out, 2,350 and 310, which will come to 8,410. Now this is the figure inclusive of customs and social welfare surcharge. Why? Because they have asked you to ignore the GST. They have told customs duty 12%. See, when customs duty is at 12%, on that surcharge also will come, no, 10% of 12% also will come. So if you do that, it will come to 13.2%. That is the figure. That is the effective rate of customs. So this 8,410 is inclusive of customs and social welfare surcharge at the rate of 13.2%. Now, how do you calculate the customs duty and social welfare surcharge? So once again, reverse calculation, if you do 8,410 into 13.2 divided by 113.2. If you do that math, you will get it. Okay, so this will be the figure, right? Yeah, that's it. Sorry, but here in the question they have told one more thing. The selling price is exclusive of duties. You need not deduct the duties once again. Sorry, here you did not do the reverse calculation here. Once again, in the last point, you did not do the reverse calculation. Why you are not supposed to do the reverse calculation is, they have specifically mentioned in the question, the selling price is exclusive of duties and taxes. So you need not reduce because the figures are not inclusive figures. These are all exclusive figures. Only if you reduce expenses, it will be enough. 2,530 and 310. These are two expenses. If you deduct it, that will be enough. No need to deduct any customs component. Why? Because in the question they have specifically mentioned that the selling prices given here are exclusive of duties. So this itself is assessable value exclusive of duties. Directly on that 13.2%, if you multiply, you will get that customs duty along with the social welfare surcharge. Okay, so like this simple questions only they will ask. So here you have to be very careful. Like me, selling prices exclusive of duties and taxes. So that's why you should not do that. You should not do that inclusive calculation. So you have to be very careful when reading the facts, whether the given prices are inclusive of taxes or exclusive of taxes and duties. That you have to be pretty careful, right? So this is what rule number 7 says. Okay, we have successfully completed rule number 7 also. So what we have seen till now, rule number 3, which says in case of unrelated parties, you can take transaction value. If transaction value is not acceptable, you have to start following from rule number 4 to rule number 9. So we have seen rule number 4. First, you should come to rule number 4, identical goods, that you have to follow. If identical goods are not there, then you have to come to rule 5, which says similar goods. Sir, similar goods are also not there. Then you have to come to rule number 7, which says what deductive method you have to use. Sir, deductive method is also not there. Then you have to come to rule number 8. So now we are going to discuss that rule number 8, which is calculation method. Computed value also you can say. So which is a computed value. So what is that computed value? Computed value is nothing but very simple. If you are not able to find out even this deductive method also, how you have to determine as per rule number 8 is you have to ask the exporter to share the cost. What is the cost of the product and all? You have to ask the exporter, sorry, not importer. You have to get the details from the exporter. What is the cost of manufacturing that product in the respective country? To that, they will add their profit margins and expenses of the exporter and they will derive at the value. Yes or no? So if you read it, you can easily understand the computed value includes cost of materials and fabrication or processing in producing imported goods in the export country at what is the cost involved for the purpose of manufacturing that goods, general expenses and profit of that exporter, and whatever transport cost and insurance is there, whatever we have discussed in previous sessions. So that transport costs that anyhow we will add, freight and insurance anyhow we will add. So that information you can get it. That information you have to get it. Able to understand? So that is what computed method. If you are unable to follow rule number 5, 6, 7, sorry, rule number 4, 5 and 7, then you have to calculate using computed method. In the computed method, you have to ask the exporter to share the details of cost of manufacturing and what is their profit, what is their expenses, and from that you have to calculate the value. But you have to be very careful here. Why any exporter will share his costing here? Why any exporter, why any seller will share what is the cost of manufacturing the product, what is his expenses, what is his profit margin? So generally nobody will share, no. So when you can expect that details and all is if the other person is related person. Generally when the exporter is also a related person, then he will share the costing information. If there is no related person, then he will not share, and then no seller will share the costing information. Simple business logic here. If I am a seller, why I will share my costing to others? What profit I am making? Why I will share that with anybody? So generally this will not happen unless the other person is also a related person. So if the exporter is also a related person, then only he will share the cost of manufacturing, what profit he has incurred, what expenses he has incurred, everything he will share. From that you can calculate the value. Okay, so this is what rule number 8 says. So till now we have seen rule number 4, rule number 5, rule number 7, rule number 8 we have discussed. But in between I did not explain rule number 6. See now what rule number 6 says is, say for example, if you are an importer, if transaction value is not acceptable, if you are not able to follow rule number 4 and rule number 5, then first you will determine deductive method. No, say for example, by using deductive method, the value has come to 10 lakh rupees. And by using rule number 8, if you would have followed rule number 8, say for example, you are importing the goods from your related person only. He has shared all the costing information with you. He has shared his profit details, everything he has shared. Now, when I calculate the value as per rule number 8 using the computed value, my value is coming to 8 lakh rupees only. My value is coming to 8 lakh rupees only. So if I follow computed method, I will be able to pay less amount of duties, less amount of customs duty instead of following rule number 7. So if you are an importer and you are not able to determine your taxation value as per rule number 4 and rule number 5, generally you should come to rule number 6 first. If not possible, then you have to come to rule number 8. But if you are able to do both, you are able to determine value as per rule number 7 also, if you are able to determine rule number 8 also. But if you feel that rule number 8 is giving you better position. Rule number 8 is keeping you in a better position. If you follow rule number 8, your value would have been less, you will be required to pay less duties. If that is the case, what rule number 6 says is, dear importer, you make a request to the proper officer to apply rule number 8 first instead of rule number 7. This is what rule number 6 says. So rule number 6 is not any different method. What rule number 6 says is, at the request of the importer, the proper officer can reverse the order of application. Instead of applying rule number 7 first, the proper officer can go for rule number 8 to do a favor to the importer. That relaxation has been given in the rule number 6. So if you read it, you will get the better clarity. So if you read it here, when value cannot be determined, this is not rule number 9, rule number 6 we have to read, right? If the value cannot be determined under rule number 3, 4 or 5, transaction value, identical goods, similar goods, it shall be determined under rule 7 or 8. Importer request, the order of application of rule number 7 and rule number 8 can be reversed with approval. So as an importer, if you want to go and make a request, sir, don't apply deductive value first. Please apply computed value method first. If you can go and request it to the proper officer, even proper officer will reverse the application also. First, he will calculate the computed value, then calculating the deductive method. This is what rule number 6 says. So rule number 6 actually is giving a permission to reverse the order of application of rule number 8 and rule number 7. Understood? So with this, we have completed rule number 3. We are basically talking about importing rules, determination of value of import, that rules we are talking. So rule number 3 we have completed, rule number 4 we have completed, rule number 5, rule number 6 we are done, rule number 7 we are done, rule number 8 we are done. Now we have rule number 9, which says that if you are not able to determine by using any of these methods, rule number 3 also you are not able to follow, rule number 4 also you are not able to follow, rule number 5 also you are not able to follow, deductive value method is also not available, even one more thing, last one, computed value method is also not available, then what you should do, then we have something called residuary method. Basically what this rule says is, when value cannot be determined by any of the above methods, the residual method uses reasonable means and consistent with the principles, general provisions of these rules and data available in India. So the proper officer, you can calculate the value using other methods which are generally acceptable. Depending on this, we generally call it as best judgment assessment, we call it. This we generally call it as what? Best judgment assessment. Basically using all the information available, by following all the principles which are available in India, and by using general rules, general business terms and all, using the best judgment assessment, we will use the residuary method and determine the value when we are unable to determine value by any of the above methods. Okay. Now, there are some note points here. Maximum value limit. The determined value shall not exceed the price at which goods or similar goods are sold in international trade when buyer and seller have no business interest in each other and price is the sole consideration. By using this residuary method, whatever value you are determining, that should not exceed the price at which goods or similar goods are sold in the international trade. So if you are at whatever price international trade is happening, like say for example, if you are unable to have identical goods, if you are not able to have similar goods, you are unable to determine resale value also, you are also not able to determine computed method, then what we should do is we will use residuary method, using whatever information available with us. By using the best principles, best industry data, we will calculate the prices. But what they're telling is, by using the residuary method, whatever value you are determining, that should not exceed the price at which goods or similar goods are traded in international trade. Say for example, these goods are getting traded between China and US. So at whatever price this transaction is happening, there is no similar transaction in India. By using residuary method, you are determining the price. This price should not be beyond the price of international market. Like for example, between China and US, same kind of goods are getting sold. If the price is certain value, whatever value you are determining by using the residual method, that should not go beyond that international value. Okay, so not that relevant for the examination, just you have to remember this. So the determined value shall not exceed the price at which goods or similar goods are sold in the international trade when seller and buyer have no business interest in each other and price is the sole consideration. So in the international trade, when two parties who are unrelated, a transaction is happening, them there is some price, you know that, and by using residuary method, whatever value you have determined, that should not go beyond that international trade price. And value cannot be determined based on selling price of goods produced in India. The system accepting highest of the two alternatives, these kind of some residuary techniques you should not follow. What kind of residuary techniques you should not follow? Selling price of goods produced in India. If the same goods are manufactured in India, at that price we will tax it. That method is not a residuary method. Something else you have to use it. System accepting highest of the two. You can't say I will use two methods, whichever is higher, that I will consider as residual value. That kind of residual method also you can't use. Price in the domestic market of the country of exportation from where you are exporting. in that country, whatever price is there for the product, that I will take it as value. That is also not acceptable. Cost of production other than computed value for identical or similar goods. Price of goods exported to a country other than India. Minimum customs value, arbitrary or fictitious value. These should not be used. Apart from this, any other residual acceptable method that you can use it. Okay, so you need not break your heads on this concept, not that important from the examination perspective. Let us proceed further. Okay, so with this, we have successfully completed importation rules, valuation of import rules we have covered, and how to determine value of imports. With this, we have completed our discussion. We have 5 minutes of discussion regarding exports also. If at all you are making exports outside of India, generally, as I have told, in case of exports, duties will not be there except in exceptional circumstances, like in similar some goods like leather and all. For those only customs will be payable, export duty will be payable. If at all export duty is payable, how to determine the value? If at all export duty is payable, how to determine the value? So here they say something very limited discussion. They say, see, but before we go to that exports, we have few more points. Rule number 11 and rule number 12 also we have. What is that? Let us see. Importer's declaration. The importer. So once again, before we go for the exports, 2 small points are there regarding imports. Let us try to cover that also. The importer must submit a declaration providing accurate and complete details regarding the value of imported goods, including relationship between the buyer and seller, basis of the declared value, conditions and restrictions, cost not included in the invoice. Basically, whenever goods are imported, what will happen is on self-assessment basis. Like in GST, the SSC himself will determine the amount of taxes and he will deposit. No, in the same manner, whenever the importer is importing the goods, he will do the self-assessment. He will do self-assessment. What is the value of the goods? What is the relationship between buyer and seller? What is the rate of customs duty? He will calculate and submit that information to the customs authorities. So that's what they say. The importer must submit a declaration providing accurate and complete details regarding the value of the imported goods, including relationship, basis of declared value, condition, cost, everything. He will determine the value and tell to the customs authorities, sir, this much value of the goods I have imported, this much customs duty I am required to pay. Okay. So now once you have declared the value on self-assessment basis to customs authorities, now what will happen is whatever value you have submitted, that can be either accepted by customs authorities or even they can reject it. Even they can reject it. Sir, when they will have a doubt, whatever value I have declared, when customs authorities will reject it? So very simple, when the significantly higher value of identical or similar goods, you are saying the value of your imports is only $10,000, but similar goods are identical goods, others are importing at $12,000, then definitely customs authorities will get a doubt. Similarly, you are getting abnormal discount or reduction in price. Somehow customs authority is getting a doubt that you have told very high amount of discount. You are telling that you have got some $2,000 of discount, which is not acceptable. Might be you are playing to reduce your taxes. Or special discounts are for exclusive agents, or you are trying to say that I got a special discount, sir, because I'm a special agent. Then also customs authorities will get a doubt. Misdeclaration of goods description, quality, quantity, origin or production. Might be at the time of calculation, you have wrongly described the goods, wrong quality you have done, wrong quantity you have added, then also customs authorities may reject it. Non-declaration of relevant parameters like brand, grade or specification, some information you are hiding, then also customs authority will reject your declared value. Or fraudulent or manipulated documents. If the customs authorities find that there are some fraudulent documents, this manipulated documents you have submitted, then also customs authorities may reject your value. Then what will happen? So doubt about declared value. If the proper officer doubts the truth or accuracy of the declared value of imported goods, they may ask importer for further information or documents. If doubt remains, the value cannot be determined under transaction value. So first they will ask you to share some information. If the customs authorities are not happy with that information, then they will say, we will not accept the transaction value. Follow rule 4 to rule 9, they can say. So importer's right to be informed. Proper officer must inform importer in writing of the grounds for doubting the declared value and provide an opportunity of being heard. Quite common, even in GST also we have seen, if someone is taking a decision against you, first they should inform you and they should give an opportunity of being heard. Mechanism for value rejection. This rule provides a procedure for rejecting the declared value when there is a reasonable doubt. If rejected, the value is determined according to rule number 4 to 9, which we have already seen. Acceptance of declared value. Declared value is accepted if the proper officer is satisfied about its truth and accuracy after inquiry and consultation with the importer. So first they will ask you the documents. No, if you are able to provide the minimum of documents, if you are able to satisfy him with the supporting information, then he will accept. If he is not accepting with the information whatever you have submitted, then he will reject it and he will ask you to follow rule number 4 to 9. That's all. Then we have something called interpretative rules. This all you can ignore. Why? Because all this I have covered as a part of my general discussion. As a part of our explanation, I have covered all these points. Or if at all not covered also, these interpretative rules are not at all important from the examination perspective. they are linked to various aspects which will be tested at the final level, not relevant for the CMA inter level. So you please ignore that interpretative rules. From these rules, whatever important things are there that we have already covered. So ignore all this part, interpretative rules. Next, okay, so now let us come to exports. How to determine the value of exports? Let us see it. So custom value, export value related rules also there. Rule 1, short title, commencement and application. These rules are called customs valuation determination of value of export rules. They came into force on 10th of October 2007. They apply to export of goods, blah blah blah. Ignore, no question will come from here. Definition, definitions also you ignore it. What is transaction value? What is the similar goods? What is identical goods that they say? Now let us come to rule 3. Same like rule 3 for imports only. Determination of method of valuation. Generally, transaction value is preferred method for valuing exported goods. However, if the buyer and seller are related, then they don't accept transaction value unless you prove that that relationship has not affected your price. Same like rule 3 for imports only. So determination by comparison. The value of the export goods will be based on transaction value of like goods, like similar goods, exported at or about the same time to other buyers in the same or another destination country, with adjustments for factors like date of export, commercial levels, quality, composition, design differences, freight and insurance cost. That means if you are unable to determine using transaction value, so in case if you are unable to determine the value using transaction value, then you have to follow rule 4 to 6. Rule 4 says what? Identical goods. If you have to find out identical goods or similar goods, that value you have to determine that you can use it for your goods. If rule 4 is not permissible, you don't find any similar goods or identical goods, then you follow rule 5, computed value. Your cost, your profit margins, your other expenses that you have to add. So cost of production, manufacture or processing of export goods, charges for design or brand, amount of profit. On cost plus basis, you can determine. So first we will find identical goods. If that is not possible, we use computed value. If that is also not possible, we use residual method. Once again, best judgment assessment we will do. Using all the information available, we will determine the prices. Like the way importer is declaring the prices, exporter also will declare the value. And here also, like the way proper officer will have the right to reject the declared value in the case of imports, similarly, proper officer will have a right to reject the declared value of exports also if he finds any suspicious things. Okay, so that's all, guys. And one more thing here, in the case of there is one more important point I would like to say. See, imports are taxed on CIF value. For imports, relevant value for determining customs duty is CIF value. But for the purpose of exports, relevant value for the purpose of determining export duty is FOB. So this you have to remember, not that important. If at all, they might ask you in MCQs or true MCQ statements, they might ask you. That's why I'm telling. For imports, the relevant value for determining duties is CIF value. For exports, the relevant value for determining export duty is FOB. Free on board value is enough. You need not add that freight, insurance, all that need not be added. Exports will be taxed on FOB basis. Imports will be taxed on CIF basis. And if you remember, for imports, what dates, which exchange rate we will take, whatever exchange rate which is given by CBIC, that we will take, and whatever rate that is prevailing on the date of submission of bill of entry, that we will consider. Sir, for the purpose of exports, whose exchange rate we will use? Once again, CBIC's exchange rate only we will use. The exchange rate on which date we will take, sir? Exchange rate on which date we will take, sir? So that will be here. At the beginning, I did not explain that point. Now I will tell you. So exchange rate prevailing on which rate we will take for the purpose of valuation. Exchange rate. Yeah, see here. In case of export, we will take shipping bill. Where it is? Yeah. Whenever you are doing exports, the rate which is prevailing, whenever you are submitting a shipping bill of export. So like the way for the purpose of clearance for consumption, we submit bill of entry for imports, no? Similarly, when the goods have to cross our country for the purpose of export, we submit something called shipping bill or bill of export. So on that date, whatever exchange rate is there, that too given by CBIC, that rate we are going to take it. So very simple, you have to mug up these things, nothing else here. For the purpose of imports, you will take whatever exchange rate given by CBIC on the date of bill of entry. For the purpose of exports, we will take exchange rate which is given by CBIC, which is prevailing on the date of bill of export. Shipping bill or bill of export will be there. So whenever that shipping bill or bill of export is submitted, on that date, whatever rate that is given by CBIC, that rate we are going to use it for the purpose of conversion. That's it, guys. So nothing specific here. So now we have final few things we have. One small discussion I would like to do here. What is the everything we know? Only one thing we have to understand: what is the relevant date for the rate of duty and the tariff value of the imported goods. So this is one thing we have to remember. So what is, first I will talk about import. What is the relevant date for rate of duty and tariff value? Rate of duty or tariff value. So what is the, at which date we have to take it? Okay, right. So let me give you one simple thing here. Say for example, I'm an importer. Okay, so I ordered the goods. There is an exporter in US. This exporter dispatched my goods on 5th of January 2025. Okay, now this goods reached, this we call it as entry inwards. The ship has arrived at the port Vizag. Here I have to clear. The ship has arrived at the Vizag port and entry. It was permitted to unload their goods at the Vizag airport. That we call it as entry inwards. That date was, say for example, it was on 25th of January 2025. Then what happened is, once the entry inwards has happened, I submitted bill of entry for home consumption. I have submitted my bill of entry for home consumption as on 30th of January 2025. I have submitted my bill of entry for home consumption on 30th of January 2025. Now, why I am telling you this date is, say for example, I am importing mobile phones. The goods which I am importing is mobile phones. Recently, between the countries of the world, these trade wars are happening, tariff wars are happening recently. Like we have seen that Trump is playing with the tariff rates. So many changes have taken place. When the exporter has dispatched the goods, on these goods, the customs duty, the effective rate of customs duty was at 10%. When the goods have reached, whenever the customs port has given you the clearance to unload your goods, that we call it as entry inwards. On that date, the customs duty was 15%. But within 5 days, whenever you are submitting the bill of entry for home consumption, as on that date, the government has once again increased the customs rate. Here they have made it as 20%. Now, whenever you are clearing the goods for home consumption, you will have some value. Say for example, you have determined the value to be 10 lakhs. You have determined the value to be 10 lakhs. So on this 10 lakh rupees, customs duty should be paid at which rate? What is the relevant date for tariff rate? What is the relevant date for tariff rate? Which date of which rate you have to take? Whether I have to take 10%, whether I have to take 15%, or I have to take 20%. So here what they have told is, whatever rate that is prevailing, whenever you are submitting the bill of entry for home consumption, at that point of time, whatever rate is prevailing, that rate we will take. So I have to tax it at 20%. On this 10 lakh rupees, whenever I'm clearing it for home consumption, I have to multiply the effective rate of 20%. By that, you will get to know what is the value of the customs duty. Understood? Clear and comfortable? So now let me extend this example. Let me extend this example a bit further. There is a person in India. There is a person in US. He dispatched the goods on, let me take the same example, same dates here, on 5th of January 2025. Entry inwards. Entry inwards. That means the ship has reached the airport, Indian airport, and they have got the permission to clear, to unload their goods at the port. So that date was, say for example, on 25th of January, they have reached. Now, immediately when the goods are unloaded at the port, this person did not submit the bill of entry for home consumption. So what he has done is, he has sent the goods, he has submitted bill of entry for warehousing. He has sent the goods for warehousing. So on same day, say for example, on 27th of January 2025, he submitted a bill of entry for warehouse. Okay. Now from the warehouse, he cleared the goods. So first goods will go to warehouse. Then he submitted bill of entry for home consumption on 1st of February 2025. See, in the previous example, what did I say? He has dispatched, the goods have reached, and immediately the importer has submitted the bill of entry for home consumption. But here what happened? The vessel has arrived. First he submitted bill of entry for warehousing. From the warehouse, he submitted the bill of entry for home consumption. Now I will tell you rates. Here the rate is, here the effective rate of customs was 10%. Here the effective rate of customs was 15%. When that's cleared for warehouse, the effective rate of customs was 20%. When ultimately from the warehouse, when they're cleared for home consumption, the effective rate of customs was 25%. Say for example, value of the goods which are imported is 10 lakhs. Value of the goods which is imported is 10 lakhs. So on this 10 lakh rupees, to calculate customs duty, what rate I have to multiply? What rate I have to multiply? They say whenever you are submitting the bill of entry for home consumption, not whenever you are submitting the bill of entry for warehousing. Whenever you are submitting the bill of entry for home consumption, at that point of time, the rate of customs was 25%. On this 10 lakh rupees, at the rate of 25%, you have to calculate your customs duty. Able to understand? Clear and comfortable? Let me tell you one more thing. This point I have already explained. Now I will tell you what is a relevant value, relevant date for determining value, I will say. Okay. So say for example, I am importing the goods. I am importing 1 CR worth of goods. How much? 1 crore worth of goods I have imported. So now the goods have reached, the vessel have reached. Now what I have done is, first I have transferred the goods to warehouse. First I have transferred the goods to warehouse. When the goods are lying in the warehouse, I sold these goods to another customer. I sold these goods to another customer. I did not clear for home consumption. Whenever the goods are still lying in the warehouse, I sold that goods to another customer for 2 CR. Now finally, say for example, Mr. A, originally he imported. He sold the goods. He submitted a bill of entry for warehousing. When the goods are lying in warehouse, he sold the goods to Mr. B for 2 crores. Now, when Mr. B has to clear for home consumption, finally he is submitting now Mr. B is submitting an bill of entry for the purpose of clearance for home consumption. Now, on what value he is required to pay the customs? On what value he will be required to pay the customs? Will he pay a customs duty on 1 CR, or will he pay customs duty on the value of 2 CR? So here also they have told that the relevant date for determining the value will be the date of clearance for home consumption. Whenever you are clearing the goods for home consumption, what is the value? Importing you have done for 1 CR. But when you are clearing the goods for home consumption, at that point of time, what is the value? Sale has already taken place for 2 CR. No. So here the value will be 2 CR. Now I will tell you rates also. Say for example, when the customer has dispatched, rate is 15%. When they are cleared for home consumption, 20%. When they are getting cleared for warehousing, 20%. When they are cleared for home consumption, it was 25%. What rate I have to multiply? On this 2 CR, whatever value which is prevalent as on the date of clearance for home consumption, at the rate of duty which is relevant when it is time for clearing for home consumption, that I will consider. So finally 2 CR at the rate of 25%, that value of customs duty will be required to pay. Able to understand? Clear and comfortable, everybody? So one simple thing we have to remember, what is the relevant date for rate and also value. So whenever you are submitting the bill of entry for home consumption, at that point of time, whatever rate is prevailing, that rate you can take, that value you can take. But here once again, the customs authorities have given a relaxation. Say for example, you are importing the goods by way of a vessel. Now generally what will happen is, the goods will reach the port, then you will submit the goods a entry for home consumption. But you all know that, but sometimes what will happen is, customs authorities will make a delay. These goods, this importer, he is having a urgency for these goods. He's having a very urgent requirement for these goods. Sometimes customs will get delayed. So what he has done is, the ship has not yet arrived. The ship or vessel or aircraft has not yet arrived. But what this person has done is, since the goods he's having a very urgent requirement for the goods, the ship is still in transit. So what he has done is, he submitted the bill of entry for home consumption on 25th of April. On 25th of April 2025 only, he submitted bill of entry for home consumption. But at that point of time, the entry inwards did not happen. The vessel did not get the approval from the customs port to unload their goods. It has not yet reached. But what he has done, he has submitted the bill of entry for home consumption even prior to entry inwards. Actually, ship arrived. Entry inwards has actually taken place on 30th of April. So even before entry inwards only, sometimes there will be provisions, the customs authorities will allow you to submit the bill of entry. So here what happened is, generally what will happen, first entry inwards will happen, then bill of entry for home consumption will be submitted. But there is also a case where you can submit the bill of entry for home consumption first, later entry inwards can happen. So in that case, which rate I have to take? Say for example, on 25th of April, effective rate is 15. But when entry inwards, when actually the vessel got the clearance for when vessel got the clearance for unloading their goods is on 30th of April. On that date, effective rate is 25%. Which rate I have to take? Generally, what I told previously, I told that effective rate will be the rate which is prevailing as on the whenever you are submitting the bill of entry for home consumption. But here it has started creating trouble for many people. So what the customs authorities ultimately told is, bill of entry for home consumption or entry inwards, whichever is later. This is what simple provision. I told you all the background logic, but ultimately what they have told us, if this is the case, so anyhow, even though he submitted the bill of entry for home consumption on 25th, ultimately he will take the goods into the India on 30th of April only, no? Ultimately, he will take the goods into India, with inside India, he will bring the goods only on 30th of April. Then what is the purpose of applying the customs duty of 15% here? So that's why what they have told is, let us make one rule. What they have told is, what is the effective date for the purpose of rate and value is whether the bill of entry for home consumption or entry inwards, whichever is later, on that date, whatever rate that is prevailing, whatever value that is prevailing, that we will take for the purpose of calculation of customs duty. That we will take it for the purpose of calculation of customs. Understood? This is what the final provision. So ignore all the background discussion. You remember one simple thing. So what is the effective date for the purpose of rate of duty, and that is tariff rate and value? So you have to take when the bill of entry for home consumption is filed or when entry inwards has taken place, whichever is later, that date will be considered. On that date, whatever rate is available, that we will take. On that date, whatever is the value, that we will consider for the purpose of calculation of customs duty. So this is what the final provision. So here it could be confusing. Here this is what the detailed explanation. I have explained the background, but one simple logic you can write alternatively here. So what is the summary from this? Either bill of entry for home consumption or date of entry inwards, whichever is later, that rate and duty will be considered. Okay, that is what the summary. See here, we have some examples also. If the bill of entry is presented on 10th of October and the aircraft arrived on 20th of October, so bill of entry is at 10th of October, but entry inwards happened on 20th of October. What is the relevant date for duty and value? The relevant date will be whatever duty that is prevailing on 20th of October, whatever value that is prevailing on 20th of October, that we will take, because whichever is later. So here, how students will get confused is exchange rate. When it comes to exchange rate, whatever rate that is prevailing on the bill of entry, whenever you are submitting bill of entry either for home consumption or warehousing, on that date, whatever exchange rate is there, that you have to take. But when it comes to what is the effective rate and what is the value, here you have to take what is the date of bill of entry for home consumption or what is the date of entry inwards, whichever is later. So here is where students will get confused. So you often try to apply wrong things. For exchange rate, there is some effective date. For determining what is the rate and value, there is some different date. So these two dates you have to remember. So how they will pose a question is, let me see whether any question is there. Generally, they don't ask this deep. Majority of question will come from majority of the times question will come from valuation only, and here and there simple things only they will ask from customs. So, but anyhow, I am telling you, even if at all they want to test advanced things, I'm just letting you know. Somewhere I have seen it. Just let me see whether I can show you. Here you have see it. Here you have see it. So just I will explain part of the question. Date of bill of entry. Date of bill of entry is 24th of October. On that date, basic customs duty is at 10%. Exchange rate notified by CBEC is 100. Whereas date of arrival of aircraft, that is entry inwards. Entry inwards is 20th of October. On that date, basic customs duty is at 15%. On that date, exchange rate is 97. So now I want to answer which rate you will consider. What will be the rate? What will be the percentage which you will consider? Which exchange rate you will use it for the purpose of calculation? First, exchange rate we will see. When it comes to exchange rate, whenever bill of entry is submitted, on that date, whatever exchange rate is prevailing, that exchange rate we will take. So here, first if I write the facts here, bill of entry has happened on 24th of October. On that date, customs duty is at 10%, exchange rate is 100. Whereas entry inwards happened on 20th of October. On that date, it is 15%, exchange rate is 97. First, exchange rate. Which exchange rate we have taken? When it comes to exchange rate, they did not say whichever is later, no such complications at all. When it comes to exchange rate, they have simply told whatever rate that is prevailing on the date of bill of entry. So exchange rate, this we will use. Exchange rate, what we will use? 100 rupees of exchange rate we will use. When it comes to duty, they have told for the purpose of effective duty, whichever is later, bill of entry or entry inwards, whichever is later. Which one is later? 24th of October is later. On this date, whatever rate is prevailing, whatever duty is prevailing, that duty we will take. So 10% we will use it. So exchange rate we will use 100 here. Since bill of entry is later, this 10% we are going to multiply. The same thing even you will be able to find it in the answer. So see here, 10% customs duty they have taken for the purpose of calculation, and exchange rate 100 rupees they have taken. Okay, so like this they might try to confuse you by giving exchange rates on different dates, by giving the duty rates on different dates. Let me see whether anything else is there, any other example is there. That's it, I guess. Yes, here we can do. Once again, similar kind of question is there. Date of bill of entry. So first I will write bill of entry is 25th of April. 25th of April they are saying, and on this date the basic customs duty is a 10%. On this date customs duty is a 10%, and what is the exchange rate? Exchange rate is 85. Very good. Next, entry inwards. What is entry inwards? 21st of April. On this date customs duty is at 20%, exchange rate is 90. Okay, first let us determine what is the exchange rate. See, exchange rate we will take whatever is prevailing on bill of entry. On the other hand, so which rate of duty we have to take? Bill of entry or entry inwards, whichever is later. Which one is later? 25th of April is later. So on this date whatever rate of duty is there, this we will use. So effective rate of duty will be 10%, exchange rate which we will use will be 85. Now just in case, let me change the facts here. If I change the facts here, if I say instead of this, entry inwards has taken place on 29th of April, what will be your answer? What exchange rate you will use? Exchange rate, no difference. We have nothing to do with entry inwards. Exchange rate we will always take whatever is prevailing on the date when bill of entry is submitted. So this will be the exchange rate which we will use. Now when it comes to rate of duty, bill of entry or entry inwards, whichever is later, 29th of April is later. So whatever duty that is prevailing on entry inwards, that 20% we will take. So here we will take 20%. So this is how you need to determine what is the effective date for duty and what is the effective date for the purpose of exchange rate. So that's all guys from the customs part. Apart from this, nothing else we have. Everything we have covered. This all things we have already covered. Exemptions, baggage and imported goods, you need not worry about it. This we will see at the CMA final level, now not relevant. Social welfare surcharge I have already covered in my introduction itself. In types of duties only we have covered. So IGST also we have seen, when IGST will be payable and all things we have covered. So this is what the entire customs discussion is about. In all that, what is going to be very important is types of duties is important to some extent, and final valuation is very important. That to import valuation, many a times they ask a question. Even we have solved so many number of questions, I think you would have got the comfort on this customs part. Okay, so that's all for now. Bye everyone, all the very best for your coming examination. Take care, see you.